only on NDTV Profit.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
What if your gut was affecting more than just your digestion, your mood, your sleep, even your immunity?
The gut-brain connection is no myth. It's a living reality.
This week on NDTV Lifeline, discover how your gut influences your mind, why bloating and stress are often connected, and the simple habits that can transform your health. Only on NDTV Profit.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Very good morning. You're watching India Market Open. We're bringing it to you from the NDTV Profit Suzlon studios, and it promises to be an exciting market because the mood seems to have switched, at least globally, on AI stocks, semiconductor stocks. It's so uncertain. There doesn't seem to be any real fundamental reason, apart from maybe the selling was overdone.
Yeah, maybe the buying was overdone, maybe the selling was overdone. I mean, SanDisk again bouncing back the way it has. I mean, I feel for the people who are short some of those stocks right at that fag end.
Samsung, HK Hynix, all of them up about 20%. The Kospi is zooming.
Yeah, understandably, 50% weightage, right?
Yeah.
For those two stocks.
Yeah, it's quite something really.
Yeah, so a reversal of mood there, but so much more happening, and which is going to be in focus because a bulk of Nifty companies have reported, and that's really setting the tone for what's happening in Indian markets. I'm just going to pull up the implied open before we get to the global setup this morning to give you a sense of what you can expect. We've had a strong day yesterday. Will you continue that? About 70 points up on the opening is what's being indicated right now. Meanwhile, as far as global markets are concerned, US markets have rebounded sharply as Microsoft continues to surge. I mean, there's conversation now about an AI split where Meta is languishing and Microsoft is up. Both are spending a lot of money on capex, but it seems to be working for one and not the other. 16% up on the Microsoft stock. Let's pull up the indices, and the rebound in the Nasdaq is really noteworthy because it's been a tough week otherwise for US markets. They're going to end the week strong in any case, but about 3% up on the Nasdaq. Let's pull up US futures as well and take a look at what's happening there. It's continuing the strength, nearly 3/4% up on the Nasdaq futures as well. Meanwhile, the result season is on. Q2 result season is on for US companies, and Amazon has gone up 9% in post-market trade because there was a second quarter revenue beat. For Apple, however, service revenue has missed expectations, although iPhone sales were better than expected. 6% down on that stock. Let's just pull up what's happening with Asia before we move ahead, and what Brent prices are looking like as well. Want to look at both of those Asian markets. The Kospi really reigning supreme there, 13% up. Shanghai about 1% up. So Asian markets looking good. The Nikkei also nearly 5% up. The Hang Seng is a little muted. I want to pull up Brent prices because that's the other important one. At 88, you have a bit of a cool off, but this is not a comfortable level for Indian markets in any case. Adrian Mowat, Emerging Markets Equity Strategist, joins us this morning. Adrian, very good morning to you. You know, I really have to start by asking you about the AI trade and the sharp swings that we have been seeing. What's the picture that's emerging for you?
I'm not sure if there's a clear picture that it is emerging. Maybe if we sort of look at trends just beyond the last 24 hours, the big theme of the year has been the providers of picks and shovels. So you saw massive moves in the semiconductor space. You're referring to SK and Samsung's moves at the beginning of this program. Remember, SK was at 3 million. It went down to about 1.4 million. It's now at 1.6 million won per share. So quite extraordinary volatility. The results that came out from Samsung and SK Hynix have actually been absolutely extraordinary. These stocks are quite cheap on forward earnings. But the question is, you know, how long do we see this sort of super cycle in demand for semis? And that brings us back to the hyperscaler stories. So Microsoft is rallying hard in the aftermarket. But remember, this stock was down almost 30% from its 52-week high. And so the market is sort of oscillating between concern about hyperscalers spending too much, the beneficiaries of that doing well, and then the feeling is, when will we start to see the hyperscalers maybe cutting back on their capex? If we are to sort of get a theme out of these results, it seems to be that the cloud computing businesses are very strong. at Microsoft Azure and at AWS at Amazon. So, I'm not sure if I've actually answered your question here, but I actually think the markets are very sort of sensible in terms of what they're reacting to, and that there isn't really a bubble here. There's extreme rotation between stocks. Share prices have generally gone up less than the earnings revisions. So where you might be able to use the phrase bubble is the amount of capex. But again, when you start to look at the numbers coming out of Anthropic, the demand, the subscription demand for Claude is very strong. So I think AI will be dominating the story for the next 12 to 24 months, but it's this incredibly volatile ride.
As satisfactory an answer, Adrian, that anyone's going to give at this moment, so thank you for that. But having said that, the point that you made on rotation is important from the perspective of Indian investors, because you've seen a trickle over the last few trading sessions where foreign institutions have started perhaps deploying once again. The question, though, is from the larger global standpoint, with bond yields heading where they have, how do you see capital flows into emerging markets and specifically into India?
So the move up in bond yields is generally something that's negative for equities, and it historically has been more negative for emerging market equities, particularly emerging markets that run current account deficits and require external funding. So I think it's important to be aware that we are seeing this squeeze higher in bond yields, which makes a lot of sense. Economic growth in the US is robust. Inflation is above the Fed fund target rate. The expectation for short rates has gone from a cut to an increase this year. So higher bond yields make a lot of sense, but they will be negatives for equities broadly and emerging markets generally, more severe impact than you'd see in developed market equities.
Adrian, I know this is Neeraj here. Good morning. And I know during your history, you've looked at India very, very closely after suffering through all the months of FI outflows in a meaningful way. July has been a net buyer in terms of FI data. Now, maybe anti-AI trade, maybe just that it was the FI ownership is so low that at some point of time it will reverse. My question is for the second half of the year, if indeed the earnings season in India holds out, and therefore if the earnings are upgraded a little bit for FY27, do you see a reversal in flows possible, or would the AI trade, which you not calling a bubble, as well as the geopolitics will keep FIs away from India?
So I think that the critical issue for FIIs is this earnings story. And the earnings for the broad markets are disappointing for an emerging market. And earnings revisions have generally been, lackluster to down. There's been some exceptions. The Bajaj's numbers have been good. Some of the energy names have had upgrades. But the problem at the macro level is India still trades on quite a high PE and currently isn't delivering the most important growth, which is earnings growth. Now, if something can change that results in positive earnings revisions, then that is clearly going to help the Indian equity markets. The problem at this point in time is it's really difficult to see the macro reasons why you would get a broad acceleration in economic growth and then an acceleration in earnings. I think for some of the major sectors, particularly the IT services companies, it's very difficult to get any clarity about what the impact of AI is on these names. At the short term, it looks like it's a negative. We had some very bad numbers out of IBM, where corporate spending has been switching towards AI and away from the traditional IT providers. So as I look at the market, it's difficult to see sectors where you're going to get positive earnings revisions at this point in time.
Adrian, how much of an impact can a BOJ decision have on the markets today?
I don't think it's it's significant. We've had a very weak yen. The fact that the yen has rallied 3% or so from extremely weak levels, I don't think is an important message for the global economy. It might just make your holiday in Japan slightly more expensive, but beyond that, I don't see any macro consequences.
What about a holiday in Seoul right now, Andrew? Or is that looking like a bit of a nightmare? Just wanted your view on what we've seen unfold with the Kospi, and not just what's happening with the index, but the way retail investors seem to have gotten caught in that bubble. You've had policymakers now come out and try and do some damage control, margin calls, unraveling all over the place. Is that a cautionary tale when we look at this AI trade? And I'm linking it back to my first question. You said it's not a bubble, it's a rotation. But are there chances of a lot of people who are not understanding what's happening with this AI trade getting caught in the middle?
So certainly people are getting caught. There are highly leveraged retail products are being sold against both Samsung and SK Hynix, as well as the broad Kospi indices. You have these double leveraged ETFs. And we certainly have a situation of the sort of derivative tail wagging the dog and increasing the volatility in share prices. There's a bigger picture in global equities. If you look at the world equity indices, so developed market equities, the top 10 companies in that are currently 26% of that benchmark. If we go back a couple of years, it was around 10%. So we are living in a world of equity concentration. You have odd numbers like the Taiwan free float market cap is greater than that of China at this point. It's a bigger part of the EM index. So we definitely have an environment of narrow, concentrated markets with a few stocks generating the performance. And I think this in a world of Robinhood and other sort of retail platforms is resulting in significant increase in volatility. These markets are very hard, whether you're a professional or an individual investor at this point in time.
It's well said. A brace for volatility going forward as well, perhaps. Thanks so much, Adrian, for taking the time, and a pleasure speaking with you. Well, let's talk about what happened in trade yesterday. And you had foreign institutional buying that has resulted in a late run for the benchmark indices. Not very significant, but the buying was actually pretty large, at least when you context it with what you've seen in the recent past. Buying of as much as 3,623.5 crore rupees on a net basis by foreign institutions, and domestic institutions net selling equity worth 1,864 crore rupees. The benchmark gained about 0.3%, ending 130 points off the day's low, and it actually traded in a pretty narrow range, 156 points all told. The Nifty Bank made a significant comeback from the day's low, but it ended just about 0.1% lower. It was an underperformer. The Nifty IT, an early outperformer, actually cooled off through the day on profit taking in all likelihood because that index has rallied in the recent past. The market breadth worsened through the session, and you had the broader markets that underperformed the benchmark. You had the mid caps that recovered from the day's low, but they ended up with losses of about 0.4%. The small cap index ended at the lowest point of the day, down about 0.7%. The one key outperformer was the auto pack as a whole. That was led by the two-wheelers. Hero MotoCorp and TVS Motor went home with gains of over 3%. On the other end, you had Realty, that was the pack that underperformed in a big way, down as much as 2.1% on evidence of profit taking, another index that has gained quite considerably.
Yeah, you bet. Now, last night I was thinking of what will be a part of the trade setup, and of course oil prices needed to be, because if they are steady at higher levels, that those cap upsides for India. But there are some changes, right? The FI buying the last couple of days, 3,600 odd crores yesterday, 3,000 crores yesterday. And that led me to just try and think of what's been the trend. And coincidentally, Motilal Oswal came out with a report today as well about the FIDI data, right? So I'm just kind of marrying that, because one is that the FI buying continues for 2 days on a trot, a positive, and therefore it will still be very, very stock specific action, if you will, just before I talk about the FI data in detail. And therefore you look at defense names and aluminum names for today for sure, because aluminum across the board world over has also done pretty well. So you probably see some activity in those names, and on defense as well, very, very individual names are giving some fairly large news flow. But the point about FI selling, right? Now look at the data. This is from the NSDL that I pulled out this morning, all right? So March, 1,17,000 odd crores selling. April, 60 odd thousand crores selling. This is reported NSDL data. May, 32,963 crores selling. June, 49,340 crores selling. July, FIs have turned net buyers. We've had a swing in terms of FI activity, and you can blame it on some specific block trades, etc., so on and so forth. I could do the same thing for March, April, May as well. July, FIs are net buyers. Then I looked at the Motilal Oswal note to try and figure out where is it in terms of sectors that both FIs and DIs have increased their ownership stakes YOY for the June quarter. So in that bucket, PSU banks, FI have upped their stake by 170 basis points, DIs have increased it by 150 basis points. NBFCs, 50 basis points, 150 basis points. So clear bend for financials. Capital goods, 50 basis points FI change of ownership, and DIs 120 basis points, and logistics 240 basis points and 20 basis points. Also, by the way, on a QOQ basis as well, the data which I have not given, financials stand out on the FI data. And then Motilal Oswal went out to also try and see what are the stocks in which FIs have raised their holdings, right? Or FIs plus DIs have raised their holding on a YOY basis. State Bank of India stands right up there. FIs 1.4 percentage points, DIs 1 percentage point. Shriram Finance, FI is about 2.1 percentage points, and DI is about 3.6 percentage points. Clearly, that's been a favorite. JSW Steel as well has seen a bit of a mild uptick, as has Tata Steel. So clearly, metals is where institutions are betting to, and then Bharti Airtel and NTPC, a couple of utility and telecom names, wherein both FIs and DIs have raised their holdings. This is as per a Motilal Oswal note. So clearly, some preference towards financials, in some extent towards capital goods as well. But the moot point being, July has been a great month for FI holding, and great in terms of what we've seen the preceding 18 months, if you will. And well, you got to celebrate small victories as well in times like these.
No, I think it's an important one, because the mood has shifted after a good 5 months of this year. So awesome data slice there, Neeraj. That was very interesting. And I think it's also being resonated by what Amit Shah is saying in his note in BOFA in terms of the sentiment, not on the FI point of view, and I'll come to that. But as far as factors are concerned, despite weak global cues, the Nifty has clearly displayed an upward bias. The index is trading now above the 20, 50 and 100-day EMA. Bias remains positive unless Nifty falls below 24,100. A decisive breakout above 24,400 opens the path towards 24,500 to 24,600. Resistance now at 24,340, 24,380, 24,440. Supports at 24,225, 24,185, 24,125. Crucial base support 24,100 to 24,150. For the Bank Nifty, resistance at 57,230, 57,340, 57,520. Supports at 56,870, 56,760, 56,585. Breakout trigger, a sustained close above 57,350 to 57,500 is required to trigger a rally towards 58,000 to 58,400. A breakout above 57,600 required for a fresh upside. Now, coming to the India strategy I was talking about from BOFA, Amit Shah says the tide is slowly turning. Investors would have to stay nimble and rotate sectors to generate higher relative returns around market volatility. Continue to expect Nifty to offer flat returns in INR terms and underperform most large emerging markets in CY26, this calendar year, in USD terms. Nifty year-end target is unchanged at 26,200. Now, what are they moving to overweight? NBFCs and mid-sized private banks. Better liquidity and resilient macro offers growth opportunity. Autos on electrification and strong growth margins. Cement on continued government capex spends. They're moving IT sector to neutral weight on investor positioning and fading AI rally. Moving to underweight, healthcare, now rich. PSU banks, ECL to impact growth. AI plays, that's transformers, gensets on Chinese competition and fading AI rally. Telecom on delayed tariff hikes. So they prefer financials, auto, quick commerce, regulated power utilities, select discretionary upstream energy, non-ferrous metals and cement. Cautious on public sector banks, insurance, healthcare, telecom industrials, staples, retailers and paints. But the conversation around fading AI trade, important from an Indian perspective as well, for a lot of companies that were running up as a support system to that AI trade. But let me go across to Sharad this morning for the F&O setup. What's the support system looking like for the F&O trade?
Well, the support system is really strong right now because of the FIs. Last 2 straight days, FIs have been buying almost 3,000 crore each, and you can see the Asian markets doing well on the chip rebound, and we're seeing a slight positive opening trigger. And yesterday also we saw good buying in the last 90 minutes of trade. For both Nifty and Nifty Bank, there was a good up move, and the key level, the technical levels of the 24,100 plus, that's where the action is coming in. Also, let's look at the FI numbers, how things are panning out, and look at that amount, 3,600. After a really long time, we are seeing that. And interestingly, yesterday also, the amount was almost 3,000 odd crore rupees. Nothing much changing when it comes to the shorts. Positioning, it's at around 90%. It's unchanged, but the PCR levels are stable as well. We can see a good buying here, but the congestion is happening at 24,200 as the markets are looking for new fresh levels, between that 24,300 to 24,600. Open interest gainers. Let's have a look at these stocks. Especially, I would like to point out Swiggy. Already there was a good technical setup happening, and now some fundamental news coming in, especially on Zepto's IPO delay, and that might favor Swiggy as well as Eternal. And the large cap IT companies, do remember there might be some kind of a reversal, a little bit of profit booking, as the global software stocks, they have fallen in trade, not the AI trade. But the auto names, M&M, TVS Motor, overall the setup looks pretty strong. So definitely we'll look at a little bit of technical reversal in the IT or maybe in FMCG as well on profit booking.
Okay, let's start with numbers this time. Looking at Swiggy, EBITDA loss and net loss was higher than estimated. They've achieved a contribution margin break even in quick commerce. Food delivery was slightly impacted by LPG concerns. Focus now is on quality growth. So first on my watch list is Swiggy. So revenue did grow about 37% at 6,812 crores. The estimate was a little lower, so it's a beat on estimates. Losses have narrowed to 650 crores versus loss of 954 crores. But the expected estimate of loss was 504 crores. Net loss at 791 crores. That's also a little higher than the estimates. In terms of segments, food delivery gross order value grew 17%. Instamart gross order value grew about 40%. Platform average monthly transacting users, that's MTU, grew 27%. Out-of-home consumption gross order value grew 44%. Key highlights from the shareholder letter: they have reiterated a guidance of 5% adjusted EBITDA on gross order value over medium term, and they expect to hit overall adjusted EBITDA break-even on a scale of 60,000 crores of run rate. Annualized net order value, that is the metric they're using. Overall EBITDA break-even with 5 to 6%. Now, how are brokerages looking at it? Bernstein has maintained and outperformed with a target price of 430, saying quick commerce sees favorable setup for a re-rating. However, the stars seem to be aligning for Swiggy now. Q1 result was strong. Next few quarters should be stronger. News about Zepto's IPO postponement is one to look at for this quarter. It could likely improve the competitive environment. Macquarie has given an underperform, target price of 230. So very stark views on both sides. They're saying there's a slower growth and a higher cash burn. Swiggy has outlined a path to adjusted EBITDA break-even in Instamart. Both timeline and trajectory are opaque. Also, in the context of the just appointed CEO for Instamart and significant management change, we consider this aspirational and not a base case. So, mixed view from brokerages on Swiggy. We're giving it a thumbs down. Stock may perform positively today because the Zepto IPO is on pause, and that may be seen as a sentimental positive today. Let me talk about Niva Bupa. Good set of numbers. Net profit was up 93% at 138 crores. Insurance revenue was up about 28%. And at a figure of 2,274 crores. They will also be raising about 500 crores in funds via NCDs. Morgan Stanley has maintained an equal weight target price of 91 rupees. They're saying this was another good quarter. Loss ratio improved on non-renewal of large contracts in group business that had unfavorable economics. Company continues to deliver well on profitability and top-line growth, but they see limited upside. Now, Mazagon, we're giving it a thumbs up, but the internals might see a bit of a mixed view. Net profit is up 21.5%, revenue was up 12%, EBITDA was up 48%, and margins have improved 11.5 to 15.2. The quarter was largely in line. The margin improvement was above expectations. Q on Q, revenue has declined despite 12% year-on-year growth. The PAT estimates have been beaten by about 5% because of lower provisions, and the order book has fallen quarter on quarter by about 11%. The book to bill has also remained weak at 1.5 times, lowest in 6 years. Order pipeline is now at 2.5 lakh crores. That's about 10 times the order book, and it gives revenue visibility till 2040. The P75I submarine order worth 75,000 crores is the key catalyst, but its execution will only start from the second half of FY28. If there is any delay, that could really impact FY29. Kotak has maintained a sell rating on this. So look at all of those internals first, but overall, all things considered, we're giving Mazga a thumbs up this morning.
I'd be curious to find out what Swiggy's reaction is going to be, particularly in light of the comparison now that will definitely be drawn with Eternal and the way that it performs. Right?
Yeah.
And Zepto being on hold.
And Zepto being on hold. Yeah, it's a big story.
I think Zepto being on hold is a shot in the arm for them for now, but it's also a reality check because a few weeks ago we reported that PhonePe has gone on hold and now on Zepto. Meanwhile, there is a robust IPO pipeline coming. It's not as it isn't, but I think it's a good thing that mutual funds seem to be the trigger, and they're saying that, hey, wait a minute.
We don't like your pricing.
Yeah, we need to come in and start being a little stricter in our filters on your pricing.
No,
I think it's good.
I think that's already evident in the listing gains that you're seeing, right? So money being left on the table for investors who don't get the IPO. You're seeing a lot more listing gains than you did last year.
Yeah.
And just the last piece being that all of this has happened at a point of time when Eternal has found its mojo back on the bourse.
Yes.
Right? So it's not that all paper is being shunned.
Yeah.
Very, very specific maybe.
Yeah, absolutely. Let us know what you think about that. In the meanwhile, let me tell you about the stocks on my list. Torrent Pharma, very good set of numbers. Q1 FY27, it's a beat on profitability. The growth is led by consolidation of JB Pharma and 17% growth in the base business. The India business has outperformed the India pharmaceutical market with 19% growth. The India business is led by strong traction in chronic therapies. Remember, this is something that is a strong point for Torrent Pharma. Curatio and semaglutide are the ones that have done well for them. EBITDA margin uptick has been led by synergies from JB integration, and the favorable business mix and operating leverage have also aided that margin. I'll come to what the numbers look like in just a bit. But the PAT growth is muted on account of higher depreciation, financial costs and exceptional charges. The net profit only gained about 3.3%. You had revenue uptick though, that was as much as 55%. EBITDA rose as much as 61%. The margins came in at 33.8%, and that is an improvement versus 32.5% in the comparable quarter a year ago. There was a one-time loss of 21 crore rupees that was booked by the company. I've picked just one brokerage. You have Macquarie on Torrent Pharma, which has maintained an outperform with a target price of 5,000. Not too much upside from this point. The stock is not cheaply priced. Q1 is a beat on profitability. It says a robust growth across key businesses. JB Pharma synergy benefits are driving margin expansion, and that integration and synergy realization progressing ahead of plan is certainly a positive. The semaglutide outlook for Torrent Pharma remains encouraging. Now, from a very good set of numbers to a pretty bad set of numbers, Thermax, it stood out. It's been weak in the recent past on account of, by that I mean the last couple of quarters, on account of a weak margin performance, but this has taken it to a whole different level. There was a 91 crore project cost overrun in the industrial infra business, and that has impacted profits. Remember, this is where they have been getting a bulk of orders, and the share of industrial has actually gone up quite considerably as well. The sharp margin shrinkage seen sequentially and on year. So those are the two things that you should bear in mind. The net profit is down as much as 83%. The revenue has seen an uptick of about 7%, but the EBITDA is down 69.5% because the margins have come in at 3% compared with 10.4% a year ago. There's a couple of updates with regard to the management of the business. The board has approved the demerger of Bioenergy Solutions unit, and its arm Thermax Cooling Solutions is set to merge with the company. There are also a few other updates with regard to data center orders and what the contribution there is going to be. Apparently that's going to be a significant positive for them going forward, but ultimately I think the market is going to focus on the fact that the margins have shrunk as dramatically as they have, and the trajectory I think is going to be watched very closely. We will be speaking to the management, Ashish Bhandari, Managing Director and Chief Executive Officer of Thermax. He's been frank and forthright in the past. I wonder what he'll say today. Stay tuned for that. Satin Credit Care. It's a decent set of numbers, and another lender in this space that is reporting better asset quality, lower credit cost, and as a result of which all of their return metrics are looking better. So the credit cost has dropped about 177 basis points. Disbursements have grown as much as 46%. You probably knew this already on account of the corporate update in the quarter. But the adjusted revenue has grown as much as 21%. The adjusted NIM, or the net interest margin, has risen 120 basis points to 14.36%. The return on assets has risen 200 basis points year on year. Remember, same time last year was when they were going through a little bit of trouble on asset quality, so that had a bearing because credit costs spiked. Promoters are set to infuse 100 crore rupees of share capital via convertible warrants as well. So it's a good set of numbers there.
Good set of numbers for Aarti as well. In fact, all three on my list could actually do well this morning. So Aarti Industries revenues were up 42%. Margins moved from 12.7 to 16%, as a result of which the net profit, a whopping 155 crores versus 43 crores. Very, very strong show. Now, two or three things here. You could argue this is a solid recovery quarter for Aarti. They had a reasonable quarter four, so it kind of continues on that sense. There is margin expansion, operating leverage, etc. To my mind, it confirms that the worst of the raw material pressures and the demand headwinds are probably behind. But I think what will be key to monitor is that they have delayed some of their capex plans, and it'll be interesting to see if that how does the street react to that. But overall, good set of numbers. The management will talk to us at 9:40. You want to tune in for this conversation. It could be an interesting one. Astra Microwave, oh my God, could well turn out to be the stock of this morning. Has received Uttam radar related orders from Hindustan Aeronautics Limited worth 2,250 crores. That single order is over 2 times its current top line. That's the extent of the order win for Astra Microwave, and now the order book is about 4,500 crores, which is 4 times FY26 revenue. If you are looking for order book visibility, Astra Microwave just put its hand up and waved it very, very strongly. So keep an eye out for Astra today. Could well turn out to be the stock of the day. IIFL Finance is the other interesting one. We know that there was a block done yesterday and the stock reacted a bit. Now we know who's sold out. So FIH Mauritius, which is, I think, if I'm not wrong, it's Prem Vatsa, but I may be wrong here. But the point is who is bought in. Small Cap World Fund, Capital, buying 6.17 million shares. This is quite something. Also considering the fact that Capital had been a seller in IIFL Finance at 450 some months ago, or some quarters ago, and now they've come back and bought 6.17 million shares at 590. So could well be a shot in the arm for IIFL Finance. Remember, it's an interesting one because it trades at about 1.5 times FY27 price to book, FY28 even cheaper, 9 times FY27 earnings. Management is guiding for 25% AUM growth with improving profitability. So is this name the shot in the arm that IIFL Finance wanted? Well, maybe.
And it also gained because of that block earlier in the week.
Yeah, right? This has to be the reason.
So this is not a listed company, but because so many people are interested in what's happening with NSE, and we reported yesterday that you could see the IPO actually getting cleared fairly soon. The fact that there is a settlement which is around 1400 crores, 1491 crores, lesser than what was expected earlier, is a positive. The numbers have also been decent. Good on margins, a little mixed on some of the other metrics. So EBITDA was down about 2.2%, revenue was down, but profits were up 8.7%. The reason I bring it up is keep an eye out for BSE today as a read-through from NSE. And of course, this is a space that everyone's watching very closely. We'll take a quick break. We're coming right back with all the top ideas for you today. Stay tuned.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
What if your gut was affecting more than just your digestion, your mood, your sleep, even your immunity?
The gut-brain connection is no myth. It's a living reality.
This week on NDTV Lifeline, discover how your gut influences your mind, why bloating and stress are often connected, and the simple habits that can transform your health. Only on NDTV Profit.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the
All right, welcome back. You're watching India Market Open. Let's quickly pull up the implied. You'll see a spot of green on your screen, 65 points up. Parag Thakkar in the studios this morning. He's head fund manager, Fort Capital. Amit Goel, partner and co-founder, Blue Oak Wealth, joining us to talk about technicals. Welcome to both of you. Parag, let's start with a bit of the results that we have been seeing over the last few days, and more than half of Nifty has also now reported. Is it safe to say that this quarter is turning out to be better than expected?
Yeah, and stock specific, I would say man is separated from boys very clearly in this results. If you see two-wheelers, TVS, Bajaj, Pharma, Torrent, Mankind, Ajanta, you can name the sector and I can tell you the winner. Cement, Ultratech clearly.
QSR?
So QSR, I think this guy did well.
Jubilant.
One of the companies did well. Jubilant was okay.
Sapphire Foods.
Sapphire Foods did very well, yes. So I would say that across the sectors you are seeing this, that the clear winners are different. And So that those are the names you would like to own. You know, like for example, Torrent Pharma reported fabulous numbers. Mankind reported fabulous numbers.
But Torrent Pharma is costly as well, right?
Yeah, no, I'm not saying that all these are necessarily buys at the current prices. But I'm saying that, that this is a stock I want to buy in this sector. Whenever market corrects, whenever there is some opportunity, I would like to buy this stock. That is very clear in these results. Financial sample, Bajaj Finance, even after, it is also very expensive. But superb numbers, superb commentary, right? ICICI Bank to start with, my favorite. So I would say that, across the sectors you have got
What
those
did you make of the Bajaj Finance commentary?
A very good commentary. And that is what I have been saying also, right? That there is no problem of asset quality on the ground. In spite of whatever we have seen in geopolitical crisis and tariff tantrums and all that, nobody is complaining about asset quality. The only problem is margins. Because you have these banks which are lending to for mortgage and high rated corporates at a very low rate, and cost of deposits are going up. So within the financials, the only monitorable has become margins. Whoever can sustain or grow margins can do better.
And in the top 5 banks, there was only one which stood out, which is ICICI. The others had a contraction. By the way, Bajaj Finance has an upgrade from Motilal Oswal today. They have upgraded it to a buy with a 23% upside as well, because they are saying that the new earnings cycle has begun. Since we're on the topic of NBFCs, just want to squeeze in before we go to Amit as well. IIFL Finance, much smaller, but capital checking in and available at 1.4, 1.5.
Very reasonable valuations.
And
stock has moved up because there was a gold loan embargo, and from that level, the stock has moved up by 50%.
So is it worth?
Definitely. Yes.
It is. Yes. Okay. Amit, by the way, there is also a Morgan Stanley note on Bajaj Finance, which is overweight, and they have hiked the target to 1225 from 1175, because they are saying the guidance will be revisited on the quarter 2 results call, and the target price is driven by loan growth and net interest margin. So keep an eye out for that. Amit Goel, good morning. And with the decks that they have been set for the last 4 days and the FI buying that has come in as well, what do the charts or the derivative positions tell you about what the markets could do today, the last day of the week, or for the short term?
Hi, good morning, Neeraj and team, and thanks for having me. Good to be here. So we've been bullish on the market at lower levels. We've been advising our clients to buy at the support level of Nifty, which has stood the test of time in the recent past, which is at around 23,800, 23,622. And from there, the market has been reversing for the last 1 week. So last Friday's low has been defended and has, we have seen a very sharp rally in the last 1 week from last Friday. Right now, we are looking at a near-term resistance which has been persistent, which is around 24,600, 24,400. So until and unless we convincingly cross that level, I do not think that we are going to witness a breakaway rally, at least in the headline index, which is Nifty. So some bit of profit booking at higher levels could be par for the course for the coming week or so.
Amit, morning. What about individual counters that you're liking this morning?
Yeah, from a pure trading or a momentum perspective, I'm liking Exide Industries, the Vernova, and Amara Raja Battery. Speaking of Exide Industries, it has been in a very nice singular momentum on the uptrend from around the 300 levels, from where it has now reached 450 in the last 3 months. Even now, it continues to show that momentum with yesterday's very strong volumes on account of strong numbers and everything. So I'm looking at piling onto this or continuing the momentum. And if it dips on account of some bit of profit booking during the intraday today, one could look to pick up at in the range of 450, 440 levels, keeping a stop at around 420 for eventual targets of about 525, 530.
Exide, in fact, positive brokerage notes this morning as well, was on our watch list yesterday. Strong set of numbers. More upside though?
Yeah, so stock has already done very well. It is at 52-week high only.
Which is why my question, though the results were strong.
Yeah, but numbers were very strong, I would say, very strong, and without any inventory gains or something. See, in this quarter's results, one of the things which I observed in result of Atul, in the result of Asian Paints, that a lot of them are reporting, and maybe Aarti Industries also, that a lot of inventory gains are coming. So now this is a new thing that in every result you'll have to study that what is the inventory gain.
Why is
In
that?
Excel-
Can you explain that? Why is that?
Yeah, for example, Asian Paints said on the call, right, that some part of the profits surge, the profit surge was fantastic in Asian Paints, right, about 30% growth. That was due to the low priced inventory and they increased the price of the finished goods, right? So margins expanded to 20.9%, right, while actually their target was 18 to 20. So some of those margins will not come in Q2. And that is why Asian Paint stock did not react to a fantastic performance. Right, so that is a new thing which has come, that in Atul also it happened, but Atul doesn't do a call. So Atul stock survived and it went up. There was a inventory gain. In Aarti also there might be inventory gain. I have not checked it, but I think on the call company should say that.
But this will be true for so many companies.
Yeah.
Na? And so quite a bit of that could unwind in the second quarter.
That's what he's saying. That's watch out for second quarter.
It's a thing to monitor. So in Exide I checked it after the results. There is no such inventory gain.
And this is because of fluctuating input prices, which they have then as a result managed to bump up finished good prices, but inventory gains have come in. Here's what Citi is saying on Exide. Maintain a buy with a target price of 410 rupees, which is lower than the current market price. They're saying the Q1 results are significantly above estimates. They see healthy revenue growth across segments, price hikes and better mix helped offset the impact of higher commodity costs on gross margin. Healthy operating leverage further helped EBITDA margin. So, that's the story on Exide. But let me quickly go across to Sumit Sarkar, who's joining in with all the chatter on D Street this morning. What are dealing rooms saying, Sumit?
The stock-specific action continues now. Firstly, it's Indus Towers that dealing rooms have highlighted. Now, there are buy flows on the institutional desk and this counter, and dealers are expecting some positive corporate development here. So, keep an eye out for Indus Towers in trade. For CG Power and TD Power, there are sell flows on the FI desk is what I'm picking up from dealing rooms, and they are saying that long-only funds have been selling both these counters in trade. So, keep an eye out for CG Power and TD Power. And lastly, given the fact that it's earnings season, Page Industries and Britannia, there are sell flows on the large HNI and PMS desk. Dealers are expecting weak Q1 numbers from both the counters. And a couple of other stocks that we did indicate earlier, PN Gadgil was part of a segment on 27th of July where we did say that the company will come out with its QIP very soon, and they have launched their QIP yesterday night. Around 700 crore is what they are looking to raise here. And when it comes to IFL Finance, it was part of our segment yesterday where we did say that the block deal was largely a change of hands among FI investors. Capital Group has come in as per the bulk deal data, and dealers have also highlighted that a large prominent HNI who has recently started his mutual fund was also one of the buyers, but his name has not come in the bulk and the block deal data.
All right. Very interesting that Page Industries Britannia expected to post not so good Q1 numbers. Certainly something to watch out for. And sell flows, as Somit has pointed out, on HNI and PMS desks. Let me go across to my colleague Varsha now. She's joining in to tell you about what brokerages are saying about Mahindra and Mahindra. And you'll hear from the management in just a bit as well. Anisha speaking with NDTV Profit. But Varsha, mixed quarter that has gone by. What are brokerages saying?
So I'll be talking about three brokerages. One first is, let me start with Macquarie. Let's see what Macquarie is saying. So they've maintained outperform on M&M. According to them, Q1 was in line. Near-term macro headwinds persist. They have a constructive growth outlook, and they believe that M&M is in a sweet spot with multiple, SUV launches over the next 12 to 14 months and resilient tractor demand. MS has maintained overweight, but according to them, Q1 was a tad weaker than expected. Gradual earnings recovery is expected in H2. Farm margins, could face further headwinds in H2 according to them, and auto margin should get better quarter on quarter, but company did not quantify the benefit though. 2027 will be exciting when it comes to M&M. Incremental growth could be more from ICE. Lastly, Jeffries, they've maintained by according to them, June quarter was modest, and auto business is delivering good volumes, and new SUV launches will start in calendar year 27. Tractor face risk of downturn in H2 FY27. According to them, valuations are reasonable. Lastly, Kotak has maintained by the high target price also. According to them, Q1 was marginal miss. Weaker profitability was seen in automotive division due to commodity headwinds, and hence they've cut FY27 to 29 standalone EPS estimates by 1 to 2%.
Okay, just a quick view, Parag bhai, on Mahindra & Mahindra and maybe Hyundai as well, if you want to talk about.
Yeah, so for M&M, I think results are okay. There's no problem. And I think the big fear that tractor sales will decline big time in this year, it has also receded a bit because Q1 at least the tractor is holding up. So I would, and of course they are phenomenal in terms of new launches in SUVs and that side of the business, so we don't need to worry about. So I would say that it remains a buy in my view.
Okay.
And Hyundai, there was a fire in their plant. And I think going ahead, their commentary improves. They are saying 8 to 10% volume growth.
New launches, right?
Yeah. And
Yeah,
new launches
quite a
also.
few.
And 11 to 14% margin range. So I think if there is any big drop in Hyundai, it will be a good buying opportunity.
Okay, while we're speaking about Hyundai, why don't we go across to Varsha to find out what brokerages are saying about the company. Varsha?
Well, let me start with Citi, which has maintained buy with target price of around 2,350. Now, according to them, Q1 results were above estimates, healthy gross margin drives beat and positively surprised by quarter-on-quarter gross margin expansion. However, they're more cautious when it comes to volumes. While Kotak Securities have maintained reduced, though they have hiked target price. According to them, quarter was in line, and they expect company's market share trend to gradually improve post launches, and they expect company to gain gradually market share owing to new launches across powertrain from H2. Expect profits to improve from here on with operating leverage benefits and normalization in the raw material basket. Lastly, Macquarie has maintained outperform. Good Q1 according to them. New model launch and export momentum was seen, and the management reiterates solid FY27 outlook. They remain well positioned on growth with new model launches according to Macquarie. So these are three brokerages when it comes to Hyundai.
Got it. Okay, thanks Varsha for those updates. Amit, I want to come to you on the auto pack as a whole. It stood out as a gainer and a winner in trade yesterday. The question is, does that momentum continue, and where specifically would you be buying right now?
I mean, most of the stocks have seen a very smart and sharp rally in the last few trading sessions. Trying to join the rally over here is fraught with a little bit of risk because there could be some bit of profit booking, which is par for the course. But if I have to really pick a stock from the auto space, it would be Maruti. It has not performed as much as the others have. So from a relative standpoint, Maruti could be the pick of the lot, and we could see some bit of a very smart rally towards 15,000, 15,500 in this counter.
The other space that is looking interesting is metals, and you have a view there, Parag bhai, on especially the Alco side of things.
Yeah. So if you see, for example, Hindalco is just trading at 10 PE. 10 PE and 5.5 times FY28 EV EBITDA. And there are so many things happening in Hindalco from here till FY30. New coal mine starting, which will reduce their cost of production of aluminium by $200 per ton, which will they are already making around $1,500 to $1,600 per ton in at $3,000. Now that gets increased by $200 per ton, and it is totally 13 lakh tons today, which is going to 17 lakh tons. The second thing is they are investing in downstream businesses, right, which will be used in EVs, lightweighting of cars and metro and all that, in aluminium and copper business. That EBITDA was below 2,000 crore last year. It is going to 9,000 crore in FY30, and that deserves higher multiple because it is non-LME linked, non-cyclical EBITDA. On Novelis side, if you have seen yesterday, Ford has upgraded its guidance, saying that now we are getting deliveries of auto sheets from their Oswego plant of Novelis. So Oswego plant has started. So I would expect this quarter of Hindalco India business to be fantastic because aluminium prices were very high. Of course, they must have had 30% at $3,000, but they must have got the realization of around $3,500 for 70% of this. So India business is very good. Novelis this quarter will be muted, but guidance for coming H2 will be fantastic because Oswego plant has started now. And gradually, their higher price contracts with beverage can customers will come into play. So gradually Novelis EBITDA is only going to increase. And the new capacity is also coming up in Novelis, Bay Minette, right? So I would say that they have invested big time, and now the fruits are going to come gradually from here till FY30. If you see last year, consolidated EBITDA was 38,000 crore. In my calculation, it is going to 60,000 crores in FY30. And net debt, which is around 65,000 crores, will start reducing after they make that cash flow.
So it's a long term.
In my view, the stock can be 2.5 times in 4 years.
Okay, interesting.
And plus, the starting valuations are very attractive. The other point is that yesterday evening, for example, Alcoa, Constellium and Kaiser, all Hindalco peers were up 4 to 5%.
That's true. That's true. That's true. Actually, and therefore, Amit, to you, I mean, are these aluminum plays, even Vedanta Aluminum, Hindalco, Nalco, etc., are they looking good from a trade perspective, short term, very short term?
I will tend to agree with Parag sir, and Hindalco, Nalco, Hindustan Zinc, BDL, all of them are looking prime for a very sharp rally. They have been consolidating after that steep fall in metals, which we saw in the month of June and fag end of June and early part of July. So the entire month of July, these stocks, Hindalco, Nalco, Hindustan Zinc, even VDL, have been consolidating. And now they are trying to move at the upper end of that consolidation range. So we are primed for a breakout in these counters. And the global, tailwinds, the global news flow, which is positive for the aluminum counters, should augur well. In Hindalco also, I like this setup, and one could keep a stop loss at around 930 levels for targets of at least 1,000, 1,050 in the short term.
Okay, so there is a fundamental and a technical match as far as aluminum companies go in Hindalco in particular. Interesting. The other small one and big news though is on Astra Micro. We spoke about it in the morning on our 9 stocks that we point out cumulatively. Parag bhai, did you look at this announcement? 2,250 crore order for a company whose top line is 1,000 crores, right?
Yeah.
What did you make of it, and can this spur the stock?
Yeah. So it will spur the stock for sure today. And order is also from a very credible entity, HAL.
Yeah.
That is very important for me. So at least they'll get the payment on time. But I would say that, because in defense, for example, you must have seen results of Data Pattern. You must have seen results of Zen Technology.
Yeah.
The problem is that this sector is very lumpy.
Yeah.
So every quarter you will not get that compounding thing. You will have to wait it out. So AstraZeneca also on trailing PE basis Astra Micro, looks expensive. It is 90 times, something like that. But I think this order proves their credibility. So I would not say that this is a stock you can just dismiss because of the trailing PE, because order is from a credible entity, order is very large. So I think at least they are technically very capable company, that's for sure.
So Data Patterns this time, you're right, Parag bhai, a bit of a slide in margins, profits were down. Mazagon was looking good this time. So you would say that they are having a good quarter right now.
So I'm saying that in defense it will be every quarter. First of all, this is a business you cannot evaluate on quarterly basis.
Yeah.
You have to have a long-term view, and that long-term view is that in defense spend globally will continue to rise. Now, which company has good technical capabilities to do that? You have to identify them and buy at right valuations.
So, what is your topic in defense?
So, up till now, it is.
I knew it.
This answer is becoming very monotonous. It is BEL. In fact, BEL also disappointed this time in terms of results. If you ask me on margins, and that's why stock has corrected to 385. But that is only one stock which I would, of course, Astra Micro is worth looking at after this big order, but BEL is the only stock which I would say. Because what we as a public managers, we have to show performance every quarter. If some company is going to deliver after 2 years or 3 years, practically speaking, that is a problem for us.
Yeah.
Although we like the company.
No, so I think there is some virtue in the fact that you have your set of ideas and you stick to your guns. And then, of course, if things change, then you change your view as well. Some views have changed or some decisions have changed when it comes to Zepto.
Yeah.
The IPO is on pause, we learn. Take a look at this report.
That's right. It's a big development coming in from the startup space, new age IPO space. Zepto is putting on pause its large IPO, and sources with direct knowledge share with NDTV Profit that they could be really reworking their financials. The last financials filed for the IPO process, the deadline for that really expires. In the meantime, they haven't been able to capitalize on attracting the large mutual funds at the valuation that they really pitched. So this is the key reason that is really coming out for this particular IPO to be on pause, is what we gather. Now, what is the next step that, at least at the moment, is the plan at Zepto and the IPO process? The plan at the moment is that Zepto definitely requires funding, and 1,000 odd crores from their existing investors in the meantime is something that Zepto is going to attempt to really raise. While also we gather from sources with direct knowledge that they could be looking at refiling the financials, the fresh numbers, and then coming back to the market. What we did gather, and we have been tracking for quite some time, is that the valuation at which Zepto really wanted to come with an IPO, some of the large mutual funds who really call the shots for any IPO to go through, and they are the ones who are really the deciding factor when it comes to the valuation for any IPO. For them, those valuations were not acceptable, at least at the current moment. So the company is really looking at pausing this process at the current moment, getting more time in order to really attract the large mutual funds to come and fill the book. So that is where this particular IPO really lies. Of course, valuations have been a big concern. Quick commerce is an intense and a very competitive space, and there two of the listed companies already exist. So therefore, for Zepto, it is critical to also raise funds at this particular point. But its IPO hangs in the balance, and we need to see whether or not they will really meet their expectation of being able to be IPO ready with the valuations they desire for really hitting the market in a few months. At the moment, we can only say that it's a pause. Zepto did not offer any comment on these developments to NDTV Profit.
Okay, so that's the update with Zepto, which the imminent listing of which was putting some pressure, you can argue, on the likes of Swiggy. But what are the implications now that that has been pushed? Let's bring in Mahima to find out whether this is a shot in the arm for Eternal and Swiggy, or whether today at least, Mahima, the focus is going to be on Swiggy's earnings, which are nothing to write home about.
Very difficult to take that call, but most certainly positive sentiment is what we'll see on Eternal and Swiggy, because in the listed space for quick commerce we only have these two players, right? And overall investors who are wanting exposure in the quick commerce space might go ahead and buy these stocks, and that is why a positive sentiment could reflect in Eternal as well as Swiggy. In terms of the valuation reset that we've been talking about, right, because the IPO has been delayed because institutional investors are not accepting the targeted value that Zepto was kind of aiming at. This implies that investors are now becoming more disciplined on pricing high growth, especially in loss-making business, and this could also temper valuation expectations for listed quick commerce players. So that is something that we'll be watching out for, whether that happens for the quick commerce arm of both Eternal as well as Swiggy. The competitive intensity of course remains unchanged because the Zepto expansion plans are not going to stop. Blinkit and Instamart are also unlikely to see any competition relief on the back of this, but I think there's going to be more scrutiny in terms of where profitability goes because of this, because Eternal has consistently highlighted Blinkit's improving contribution margin and path to profitability, so slightly more positive for Eternal. And Swiggy has also been focused on narrowing quick commerce losses, but because Zepto is forced to stay private longer, markets may reward listed players and will prefer execution than growth overall. In terms of lastly, price discovery, the Zepto IPO would provide a fresh benchmark, was going to provide a fresh benchmark, but that's not going to happen now. So it'll be interesting to watch out for as to how this pans out.
Okay, thank you for that, Mahima. Let's take a look at what Swiggy is doing this morning. The first 2 minutes of the pre-open session have begun. Markets overall are doing okay, 0.35% up on the Nifty. All of this will move around. Swiggy is mildly in the red. Markets are fine. 24,400 is what I'm seeing. I want to look at Eternal. Let's look at Eternal since we're talking about this story. And let's look at some of the movers this morning. I want to pull up Aarti Industries on our watch list. Good set of numbers. AWL Agribusiness, also decent set of numbers. That's also showing some action today. So is Niva Bupa. Niva Bupa also another strong quarter one. And that stock is about 4% up in the pre-open session, first 3 minutes in. Let's look at Torrent Pharma, Nuvama. All of these are companies that have reported numbers and have been seeing a positive reaction. Likewise for Thermax. We talked about Thermax. We'll be speaking to the management as well. Not the most exciting quarter in terms of what they have reported in quarter one, 8% down. Data patterns we spoke about a short while ago, with the understanding that this is a space which will not be as positive quarter on quarter. Lumpy business, 5.5% down right now. I want to look at Hexaware Tech, another company that has reported. We told you on Heard on the Street, our segment where we get you the dealing room chatter, that Britannia is expected to be maybe a soft quarter. You're seeing that stock reacting earlier this morning as well. I just want to come to you, Parag, on the story we did on Zepto pressing pause. We spoke about it earlier in the morning. PhonePe had done this as well. But it's not as if the mood for primary paper is not there, because there's a whole slew of companies that are also coming.
Correct.
Is this more of large investors being more discerning?
Absolutely, absolutely. See, after what happened with the Swiggy QIP, which was priced at 394, and when we were on the show above 1 lakh crore market cap for a 700 crore quarterly loss company, I think this, and I would congratulate my mutual fund colleagues that they have started asking tough questions. And they want to see profits now, and that is that should be done, right? I'm not saying that if you're loss making you should not be listed, but the point is that the valuation which you should command if you are loss making and just about to turn profitable should be much lesser than what the companies were asking for. So this is a very good trend. I would strongly congratulate all my mutual fund colleagues who have started asking this kind of question. Yeah.
You know, all of your mutual fund colleagues who have asked this question are constantly now being questioned, because we have this social media space on a lot of decisions that are being made, not just in the primary market, but also other investments that are being made. Do you think, as someone who understands this space, that makes it tougher, or is it better that there is this kind of scrutiny?
No, I think scrutiny should be there, right? So, for example, if there is a company which makes a loss of say 200, 300 crore, business is visible to us, we are consuming it. If the market cap is 15,000, 20,000 crore, it's okay. You know, it will grow to a scale, and then it will start showing profits. Ether was very good example, right? Ether and Lenskart are the two technology startup companies which I have also liked. Yeah. But they had something in there. You know, you cannot be having 1 lakh crore market cap for 3,000 crore rupee loss. That was my limited point at that time.
That's true. And viewers, to an extent that that call has turned out to be right per se. If you just look at the performance of Swiggy, for example, in the last 6 months, or YTD as well, if you can pull up the YTD chart of Swiggy, you will see the point that I think Parag Thakkar is trying to make. This is down 2% today. YTD, hardly anything. There are a lot of other platform names, by the way, if you call this a platform, consumer tech platform names that have done very well. But of course, to each their own. I mean, for example, Pine Labs, much storied a debut, but the stock has completely come off from the highs of the day. However, since we are talking about specific stocks that you might want to bet on or otherwise, here's a name that you don't hear too often about, but HSBC is betting big on the company while initiating a buy call. Sharad Johnson with more details about this. Not very often spoken about stock, Sharad.
Exactly, Neeraj, and this is the first time I think it's coming out in the mainstream, especially from the broking houses. And HSBC, interestingly, has initiated a buy rating for Sedemac Mechatronics, and the target price is at 3,700 rupees per share. Of course, there's an R&D layer to it, and that's where the revenue compounding starts happening. That's what the broking house has stated. And they have gone a little bit deeper, a bit technical as well. Sensorless motor controller is what the company manufactures in starter system. This is of course used in two-wheeler and the three-wheeler segment, and that's where the growth is coming in, and also the diversification coming in the EV power tools and the commercial vehicles. That aids well as well. Second order effects kicks in, and a strong growth trajectory is supported, and they have a big R&D chunk also for their growth levels. And of course, this is why the bullishness is coming in. Largely the stock was not discussed, but now it's coming in the mainstream broking house.
Thanks a lot for that, Sharad. And an interesting note, I think what we'll also do is have a story around this on our website a bit later on in the day. So if you want to know more about HSBC's rationale of why they like this name, which is not too often spoken about, you might want to log into ndtvprofit.com as well. So keep that in mind. Okay. Kunal Shah joining in. 9:08 has happened, so the rates have settled. Just quickly, Mark, before we get in, Kunal, of the conversation, I think the Nifty starting off flattish, if you will. So not much there, but I think specific stocks might be in focus. A Swiggy, an Astra Microwave, the RT Industries, all of those could be in focus this morning. Astra is up 7%, by the way. RT is not doing too badly either, up about 5%, so pretty good going there. Thermax could be sulking, so keep an eye out for that as well. And IFL Finance could be doing okay. Thermax is indeed sulking. IFL Finance could be doing okay because capital has checked in, up about 1%. Kunal, thanks so much for joining in. And are you constructive on the markets in the very short term? Today it's the weekend, so maybe some people might take some positions off the table towards the day's close to. But are you initiating any fresh trades on the benchmark indices? And couple that up, of course, with your stock recommendations for the morning, Kunal.
Good morning, Neeraj. Good morning to everyone. See, I think what we have seen in this week that Nifty has seen a smart recovery from 23,600. Now, the low what we had made in April around 22,200. On the technical perspective, there has been a rising trend line around that 23,600 mark. We took support from there and we have reversed. Now, in this week, there were two sectors which have helped Nifty to go higher. First is the IT. Almost in this week, it has been up by 8%. And the auto index, which has been up by almost close to 4%. So I think these two were the heavyweights which helped Nifty to go higher. However, the Bank Nifty index has been the laggard, still trading below the short-term averages, and 57,500 is something what I'll be keeping an eye on. That has been a strong resistance for the Bank Nifty index. Once that is taken out decisively, then probably we'll see a short covering move coming in, and this rally of Nifty extending towards the 200 DMA on the upside, which is placed at 24,800 mark. So I think this is an important point to watch out for. 24,000 now becomes the immediate support for the Nifty index. Till the time we are trading above these levels, the approach remains buy on dips. Dips to be utilized as a buying opportunity, and eventually we should go towards 24,800 on the upside. Bank Nifty still remains in a no trade zone, 57,500. Once that is taken out decisively and we sustain above it, then probably one can go aggressively long and look for higher targets of 59,000, 59,500 on the upside. So Bank Nifty still remains in a wait and watch. Nifty is something which one can go on a buy on dip approach. Now on the stock specific, I have two ideas. Both are the buy ideas. First buy idea from my end would be Indian Hotels. So Indian Hotels, again, after a decent correction, is now showing base formation at the lower levels. In yesterday's trading session, we got a breakout into the stock on technicals. High top, high bottom formation, continuation of the pattern, and we expect this momentum to continue on the higher end. So this is a buy for me with a stop loss of 735, looking for targets of 769 to 775 on the upside. So that's the first buy. Second, again, a stock which has been a big underperformer and now showing strength in this weak market, and there has been a clear-cut relative strength, that is Havells. So Havells again had made a strong buying interest around the 17 July, where we saw massive volume buyings, and then the breakout came in around the mark of 1230. That was a strong rejection zone. We took out that rejection zone of 1230, which now became the support for the stock. So that's my stop loss on the downside. One can keep targets of 1295.
Got it. All right, Kunal, just about a couple of minutes left for the start of trade, and a couple of stocks that need to be marked. Bajaj Finance is up as much as 4%. Strong commentary coming through from the management in the conference call as well. Another stock from the frontline stocks that is doing well is Mahindra and Mahindra, and you'll hear from the management slightly better than expected number. On a few fronts in particular, doing particularly well in trade today. Asian Paints is also up and about Hindalco. So the breadth seems to be positive at the start of trade, Tamanna.
Yeah. I want to quickly just talk about Ather Energy. JP Morgan has initiated an overweight with a target price of 1570, saying it's a pure play on the fastest growing category in Indian two-wheelers. They expect the two-wheeler EV penetration to increase from 7% in FY26 to 20% in FY31. And the new platform launch and capacity expansion should drive market share gains. They command a gross margin premium as well. Kunal, quick view on Ather Energy?
I think absolutely and a strong uptrend stock on technicals, reversing back from the averages. So continue to remain on the buy side. 1194, 1200 is the support on the downside. I'm expecting the stock to make a new high towards 1337, 1350 on the upside.
I mentioned Bajaj Finance. There's also, by the way, reacting to numbers, Hyundai Motor India, and we spoke about both of these counters earlier today. Parag bhai, just less than a minute left. At these levels, with this kind of gap up, would you buy now or would you not?
See, actually, in Bajaj Finance with Mr. Rajiv Jain at the helm, you cannot say no.
No, but objectively on valuations.
No, valuations will remain expensive for a company which is going at 24%. Now saying that operating leverage is still to kick in because of the AI initiatives, and asset quality also, credit cost only 1.54%. So everything is good. So you have to just argue about valuations. That is.
And Hyundai?
So Hyundai, if it falls, it's a good buying opportunity because I think this is a tough quarter and from here on things will improve.
Everyone already had that idea. The stock doesn't look like it's going to fall, at least in the pre-open session. It's 4% up. One quick top call, Kunal. One word answer only.
I think top call from my end over here would be M&M.
Okay, M&M it is. We're going into the opening session this Friday morning after what has been an exciting week. We're ending this week at least with a hint of optimism. The FII data is being supportive, views are changing, advanced decline ratio is looking fine despite the Nifty IT perhaps not playing along. Look at the Nifty right now, 16 points up, but Nifty IT 3.5%. It's, we were talking this entire week about the inverse correlation. You're seeing it now. The AI trade is back. At least in global markets, the Nifty IT taking a breather after a fantastic week, 3% down. That's possibly why you're seeing the Nifty this flat. Let's pull up the heat map right now and then we'll get you the contributors. It will get you a sense of why you're seeing some pressure despite so much green on the screen. You have a completely flat Nifty right now, above 24,300 of course. It's all of your tech majors, TCS, Infosys, HCL Tech, Tech Mahindra, Wipro, all of them in that bottom line with cuts of between 2.5 to 3.5, 4% today. Eicher Motors taking a breather after a great set of numbers. So is Titan and Adani Ports. Bajaj Finance is the winner after a big set of numbers, good brokerage reports coming in, and asset quality which seems strong. Bit of a read through there for Shriram Finance. Zepto IPO on pause, Eternal about 1% up. It's helping. M&M, a lot of top picks. And the fact that tractor sales have been decent in Q1 has mitigated fears that this will be a tough financial year for tractor sales for Mahindra & Mahindra, no matter what happens with El Nino. So you have that green screen there. I want to just pull up Nifty contributors very quickly. Take a look at what's pulling down the markets. And it's all the tech majors. 32 points down just from Infosys. TCS, HCL Tech, Tech Mahindra, between them adding to a bulk of that 80-point downtick. It's Bajaj Finance, ICICI Bank and M&M on the other side which are holding up, and so is Reliance. So the Nifty is not really the big story, I would say, Alex. It's IT stocks taking a breather and then all of the action is in the broader end of the market.
Yeah, earnings front and center, right? You said it, Tamanna. Let's take a look at the sectoral picture as well, just to see how much green there is on the screen and who's gaining ground. Of course, at the bottom end of the spectrum, I haven't even looked at the screen, but you know that it is IT, it's down 3%. And so that really is a story that you need to track through the day. It's something that perhaps was indicated yesterday because you had a gap up start for the IT index and then it cooled off quite substantially through the day. Defense is looking good, pharma is looking good, auto is looking good again today. So we'll have to look at some of these stocks and see how much the momentum is going to lead them forward, going forward as well. PSU banks, okay, metal is gaining as much as 0.5%. Some of those internals will have to be looked at. But let's take a look at the earnings picture because that's where quite a bit of the action is. Pull up Bajaj Finance again. It's a top gain on the Nifty 50. Let's look at Swiggy. Let's look at GNG Electronics. Is not doing particularly well. Swiggy is also losing as much as 4%. It wasn't the best set of numbers. And we spoke about why the numbers don't look so good. So despite the fact that the Zepto IPO is postponed, the stock is losing as much as 4% in trade today. GNG Electronics as well. Niva Bupa, strong set of numbers. So too for Torrent Pharma. up about 2%, not the cheapest stock, as a result of which maybe the gains are capped to a certain extent. Honda India, the EBITDA is up as much as 60%, but the stock is not reacting. You have Mazgon Dock, AW Agri and Archean Chemicals all reacting to numbers. AW Agri has cooled off from the initial uptick that you saw on the screens. It's up as much as 3.4%. Finally, Aarti Industries, also a good set of numbers here. Look at Thermax. Wow, this is the accident of the day. We told you about this earlier today. The fact that the margins have gone from double digit to 3%. And this is something of a concern. We'll talk to the management to find out what's what in just a bit. But there's also Tata Steel, just a 0.5% reaction positively. I want to look at Eternal as well. Eternal and Swiggy. Of course, Swiggy we already talked about, but Eternal is down about 0.7%. Not reacting to the Zepto postponement. PN Gadgil Jewelers is launching a QIP. It's up about 0.25% or so. JBM Auto is set to raise funds as well. Pull that up and see what it's doing. It's down about 3%. GRSE, there's an order win. Astro Microwave, and there's a HAL order as well. So Garden Reach is not doing too much. It's up about 1.2%. Let's pull up the rest very quickly. You have Astra Microwave, that's up about 12.8%. We spoke about this as well. Apar Industries is something in focus on account of the board approval for a fundraise. It's up about nearly 4%. Global Health is increasing the capex for its Guwahati plant. It's in the news. Let's pull those up very quickly if we can. It's down about 4.3%. And finally, TTK Prestige. There's a long-term settlement that has been reached with its factory workers in Hosur, not doing too much in trade. So quite a few stocks, Tamanna, from the broader markets, as you pointed out, reacting very sharply. I think the story, though, has to be the IT index.
The IT index on one end and Bajaj Finance on the other. I was just going through the CLSA note on it. They've raised the target price for Bajaj Finance itself, and their commentary I thought was interesting. Target price is 1,300 rupees is what CLSA has given. They're calling it proved itself of Iron Man status in Q1 FY27, and then they go on to say why Pat beat estimates by 6%, etc., etc. But say what stole show this quarter was strong asset quality performance. Calculated margins were largely stable as higher cost of funds were passed on to borrowers. That's really the one to look. Kunal, on charts, more coming in for Bajaj Finance. If you want to buy in, profit booking, what would you do right now?
I think if you're holding from low levels, definitely start to book some profits. For fresh entry, I think wait for a dip. I think dip towards around the mark of 1,060, 1,070 would be a good entry point.
The IT majors that you would look at, because still yesterday people were talking about how IT is back.
I think, yeah, definitely that's what I said in the start of the show.
Amit, let me just get Amit in for that answer, please. Yes, Amit.
Yeah, hi. So IT, we've been buying since 26,500, 27,000 levels. In fact, I was in your studios also and had given a clearing call on IT. But at 32,000 levels, so there is a bit of a strong resistance on the weekly charts, and we had expected that this would kind of, be an initial stop, a small stop for IT. So until and unless 32,000 level is taken out handsomely on the weekly charts, one would, be a little circumspect with IT going forward.
With IT, but pull up Thermax. We pointed this out to you. It was a pretty bad set of numbers, let's be honest. It's down about 14% at this point, not too far from the low point of the day. Just some of those numbers stand out, right? Parag bhai, net profit down 83%, EBITDA down 69.5%, margin coming in at 3%, compared with 10.4% year on year. It's also scrunched on a quarterly basis. So it was already lower. It was single digit in the fourth quarter. It's dropped to 3%. Why has this happened? Of course, there are cost overruns in the industrial business.
Industrial, yeah.
But that's a headwind that will continue to play out.
So I think I would wait to hear from management. See, it's a great company by all means. we actually wanted to buy at 3,000, then it went up so much fast because of this data center narrative again.
Yes.
So I would say that this is a big learning. You know, you have to stay away from these narratives. Everything which goes into data center cannot command very high multiples, right? And Thermax will be genuinely supplying to data center, but you have to, you have to be cognizant of the fact that what you are paying for.
So what are the few things that you think the management should speak about?
Basically, because on every parameter there is a big downtick. So we need to ask management that what has suddenly happened in this quarter, and as you rightly said, that whether this will improve and whether this is a bottom. If this is a bottom, Thermax is a great company to own.
We are in fact going to be speaking with them in about 7 minutes from now.
So I'll listen.
So we're getting all the insights from Parag Thakur in advance. But you know the good thing about Ashish Bhandari, and every time he speaks to us, he is so open to taking questions and answers very clearly. So we're eagerly awaiting that conversation with Thermax. Watch out for that. That's going to be first on NDTV Profit. Mankind Pharma is the other one that's seeing a downtick. I want your view on that, Parag Bhai, because you talked about how good set of numbers, 5% down now on the stock. What is the worry here, or is this just a cool off?
No, I think it's a cool off. It's a cool off. In many results, I have seen that after the results, unlike Bajaj Finance, of course, where the Rajiv Jain charisma always works. So I need to check what has gone wrong. But on the face of it, the numbers look very good. The EBITDA was 1,060 crores against expectation of 980 crores. So on the face of it, the numbers were brilliant. So I also need to check what is causing this big fall in the price.
Amit, a view on Mankind Pharma?
I have not tracked it of late, but let me just quickly check. So yeah, it has, while the trend has been decent of late, but with the fall today, I think most of the TSLs have been hit. If it's basis around 2,300 levels and shows any signs of support, probably I'll look to pick up at those levels, but not at the current level.
Okay, thank you so much, Amit, Kunal and Parag Bhai for speaking with us. I know you're staying on because we're speaking to Thermax now. They have in fact reported a first quarter that has been weak as project cost overruns and margin pressures sharply impacted profitability. However, strong order book, healthy backlog and growing opportunities in data centers could afford some support. The stock now 14% down. Before we speak with the management, Parth is setting it up for us with all the key takeaways. Very quickly, Parth, from the results.
Absolutely. So in Thermax, we saw a big hit in profit during this quarter, and that was because of the 91 crore cost overrun that we saw in the company's industrial infra project. Also, last year's quarter had a one-off 56 crore incentive income, so that is what is driving that difference as well. In the company's industrial project segment, because of low export sales and high input cost, we saw some impact on the margins as well. And in the green solution business, we again saw some of the project overruns, and that has impacted, that has widened the losses for them as well. If we look at the industrial segment a little bit more, then because of the project completion cost, we saw that 91 crore impact, and the PBIT has fallen to a loss of 71 crores versus a profit of 83 crores year on year. On the industrial product and chemical business, industrial products margins have fallen to 6.1% versus 8.3% year on year, and this was again because of the low export sales and higher input cost. And on the chemical business side, we have seen better volumes and increase in profitability.
We will have all those pointers on our screen as well in case you missed Parth running through it. But Mr. Ashish Bhandari, MD and CEO of Thermax with us. Ashish, very good morning to you. Thank you for your time on NDTV Profit. Let's just try and understand what's happened this quarter. And you might have heard some of the commentary before we led into this conversation where there were high expectations. There seems to be a cost overrun. Is that the core issue? Just want to understand what's happened across segments.
Sure. Thank you very much. And of course, it's been a tough quarter. It shows up in the numbers. I'll do both. Explain what happened in the quarter itself, and then also share confidence for the rest of the year and why I think it can still be a very good year. Let me start with the quarter itself. In the quarter, we had a couple of things that did not go as we would have expected. The biggest of which was on one particular project. And this is a set of projects that we have said are not things that we want to repeat. This is actually a project from 2022, and it's in its final year of execution, where on the ground, there was a big engineering change, which came about in June. And because of this change, the cost to completion of the project has increased significantly. And this cost to completion of the project, which is 91 crores, is something that we are taking hit on in the quarter itself. And this will get executed over the next 4 quarters. And that's how this additional cost will come into our numbers. But we are taking the hit now because this was already a loss-making order.
What is the prime reason for this cost addition? That cost of completion addition that has come in, and I understand that you're front loading the hit so that it's not there through the year, but what is the prime reason?
So we have shared previously also that they were of the areas of Thermax which we want to fix and not repeat is a set of projects there which are government related with high civil and construction areas, and in one particular project which is our biggest, it is our NRL sulfur recovery unit, where we have an engineering partner. And that engineering partner in the late hour came back and said, no, we need to do some engineering changes to deliver what we need to for the customer. That became a point for us to take a step back and take into account that this particular change and some other changes also will result in the site running longer. We have to expedite the site to meet the customer's requirements. So taking all of those into consideration, the cost of completion between now and end of the project was projected to be this 90 crore number, which is what we took a hit on.
Mr. Bhandari, you were explaining the other factors that have played out in the first quarter. And good morning, this is Alex here. So you've talked about this one project in which there is this 91 crore front loading that you've done to account for the unforeseen issue that you have just explained. What else has occurred?
So there are two other factors that have occurred. And one of which is our deliveries, which if you take a look at our backlog, and as I talk about why you should still be positive on Thermax, our backlog is quite significant. And nearly 300 crores of what we thought we should be able to ship and equipment that was ready. A lot of it relatively higher profitability because it was meant for exports, and quite a bit of it for the Middle East. We just could not ship because of shipping rates and some of the effects of the war itself, where customers were not ready to pick up the equipment. And it wasn't right to push that, at least in Q1. In future quarters, we will do so. The second reason was commodity prices had some impact, close to about 10 crores, where in our industrial products business, where we have to turn around products relatively faster, both in our water business and enviro business, which depend a lot on steel and plastics, etc., commodity prices went up. Lastly, FEPL, which is where we do wind, solar, renewables business, that continued to face headwinds, couple of project executions, a big one in Tamil Nadu, where when the government changed, some of our projects which were complete were put on hold because the last approval wouldn't come from the government. So all of that came into the numbers. The three things that we are committed to delivering this year. Yeah, one is the kinds of these large projects that we have. This is the last year of execution practically, and I've been saying that for some time. With this, all of these legacy large projects with relatively low profitability should be off Thermax's books. Our wind, solar, renewables business, which is FEPL, we will cut down our exposure to that business, and we'll bring in external partner. We do think we have put a good set of assets together, but this is not Thermax's business long term. The third area is our bio-CNG business, which to all open issues we will resolve this year. So this year is the commitment on what I've been saying for the last several quarters of some of these legacy issues that we have that we will resolve and clean up our books and our numbers on that front. Why should you still be excited about Thermax? I would give you multiple reasons. First,
we'll talk about that in just a bit, Mr. Bhandari, and I'll be sure to ask you about that. But I just want to delve a little deeper into some of the issues that you have highlighted to us. Because I remember very clearly in past conversations, you've highlighted the fact that some of these businesses are being unwound and will go off the books eventually, it has a bearing on margins, and those margins will be scrimped till the time that these legacy businesses will continue to be on the books. So the way that you're describing it, a couple of issues have occurred which you did not anticipate, and this is going to carry forward into now 4 quarters, right? The Tamil Nadu issue that you have, so you've said that this legacy business, 91 crore rupees, you're going to execute it over four quarters, right? Is there a possibility of any further cost overruns there, or are you done with it? That's the first point. Second, on these Tamil Nadu orders that have gotten stuck, is there any word on whether this is going to restart, what the implications of cost will be in the rest of FY27, and do you anticipate that what you thought would occur in the third quarter would now have to be pushed forward perhaps into the fourth or maybe the first quarter of next year?
So I'll take all 3 questions one by one. The first one on, do I anticipate anything further on these projects? What we have right now is hopefully a no. Yeah, from the engineering partner, we have a written statement saying all engineering is formally complete from their point of view, and no changes are expected. In the number as well, we have taken sufficient contingency, and we have some change orders that we expect from the customer. So net, as I see things, and I can't guarantee 100%, and surely we haven't been good at guaranteeing anything on these kinds of projects, but I can say with a fair degree of confidence that we don't expect anything else to show up on this particular order. On Tamil Nadu, which is on our wind solar renewables business, again, there is a high degree of expectation that within a week itself, we should get the necessary approvals, which means there would be a delay of a quarter, but some of these issues would be behind us, and the assets would then start producing and move from being kind of in the negative category to then the positive category. So on both parts, I hope I've answered the questions that you have.
Okay, Mr. Bhandari, I think it's only fair we now come to why we should be excited about Thermax. I'm just going to add one more question before I request you to speak about it. You said we are in a cleanup process, and from everything you've been telling us, this is a bit of a phase of reset for the company, or exiting spaces which didn't work for you. There's a bit of cleanup happening. What is the timeline of that cleanup, and why should investors be excited?
Okay, so the cleanup is not like it is multiple quarters. Here we have delivered the numbers that we did last year, carrying some of these businesses. Yeah, and we will, Q1 should be an anomaly. Starting Q2 onwards itself, you should see a significant improvement. And I'll share why I'm bullish on the year as a whole. Let me take one by one on some of the areas. First, on revenues, you would see our backlog itself now is more than 14,000 crores. In that 14,000 crores, the portion which is of these areas that we don't like is now less than 400, which means it has come down to less than 10%. And in this particular year, we would want to bring it down to 0. Our legacy projects around FGDs, some of the other government projects are all practically done now. NRL is the last remaining project, which too, we have taken the hit that we had to against that project. And now we have shown previously also, when our revenues cross 3,000 crores, we are able to deliver a good amount of profitability. That will become the norm going forward. We have the backlog to be able to deliver a 3,000 crore plus kind of a revenue number on a continuous basis. And this backlog is more and more profitable. It has quite a few international projects. And as these international projects start to convert into revenue, the profitability jump will also start to show up. Yeah, and we have got a lot to recover. I do believe both on revenue and profitability. After Q1, we will see a significant improvement, driven both by kind of the quality of orders that we have taken, and on the revenue side, just the backlog that we have that we can deliver. I would also say on the orders, while this quarter showed as if we had just a 2% orders increase, our pipeline of our opportunities continues to be extremely good. And while last year we grew our orders north of 30%, I am confident that this year we will grow our orders even on top of what we delivered last year, because in every part of the business, we have a significant opportunity pipeline driven by growth in Middle East, Africa, data centers in the US, domestic thermal coming back, multiple portions of our business seeing a good amount of tailwinds. In some areas, there's pricing pressure as well. Even our chemicals business, which went through a year of tough numbers, some of our volumes are coming back, where our international customers that we had lost, the volumes are coming back.
Interesting.
So I see good opportunities as we go forward. Quarter one wasn't something that that we are proud of. It was a bad quarter, clearly. But it isn't reflective of the business that we have, and certainly not reflective of the future that we have.
We appreciate your candor as always, Mr. Bhandari, and we look forward to speaking to you at the end of the second quarter. And hopefully it'll be a dramatically different conversation to this one. Thank you so much for taking the time.
Thank you.
Okay, Aarti Industries in focus on account of its June quarter, beating street estimates. Let's very quickly go across to Varsha. Varsha, three takeaways maybe, and then we go to the conversation.
Well, overall, a great set of numbers, I would say. Volume recovered compared to Q1 FY26, though sequentially you saw that decline in volume. Middle East revenue contribution fell from 15% earlier to 2%. Better product mix and geographic mix supported margins. And low cost inventory monetized boosted profits. Overall, onto the outlook, volume recovery is expected in Q2 FY27. FY28 EBITDA target maintained at 1800 to 2200 crore, and target debt to EBITDA is expected below 2.5 times.
Let's head across now to
the Industries joins in. So Yog, welcome to the show, and always a pleasure to speak to you. My question coming to you is, all the hurdles that have, the company had to cross as well from an execution perspective, from supply chain constraints. However, the numbers are looking very strong. What has worked according to you to get to a stage like this?
I think it's also indicative of strength of the diversified portfolio that company has built over the years. So the quarter was no doubt very challenging from a supply chain point of view, especially linked to issues of West Asia war. And it was visible in the volume trajectory, which has been very strong for the last 5-6 quarters. But in this quarter on quarter basis, we saw 12% volume drop across the overall portfolio. But still, I think driven by our very agile supply chain management, customer partnership, we were able to pass on the price rise in most cases. And that's what is reflected in both top line as well as bottom line. So despite volume drop, I think driven by price, cost optimization, supply chain agility, and product mix to a large extent, I think we were able to deliver this performance.
Okay, so if you have to take, cues from this quarter, what is FY27 really telling you in terms of what it could look like?
I think, to be very frank, given the amount of volatility we are seeing in West Asia right now, predicting for midterm, it's kind of a guessing game a little bit. But I can tell you what we are seeing right now. I think we are definitely seeing volume recovery compared to Q1. I think the demand remains quite robust. Across the segments, energy segment is seeing good pull from global customers. Even the other segments like agrochemicals, pharmaceuticals, polymers, where we saw some little bit of softening in the first quarter. I think people who waited for prices to stabilize have come to a situation where buying behavior is coming back. So in that context, we will start to see volume recovery. The volatility linked to raw materials and inventory, that is a risk that we continue to carry, but we are proactively managing it to ensure that sort of our order book remains relatively robust for a few months down the line.
Okay, so let's talk, as you're mentioning, there is demand uncertainty, there is raw material volatility, there are geopolitical disruptions. If any of this has to continue, what is the key concern that could actually derail your outperformance in FY27, and what's that base case scenario that you're building in?
No, I think our base case scenario remains pretty steady with respect to what we sort of guided right from our 3-year plan. There's absolutely sort of no change in that strategy. I think there are three pillars that we continue to remain focused on in terms of cost optimization, operation leverage, and sort of growth via our new capexes. On cost, all actions are on track. The impact of that you're seeing in the underlying performance, and that impact will be fully visible in the next 6 to 9 months time frame. I think the operating leverage is where we see still some upside left, because as the volume recovery comes back, we will see full utilization of existing assets, and that reflecting in our performance. On the capex side, yes, the war did impact us in terms of execution. There is a 5 to 6 months delay on some of our Zone 4 projects. But even with that, I think we anticipate that all of the blocks will get commissioned within this financial year. And the full financial impact of it might be delayed by 5 to 6 months. But I would say still pretty much on track in terms of executing the overall strategy.
Okay. The other aspects, Yoga, I want to talk to you about is the impact of China, because China, the companies over there, I think, have become more aggressive when it comes to pricing. So are you seeing any renewed pricing pressure from that end as well? And if so, how do you look to protecting your margins? Because if China cuts prices further, will Aarti then defend market share or defend margins?
No, I think we will defend both market share and margin. I think in this operating environment, you have to be best in class when it comes to your cost structures. And I think we have achieved that, I would say, across most of our portfolio. I think in terms of what China does, the behavior changes from value chain to value chain quite significantly. There is no one behavior across all the product portfolio that we have. There are some value chains where we have got positive tailwind because of whatever has happened in China, like NCB chain. There are some chains where we continue to face very intense competitive pressure. So I think the answer differs from value chain to value chain. But from our point of view, I think what we are very clear is we retain and gain market share wherever possible based on our very deep customer relationship and our ability to serve very complex supply chains globally. And at the same time, we try to retain/expand our margins by improving our own cost position. I think that strategy, we feel, will lead us to achieve full potential from our existing assets.
And what do you have to say in terms of the customer inventories as well across agrochemicals, polychemicals, and specialty chemicals? Are you seeing any destocking which still remains?
No, I think this stocking story is kind of, I would say, complete across most of the portfolio. I think the buying behavior and buying decisions are changing again from player to player and segment to segment. I think when there is such a volatile environment, there are organizations which potentially could delay their decision in terms of purchase because they accept softening of the prices. Sometimes those decisions could be right, could be wrong. But so you will see a different purchasing behavior from different segments. By and large, at average level, we are seeing stable demand at this point in time, except there's one segment of dyes and pigments where sometimes affordability linked to higher raw material prices, we see some demand destruction. But apart from dyes and pigments, across rest of the portfolio, including pharma, including agro, including polymer, we see stable demand across most of the end segments.
Okay. And overall, how big is CDMO expected to be as a part of the company's strategy? Because you are looking at expanding that space also pretty closely.
Yeah, I think so. I think for us, CDMO in classical definition, frankly, doesn't apply. I think what we are good at is sort of large scale manufacturing and technical innovations. And in that context, the way we are driving our CDMO effort is to figure out which are the chemistries where we can actually help our customers scale up quite significantly, build those assets at a very reasonable capex and operate them at the lowest OpEx, and in that context, make our customers more competitive. I think we've just started this journey over the last 1 year where we started focusing on this type of business models. I think there is very early but interesting tractions. We are building new relationships. The new inquiry pipelines is getting built up across pipeline molecules, across innovative molecules. It will start delivering results to company meaningfully in a sort of 2 to 2.5 year kind of time frame. But the early traction is definitely very interesting.
Okay. So my question to you then is, if you have to look at segments that will deliver growth, where are you seeing concerns? I don't want to talk about the ones which will do good because your PDA utilizations have continued to remain weak. There are certain segments which might face some constraints. So what should an investor watch out for where there could be a potential slip that could happen? And two, with regards to zone 4 that had been delayed as well because of labor constraints, are you now on track?
Yeah, so I think zone 4, the labor, let me take the second part of that question first, because I think the zone 4, yes, there was an issue in the March, April, May timeframe where labor became really a concern. And in that context, overall timelines got pushed, but now we are back to full manpower. And in that context, now execution is on track compared to what we had anticipated versus when it will get commissioned. There is a delay of, roughly sort of 2 quarters odd. But going forward, we are not seeing any further risk of delay. That's one. I think on your first question, I think we have to watch out for sort of 2 or 3 big things, right? One, I think volatility in raw material prices and our ability to ensure that we are able to pass that on without taking a significant inventory hit going forward will be very critical. The kind of volumes at which we are operating right now, especially for imported raw material where there is a 1 to 2 month price exposure that we take, I think we need to manage that very carefully, especially in sort of energy segment that does apply to us. And the third aspect that we will watch out for is how does the demand pattern evolve in terms of China and non-China market going forward?
Resilient quarter is how almost everybody's described M&M's performance in what was arguably a challenging quarter for companies across the world. Dr. Anish Shah, Group Chief Executive Officer and Managing Director of M&M Johnson right now to put the quarter into perspective. Dr. Shah, thanks so much for joining in. Would that be the way you would describe the quarter, or do you have more benign words for the kind of performance that you've put up? Because some specific segments actually did better than what was anticipated.
So good morning, Neeraj. A pleasure being here with you. With the performance that our teams have driven at a 34% increase in profit year over year, I would not use benign words for it. It is clearly a very resilient and strong performance in a quarter that has been tough, but a lot of credit to our teams to work through that and be able to deliver these results.
Yeah, so which is why I said, resilient was the term I used. I wonder if you had a more benign term for it, but be that as it may, let's get to specifics, Dr. Shah. And I'll start off with the auto margins, right? A bit of a trough, if you will, considering that there was about, a commodity inflation of 450 basis points as per reports. Now, with the price hikes that you've taken mid-July as well, does it solve a part of the issue of this commodity price inflation? And therefore, is that a return to normalcy, or is it difficult to call that right now?
I think we should be able to solve most of it. We did see commodity prices coming down late in June. They've gone up a little after that as well. But based on where we stand right now, we feel fairly comfortable. And with the price hikes taken, I think we've solved for it. It is obviously difficult to predict what happens in the world. But we do see, at this point at least, things moving back to some semblance of normalcy.
Got it. I'm going to get the margin equation out of the way by talking to you about the farm margin outlook as well, because it is a seasonally weak quarter. But the farm EBIT margin, I thought, held out reasonably okay and maybe better as well, despite this steel and rubber inflation. So how do you see that shaping up in quarter 2 and thereby having an overall impact for M&M very short term? I'm guessing we'll talk about the long term too, but right now I want to focus on the short term.
Farm as well has delivered very well, and while margins have come down slightly, given the context of the quarter and what we've seen, it is not really a very steep decline in margin. So it's a slight decline right now. It's something that we've always made up, and we feel fairly good about where we are in the farm business as well. Farm International is turning around well, and that will be an additional boost to the overall earnings for the farm business.
Okay, just a follow-up question on that. The tractor volume guidance confidence, 19% YOY growth for you is to my mind quite exemplary, because everybody is expecting that when the debate around El Nino is alive and kicking, what could the outlook be like? What to your mind is this outlook for the tractor volume guidance, and what leading indicators give you the confidence, Dr. Shah?
Neeraj, at the start of the year, we felt it would be a 5% growth year over year. The first quarter has been very strong, and this is one area where no one's really been able to predict what happens to the market. There are times when it grows very significantly. There are times when it's a little more benign in terms of its growth. At this point, we see the rural economy holding up very well, and that's what's driving the growth in tractors right now. And we feel that monsoons are much better than what had been outlined a couple of months ago. It remains to be seen how monsoons continue, but there isn't as much impact from a monsoon than as compared to what it was, let's say, 5 or 7 years ago. So sometimes we feel a lot of this is overblown. The business continues to be on a solid track. We've seen that even if we take the last 5 years, there have been various different things. There have been El Niños in the past as well. There have been challenges in the rural economy, positive aspects there. And our business has continued to grow through all of that and has delivered strong results over the last 5 years. And that's what we expect to do. So our focus is continue delivering strong results. Yes, we might see some ups and downs in the market. At this point, what we see is positive, and that's what we're focusing on.
But you want to hazard a guess around the numbers, because you started off the answer saying nobody's been quite able to do that. And you're so right. I'm asking if you want to hazard a guess this time.
I think in this case, Neeraj, will wait for a couple of months to see what happens. At this point, we are just staying with the number we had at the start of the year, but we see some positivity in that based on what's happened in the first quarter.
Okay, the UV SUV segment now, because you've guided for mid to high teens, if I'm not wrong, in FY27, you're expanding capacity as well. I would love to know, Dr. Shah, what is the current utilization trajectory, and because demand is strong in both ICE and EVs, how are you prioritizing the yin versus the yang, if you will?
That's a difficult one. The first part is relatively easy. We are at capacity at this point. We do see some challenges from time to time with labor shortages that we saw a couple of months ago, and a potential supplier issue as well. So those brought down a little production that we could have delivered otherwise. With increase in capacity, we see the demand for it. So even then, we will likely be at full capacity for the entire year. In terms of prioritization, we try to deliver both, because we have customer bookings, we have wait times for some of our models. We're trying to minimize that to the extent we can. And therefore, it's not really one versus the other. It's try to meet both and try and minimize timelines for the customer wait times for both ICE and EV products.
Your cars are certainly making their presence felt on the road as far as the looks go as well, Dr. Shah, so kudos on that. But the other interesting thing that has happened, as I saw in the road notes as well, that the EV segment, right, has EBITDA positive, if I'm not wrong, ex-PLI right now. And I believe, 5% EBIT margin, including PLI. So how would you gauge the trajectory of this segment over the next 3 or 4 quarters? And can it be a positive ex-PLI benefits as well? How dependent would it be on the PLI schemes?
So it has a very strong trajectory, and it's playing out exactly as we planned this to play out. Government incentive cannot last forever. It should not last forever. The incentive is there for the transition from ICE to EV. And as scale comes in, profitability for companies will improve. As profitability for companies improve, the government incentive should start dialing down. So that's exactly the path we're working on. Without the incentive, this industry would not have taken off, because you need price parity for consumers. That has been achieved. The incentive is still essential over the next couple of years to ensure that that price parity continues. But as scale is starting to come in now, our sense is in a couple of years, we will start reducing that gap, and therefore, as the PLI goes away, let's say maybe 2 years later, there shouldn't be as much of an impact, It depends on how global prices for various commodities continue to stay, especially with regard to commodities required for EVs, batteries and cells in particular, that take a different set of commodities and would be there for ICE. But on balance, this is a track that we had forecast. It's playing out as we had forecast, and it will be a great story for India in terms of how the EV transition has happened. I would give a tremendous amount of credit to the government in how they've set this up. There also has been a very strong focus on the charging infrastructure, which is the last leg that's waiting. And as that comes in, we will see an inflection point. And let me then go to the electric three-wheeler story, because electric three-wheeler, the industry is at a 40% penetration. And there we had incentives for FAME 1 and FAME 2, which have gone away. And with that as well, with scale coming in, that transition has been very strong. And that's a great case study across the world for a government giving a subsidy and then helping transition the industry to electric. And that subsidy then comes down and is not required anymore. So I think we are in a good shape overall, a good trajectory, and we will see a strong transition to EV, which will be profitable for OEMs, which it should be, otherwise OEMs will not do it, and which will be one where incentives over time will go away as they should.
Yeah, but could this conflict be the demonetization moment for as it was for the UPI space? I mean, will EVs actually see a much larger flex because of the customer preference shifting towards EV in light of what's happened in Iran?
We are seeing that already, and EV is a fantastic product. It's a product that's much better to drive. It has lower maintenance. It has greater savings over the years as well, and it takes time for consumers to get comfortable with it. It also takes time for the infrastructure to build up, which is a key focus area right now, and therefore the attention on EVs needs to be very strong till we have the infrastructure built up. The most important thing is a consumer must have the confidence that I can take my car anywhere and I don't have to worry. That is what we have today with petrol and diesel, because we have petrol pumps. You don't have to wait for a long time there, and therefore you don't have to think about it saying I'm traveling somewhere. What are the petrol pumps on the road? Let me look at the map, or let me look at my app and see what petrol pumps are there. We have to do that with EV right now. With charging infrastructure coming up, hopefully in a couple of years' time, it should be as ubiquitous as a petrol pump. And at that point in time, customers will start moving towards EV a lot more.
That range anxiety going away is the primary factor that will drive electric vehicle adoption going forward. The stock is up very close to the high point of the day, 2.4%. So too is the rest of the market. You have the benchmark Nifty 50 that's trading with gains of just about 0.2% at 24,350. But it is the broader markets that have recovered quite sharply from the low point of the day, with the mid cap index now gaining about 0.4%. The small cap index up about 0.7% and doing well. Let's pull up earnings reactions and speak specifically about Niva Bupa, because it's had a pretty good set of numbers. The stock has cooled off from the high point of the day, now trading with cuts of just about 0.7%. The PAT number rising as much as 90-odd%. We'll speak with the management. In fact, Vishwanath Mahindra, ED and CFO of the company, is joining us. And very good morning to you, Mr. Mahindra. But before we come to you, I want to have my colleague set the context. So let me go across to Sharad to find out what he thinks are the key takeaways. Sharad?
Well, strong operational numbers is there, and it has been a proper beat, and that is why that has aided the PAT numbers. Also, looking at the combined insurance service ratio, that has also improved 300 basis points on a year-on-year basis. The most of the numbers which I talk about, operationally the numbers have been strong, but also in the con call itself, the bullish commentary coming in from the management that they would like to grow at least 8 to 10% more than the retail numbers, especially with the healthy premium growth which they are seeing, especially in the month of July. The renewal retail health loss ratio stands at 75%, as the management had stated, and they are targeting a mid to high teen ROE numbers by FY29, compared with that a 4-quarter trailing ROE of 11.8%. Now also they have mentioned that the preferred provider network is able to reduce their claim severity by 15 to 20% by directing the customers towards an efficient network as well. So net the commentary has been strong in the management con call also, and likely we are seeing a little bit of profit booking.
Got it. All right, Sharad, thanks so much for getting us those details. Let's head across to Mr. Mahindra now, ED and CFO, as I said, of Niva Bupa. So thanks so much for taking the time. Let me ask about the numbers in the Q1. What, according to you, led to that performance, which is being described by quite a few people as a strong performance?
First of all, thanks for inviting me to the show, and good morning to you and all your viewers. The first quarter is been very strong in terms of sales numbers, and if you just see our GWP growth, it is 47% on retail health. This is driven mainly by 2-3 factors. One is external, as you would recall, there was GST exemption in mid of last financial year. That tailwind has really helped the entire industry, and industry itself in terms of retail health grew by 32%. We grew by 47%, and that delta is coming mainly from internal factors. One, of course, is investment in distribution. Last financial year, we added 1,000 headcount, and mainly in sales. This year also, we are adding 1,000 headcounts. So that's one which is helping investment distribution. Second, of course, innovation in product. Incidentally, bit of last financial year when there was GST exemption, we launched Reassure 3.0, which was received pretty well by one, consumers, and second, distributors. And third, of course, is our claims servicing, practices. Our claim settlement ratio, one of the best in class, is 95% plus. So these are the 3-4 factors which have really helped in strong operating numbers.
Mr. Mahindra, the performance, of course, on various counts is looking fairly strong. The questions would be around the claims ratio improvement, right, and the overall trajectory out there, because medical inflation is fairly strong, if you will, and also any shift in the portfolio mix towards the higher sum insurance plans.
But definitely. So this Reassure 3.0, which I talked about, this has one variant where there is no sum insured limit, and that's been received pretty well. And this is really helpful because, as you know, one is medical inflation. Second, there are diseases where the claim amount may go upward of 50 lakh, 1 crore. So that's something which is really helping. Second, in terms of loss ratio is also a function of various things, including mix change, etc. So we generally track combined insurance service ratio, with CISR, which includes loss ratio, which includes expense ratios, everything. So that has shown 300 basis point improvement in Q1 this year compared to last financial year. And it is at 100.2%, and we expect this to improve further. And our guidance is 98 to 99% combined insurance service ratio by FY29.
Mr. Mahindra, very good morning to you. The health retail segment seems to have done very well this quarter. Do you expect this trend to continue? And which are the segments that you see firing the most to sustain the kind of performance you've had in this quarter one?
Yeah, good morning. So health, of course, retail health, our growth was 47%. In fact, group health is it is flat if you compare Q1 last year versus this year. And the reason is because we only write group health if it is making sense in terms of underwriting. If it is loss making, we don't write that account. So in terms of shift, it used to be 30% group, 70% retail, and Q1 it is more like 25% group and 75% retail. So that's something which is helping. And in terms of segment and channels, all channels in terms of retail health are firing, be it agency or direct channel or bank assurance.
The renewal rates like in retail health?
Yeah, renewal rates have also gone up from 93% last financial year to 96%. 93% itself is a pretty good number, but increase to 96% is also driven by GST exemption, not only people are renewing more, but they are also upgrading their sum insured. They are adding more benefits and enriching their policies.
Clearly, there was a bump up after the GST exemptions, and one of the policy directives and reasons for those GST exemptions was to increase coverage and this bump up. Is that tailwind going to persist? Because you've had a good Q1. I'm just wondering how long that tailwind persists for you as a business.
Yeah. See, one is structural changes. So structural, if you see the price going down by 18%, it is meaningful. There are some fanciers, they are now converting and they are buying health insurance. But at the same time, from third quarter, the base will have that GST impact. So it is really, interesting to see how the numbers will be there for the industry. But as we have mentioned, in terms of our growth, we would like to grow in the medium to medium to long term, 8 to 10% percentage point higher than industry.
Oh, so is that the target for FY27 or the guidance per se for FY27 then, Mr. Mahindra, with regard to the premium growth? And also, what is the anticipation on the claims ratio?
As I was mentioning, so yeah, this is a guidance to grow, let's say 8 to 10 percentage point higher than industry in retail health segment. And loss ratio is being benign. So if we just see our Q1 number, 63%, it's a function of mix change. Of course, if group is supposed tomorrow, we feel that rates are hardening in group and we are able to get some, we are able to write some groups at acceptable rate. In that case, the loss ratio may change because group has lower expense, higher loss ratio. But otherwise, what's been our trend, that should continue.
Got it. Okay. All right, Mr. Mahindra, thanks so much for taking the time and for speaking to us, and wish you all the best for FY27.
Thank you. Thank you.
All right, we have to slip in a very quick break, but on the other side, we've got a great conversation lined up with Dinsho Irani, Chief Executive Officer of Helios Capital. Stay tuned for that.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
What if your gut was affecting more than just your digestion, your mood, your sleep, even your immunity?
The gut-brain connection is no myth, it's a living reality.
This week on NDTV Lifeline, discover how your gut influences your mind, why bloating and stress are often connected, and the simple habits that can transform your health. Only on NDTV Profit.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं।
fan?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what export.
Welcome back. You're watching India Market Open. Well, quick market check before we get to story on what's happening with Bajaj Finance. Bajaj Finance firing all cylinders, by the way. The Nifty, though, just staying put at the 24,350 mark. Odd. I want to pull up the Bajaj Finance stock, please, as well as what's happening in the mid-cap and small-cap indices right now, because there's a CLSA note today which is describing Bajaj Finance as the Iron Man. That's pretty much what's happening. 0.5% up on the mid-cap 150, because otherwise the Nifty would have looked quite different looking at what's happening in IT stocks. The Nifty IT once before we move ahead, which is really seeing a bit of a reversal of trend after 3 or 4 days of strong trade, about 2% down right now. But let's talk about Bajaj Finance. Strong all-round quarter led by healthy net interest income growth. Sharad Dubey joining in to give us a snapshot of what brokerages are saying. Sharad.
Well, brokerages, Tamanna, you pointed out, they have mentioned it as Iron Man, and you could say arguably it's the stock of the day. Morgan Stanley has also increased the target price, and largely they have stated that the con call which will happen, that's where there is a big chance that the guidance might be revised upwards for FY27. So that's what we are also tracking. Also for Macquarie, they have stated that the margin resilience is there, which has actually offset the cost pressure, and a prudent provisioning was there. And of course, Bajaj Finance leads the pack. It's a leader, you could say. Jefferies also initially, they have stated that this is their top NBFC pick as well. And for Citi, if you look at it, they have stated that the overall credit cost is structurally improving as well. And now CLS is also important news flow coming in, and they have said that the company has proved itself as the Iron Man in first quarter of FY27. All across the numbers are pretty strong, and management tone is the most important trigger right now, and as of now the stock is up almost 7% in trade, so that we might see some volatility, especially in the con call.
Okay, well, what a move today by this one, and CLSA and Motilal Oswal, both of them at the same time upgrading it. Let's talk about what's happening per se to the markets at large and financials individually as well. Dinshaw Irani, CEO of Helios Capital, with us on the show with his glasses. I haven't seen him as yet. Yeah, these are sober glasses. Okay, maybe the markets don't need that funk right now. Dinshaw, is it?
No, actually, I found out that those glasses were impacting the markets, so I changed them. Now it's coming up. So
Dinshaw, that okay, we should have an algo for whenever Dinshaw Irani changes glasses, what happens to the markets. Never know. You might get a premium for it.
Yeah, I guess so.
On a serious note though, Dinshaw, great having you. Thank you so much for joining in. And the tide seems to be turning a bit, right? We were talking this morning about how after so many months of a decline, July has seen a reversal in FI flows, in addition to, of course, you guys, which is the domestic institutions piling on the cash every single month. The tide seems to be turning.
Actually, Neeraj, you're right, because if you've seen, June was the first month when India started really outperforming, appreciably outperforming the region, the emerging markets, and the world indices. I think that has made, if you remember last time when I came on your channel, I was very clear that we're not hurting them enough to come back. And now with this performance coming in, I think there's some kind of a feeling that, you may miss out something in India. And frankly, I mean, the results are itself looking very good. So if you've seen the June quarter, actually March quarter was pretty good numbers in terms of the mid cap and small cap. Even in the June quarter, it seems like the mid caps and small caps are doing fairly well. So I think this is active money which is coming back. Passives are still holding on, but active definitely is coming back.
Dinshaw, hi, morning, Alex here. So I'm sure that you've been looking at what's happening in South Korea, and of course that market looks incredible this morning, but I think a lot of retail investors have lost money. Then there's a large fund that you've also probably read about, AI related, that had to be bought out. So it's all happening on the global stage, right? So do you anticipate that some of that is going to have a bearing on flows into India?
So actually, see, the point was that why was getting Korea and Taiwan both getting hammered was mainly because of the fact that the kind of capexes the assumption was that the capexes may stall, but with the numbers out for most of the hyperscalers, the capex, if anything, have gone up. In fact, Meta suffered, despite a healthy top line growth, suffered on the bottom line because of the kind of capex that he's getting into. So I think that's got the funk back into the markets like Korea and Taiwan, the semiconductor heavy markets as such. I don't think that is what is going to impact India to an extent. India has not been an AI play. I think India is more of a domestic growth story play. You were talking before I joined, you were talking about Bajaj Finance numbers. They're nothing but the reflection of consumption in India. I mean, those massive numbers which came out, despite a quarter which was affected most of the time by war and inflation picking up because of crude, consumption didn't hold back. I think that's what's exciting everybody around, and we've been calling this out all along that we're more comfortable with domestic growth stories rather than the export-driven stories as such.
Dinshaw, very good morning. I recall you having a very clear stance on Indian IT. And there seems to be a sense that when the AI trade fades or momentarily takes a pause, it's a benefit to Indian IT companies and, maybe rose-tinted glasses to look at them now. Are you, since we're talking about your glasses, are you finding a better vision of Indian IT right now, or the stance remains the same?
So, Tapanna, actually the AI trade fading is not going to help Indian IT at all. I mean, the call being taken was that these guys are getting hit, the AI-related plays were getting hit because of the China competition. Obviously, Shivon Sendon was supposed to catch on at some point in time in that where the token prices are going to come down. Basically, the compute prices were expected to come down. But that's not happening. And in fact, even if it does, means more and more companies will be utilizing AI because they're getting cheaper for you to utilize. I don't think that story plays out for IT at all. In fact, we were very clear, even this rally which happened, we were never shaken. We were very clear that we're not going to get sucked in because we always felt it was a value trap. Again,
You felt no FOMO. You felt no FOMO at all when you saw Infosys, TCS rebound the way they have just in the month of July.
So, okay, FOMO would have been if I hadn't had Eternal as my top holding, which was up. It was up more than the IT players were up this month itself. Or for that matter, Paytm, which is my top 5 holdings. I would have definitely had a FOMO then. But we were quite happy with what we were doing. So we were standing still.
Okay. Dinshaw, the other thing is just the, how do you say, this whole uptick that has come into manufacturing, right? And companies are building up their gross blocks. The gross margins are northwards of 50%, zero debt, and expanding globally. It's a very wide bucket, and maybe auto ancillaries or these aerospace defense-led precision manufacturing companies are at the forefront of this. What do you make of it? Because we recently, 2 or 3 days ago, I think Sona Comstar said that they plan to grow 10x in 10 years. People are giving some very insane projections. How do you pick winners in this bucket if you like it in the first place?
So actually, Neeraj, good you asked me that question because not only the outsourcing story or even the domestic story is catching on. If you've seen the kind of capex spends, by the most of the annual reports are out for FY26, and if you look at the capexes that these guys have talked about or have undertaken till now, 20% growth in capex, private sector capex, that is. Even this quarter, the corporates which have gone on call, they're very clear that capexes are bound to happen for them as such because one, utilization levels are almost to the brink, and secondly, they want to see the markets. They're seeing their markets expanding, and they want to go in there. So that also is playing out. And frankly, as I have said earlier, also that China currency, India has depreciated quite a bit against the yuan, and that has made India very compatible in these outsourcing stories. In fact, that is why you'll find that when you see our July portfolio, you'll find that we've topped up quite a bit on auto ancillaries, on precision engineering companies, and stuff like that. Don't ask me names because I can't give out, because those are all not public data. As I always say, that my compliance guy is always very unhappy when I'm on the TV, so I don't want to make him any more unhappy. So.
That's a good point. Then, in some of the schemes, of course, and of course, y'all are bottom up, and you've got that the list that you exclude, your exclusions list, what you don't want to invest in. That's your strategy, right? But having said that, in the banking space and in the financial space, obviously, because of the way the market construct is, you have a fair bit of allocation. What is the thinking there? Because that's not going to be a huge driver of earnings, even though earnings or rather disbursements are growing at a healthy clip, 17% odd.
So if you've seen our portfolio over the months, you would have realized that in the BFSI segment, the B is becoming smaller, which is banking is becoming smaller as a proportion. And the financial services is the one which is really gaining pace for us. I think that is where the real fun lies. Obviously, when you're talking about consumption, you have to talk about the financiers to the consumption. Banking, unfortunately, there was a lot of competition, not only from the public sector, but also because of raising of deposits and with the new FCNR Bs coming in. I think that'll give them a breather, but the competition continues with the government borrowings moving up, and also getting the deposits in place will be an issue. But having said that, that's why we are more keen on financial services rather than anything else in that space. And that also is consumer-facing finance companies. Obviously, one of the big financial services companies is Bajaj Finance. You've seen that it's a good portion of our portfolio also, and continues to remain. So that's where we're focusing more in the BFSI space.
Okay, so you're liking Bajaj Finance, you're liking the FSI more in the B. What about all of the other ideas that have become very exciting, your engineering side, your data center plays? Are those something that you're looking at positively and continuing to look positively?
Well, data center plays, we are very clear that when the world doesn't want it, I mean, we're setting them up. I don't see much being played out there. It's more of a rental yield model that will work out there rather than anything else. So that's why we're not too keen. However, the guys who are supplying to data centers, I think those are the guys you're looking at, mainly the EMS guys and so on and so forth, where we have quite a bit of exposure. Also, the new PLI schemes which are coming up, these are also very exciting, and that's why you notice that most of the holdings that we had, we upped our stake in those also as such, because we believe that is where India has an edge as compared to the world. In terms of AI, we've lost the bus, so I think this is where we want to be, and this is what's going to carry us forward.
Got it. All right, Dinshaw, always an absolute pleasure speaking with you, and thanks so much for taking the time. And look forward to you visiting us next time, perhaps in our studio. We'd love to get a closer look at the glasses. All right. Well, on that note, that brings us to the end of this edition of India Market Open. It's been an absolute pleasure bringing it to you from Neeraj, Tamanna, myself, and the team that put this show together. Thank you so much for watching. Up next is Ask Profit, so keep your questions ready. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो, मतवारा
सफल बनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
What if your gut was affecting more than just your digestion, your mood, your sleep, even your immunity?
The gut-brain connection is no myth. It's a living reality.
This week on NDTV Lifeline, discover how your gut influences your mind, why bloating and stress are often connected, and the simple habits that can transform your health. Only on NDTV Profit.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin above $64,000 levels on macro-driven moves. Institutional crypto trading hits a record 72% growth in the first half of calendar year 2026. South Korean crypto trading surges amid stock market plunge. And SEC is ready to act alone if Clarity Act fails, says Chairperson Paul Atkins. Well, the Bitcoin is above that $64,000 levels mark on the macro-driven moves. Remember, there was a sharp rebound in the semiconductor stocks, which is aiding the sentiment, and roughly $32 million of net inflows were recorded on July 29, successfully ending a 4-day streak of net outflows. Now, if you look at the institutions, they have accounted for roughly 72% of the spot trading volume on its over-the-counter desk during the first half of 2026. This is the highest share on record and a sharp increase from 61% last year. Now, this shows the acceptance of crypto amongst the institutions. Also, the crypto trading volumes have spiked in South Korea as its stock market fell nearly 18% this week. Of course, there was a little bit of recovery in today's trading session, but nevertheless, the South Korean exchanges have seen a 600% uptick in the crypto trading volumes, around the same way the Kospi has declined. Well, looking at the US Securities and Exchange Commission is no longer waiting on Congress. SEC Chair Paul Atkins has stated that the agency is ready, willing and able to create new crypto rules if its own lawmakers fail to pass the long-awaited Clarity Act. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. And if you'll be looking at the key crypto, all of them are in a very, very thin range. Bitcoin is just almost flattish in the last 24 hours, slight dip in Ethereum, but most of the crypto is in a very tight range, and the support resistance comes between that $64,000 to $66,000 mark for Bitcoin. But now let's take a look at the crypto strategy for the day. Here's what's there you should keep in mind today. The market outlook overall looks cautiously bullish right now. Remember, there is a macro optimism at play, and because of that, some technical moves are there. Whether this will sustain or not, let the time decide that. Narrow range of trade is still expected, and if you have to trade, the Bitcoin range is also very shallow between that $64,000 to $66,000 mark. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani, and with me is Soumit Sarkar, and this is a show, of course, that gets all your stock-related queries answered. Let's take a quick look as to how the markets are doing at the moment. I think it's been a resilient market so far, is what we've seen, and today, we've recovered from the day's low point quite significantly, and now trading around with gains of just 0.1%, but still holding above the 24,300 levels for the Nifty 50. Let's try to pull up the heat map and see as to what are the counters that are contributing positively. You have names like Bajaj Finance topping that chart on the back of strong Q1 numbers. Both twins, in fact, doing very well. Finserv also up by about 4%. Mahindra and Mahindra, we saw a recovery in the stock in the last couple of minutes, and today also it's up by about 2.9%. Hindalco is the other one which is doing very well. Geo Financial, yet another day of good gains coming in for this one. Shriram Finance back in the green today. But on the flip side, you have a lot of your IT names that are seeing profit taking. TCS, Infosys, Wipro, Tech Mahindra, all of them seeing downtake of anywhere between 1 to 2%. The Bank Nifty, if you can try to pull that up, is also almost trading flat, still around the 57,100 levels. It'll be crucial to watch as to how today's day ends for the Bank Nifty, because we're now almost at the day's low point for this one. Let's also pull up the mid cap 150 and the small cap 250. The mid cap 150 is up by about 0.4% and the small cap 250 is up by about 0.6%. Both at the day's high point, almost, slight downtick from the high point, but still trading much better as compared to where the benchmarks go. So that's with regards to where the markets go. But let's also try to focus in on Karnataka Bank. Let's try to pull up the stock and see as to what it is doing in trade today, because it's it's been a good quarter for the bank, but overall the stock not reacting in that way. But to understand as to how things have shaped up and how things are going to look like going forward, we are now joined by the management. We're now joined by Raghavendra S. Bhatt, who's the MD and CEO of Karnataka Bank, joining us now. Mr. Bhatt, thank you so much for taking out the time. You've seen a good growth in terms of where your loan goes. It's been a sharp 17%, overall. Just want to get a sense as to what are the levers from here on to see this kind of growth, and whether this loan growth is sustainable in the next quarters as well.
Yeah, good morning, and thank you for the opportunity. Yes, we have seen that tough time last year. From there, we started growing every quarter during the previous financial year, also continuously going up as far as retail and mid corporate is concerned. And Q4 of the last year was very good for us, and whatever actions taken by the management started yielding the results. The same is continuing in the present quarter also, in the just concluded quarter also, next quarters also. And we were focusing on the growth in retail and mid-corporate that started yielding good result, as I mentioned earlier, particularly after 15 regional retail centers started. And going forward also, I am quite confident that it will yield result. Because of that growth, bank as a whole has come up or presented ourselves better in every parameter.
Okay. Net interest margins that improved to around 3.2 from 3.07 that we had seen in the previous quarter. Can we expect, is there further room for expansion when it comes to net interest margin, or this will remain at the current levels for the rest of the financial year?
Yeah, it was as low as 2.72 in one particular point of time. Continuously afterwards, it started going up. March end, I was focusing on crossing it 3. It has crossed overall, though it has not crossed for the full year. In the Q4, it crossed 3%, and in the current quarter also, it has further improved to 3.28, and further it will improve. I am quite optimistic. It will be between 3.30 to 3.4, 3.45.
This 3.30 to 3.45 number, is that achievable by the end of this financial year or the next financial year?
This financial year end, I am very much optimistic that I will achieve.
Okay. Mr. Bhatt, with the ECL transition underway, what is the kind of impact that you're expecting, if you can help us quantify that?
Yeah, since our, you must have seen the capital adequacy ratio has continuously showing improvement, and it has further improved in the just concluded quarter also. Going forward also, we will improve further that. Taking that into account, ECL will not affect much. No doubt, there will not be any effect on the P&L account, but no doubt there will be effect on the, because of the, to the balance sheet, there will be some effect, 1 to 1.5%. Of course, regulator has allowed the banks to spread it over to the next 5 years. So 1 to 1.5% effect will be there on CRAR. P&L account, there will not be any impact.
So obviously, in the first quarter, the NPAs have improved, or the asset quality for the bank has improved. But any hint or any kind of indication that because of the Middle East war, there could be some impact on the MSME book? Any kind of indication on that front?
No, even with the Middle East war also, in the Q1, you may see there was improvement in the just concluded quarter, and going forward also, it will be further improved. See, the two things here. One is recovery of existing NPA, other one is prevention of slippage to NPA. We have strong, robust system. Because of that, while onboarding the customer itself, only quality cannot be compromised. This is our management theory. So going forward, we will ensure that there is no slippage to NPA. That is one thing. Secondly, recovery under NPA is the second task, which we are focusing on that. There is continuous improvement, particularly after Q2 of last year. And going forward also, efforts will continue for recovery in the existing NPA. Slippage, we will rather further improve. It has improved. We will focus for further improvement.
All right, Mr. Bhatt, thank you so much for taking out the time and helping us answer all those queries, and all the best for the remaining year. But with that, viewers, time to take a look at what you want to know about your stocks, and to answer all your stock-related queries, we are now joined by Rahul Sharma, who's the head equity research at Equity 99 Investment Advisors, and Sameer Darar of Natwalal and Son Stockbrokers joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. I'll start by taking a query which is coming in the IT space, and because we're seeing profit taking coming in today, Rahul, overall, what's your view on the IT names, and if you were to still play the bet, would you, and if yes, via which stock?
Good morning, and thank you for having me on the show. See, definitely IT pack as a whole, we have seen a great moves entirely in this week, and if I'm not wrong, for the whole month, like the IT pack has been really good on the upward direction. For the week till now, for the week till date, we have seen a good 6.5% jump on the complete sector. Out of that, I think the most of the stocks which have made really well, the names will be Coforge, Infosys, Tech Mahindra. So I think this particular AI news flow which has been happening globally, that is the impact which we can see today on these stocks. But overall, if I'll say the Nifty IT, I think the Nifty IT pack is doing really good. And out of all, I think Infosys would be a good bet just because the stock has completely seen the bottoms, which were clearly near 1,000 levels, and now it is now currently trading above 89 days of weighted moving average. So I think this particular stock has good potential to reach on the upside where the 100 EMA is placed around 1185 to 1200 levels. So I think Infosys would be a stock to watch.
The next query is coming in from Murthy from Bangalore. He has bought 200 shares of Balu Forge at a price of 480. Any view on this, Samir, from long-term perspective?
This one.
Sorry?
We don't cover this stock. Balu Forge, we don't cover.
Okay. Rahul, on charts, any view on Balu Forge?
See, charts are particularly a little negative for Balu Forge. Currently, it is trading near the lower levels of the support, which is around 420. So I think these levels should be kept in mind. If at all this gets breached, the stock is likely to face a big fall, which can be towards 350 levels.
Okay, the next query is coming in from Christopher from Chandigarh. He is holding 1,530 shares of Fujiyama Power, bought at a price of 329. Can he hold this counter for the next 5 years? Samir, do you track this counter?
Yeah, we do have this, not under coverage, but we have studied this company. And look, the opportunity for growth for this sector and this company in particular is still there. I think one can definitely hold on to it. I think it has a lot of upside over the next 5 years. 5 years is a good horizon, but keep monitoring it. If it sees sharp jumps, which it has in the past, then valuations become expensive, take profit, but hold on is our call.
All right, so that's the view coming on Fujiyama Power. The next one that we have is from Satyan. He's asking about Philatex. It's a very small cap name, Rahul, but our viewer wants to know if he can buy this at the current market price for the next 3 months or not, and if yes, what could be the target and stop loss for this one? Philatex is the one I'm talking about. Any view on the counter, Rahul?
Yes, my view is to avoid it currently, just because we have seen a sharp upside momentum on this stock. The stock was trading around 45 levels when it was entering the June month. And from there, we have seen a massive jump towards 73, 74 levels. So stock has already been gone above the buying zone levels. So I think he should wait on. If at all stock gets a decline and good consolidation with volume is seen, so he can accumulate this stock around 63, 64 levels. But currently at 71, 72, it should be avoided.
All right, okay. The next one that we have is coming in on Bajaj Finance. Our viewer has bought 151 shares at the levels of 985 and wants to know if it's time to book profits or continue to hold this one from a long-term perspective. Samir, what's your view? Of course, your take on the Q1 numbers as well.
So the numbers were fantastic, right? One thing about Bajaj Finance is that they never disappoint when it comes to numbers. They've also upped their guidance on the number of customers they're going to get and the kind of loan book that they're going to grow. Again, we think growth is something that now is going to be more stable. It's not going to be the very high digits that we've been used to in the historical past, which is why the price to book value ratios have come off. Now the question remains is this going to be a similar story of what we saw with HDFC? Once they gain certain size, you cannot keep growing at an endless pace of 25+% because your base has become larger, and then eventually you're competing in a market where there are other players, and more importantly, you don't want to grow by giving loans just to grow the AUM and not getting them back. So I think Bajaj Finance has reached now an inflection point. So our bigger problem is not that the company disappoints or does anything wrong. It's just that the valuations, even though they've corrected, are still much more expensive than the rest of the industry. And if growth does not have the same significance, then why should it trade at such a premium to some of the other NBFC players, right? That is where we have a problem. So if you're a long-term investor and are okay with a 10-12% return, I think you can stay put. But I think there are far better not better, I'll not say better. There are far better priced NBFCs which have more upside potential. Those would be the ones that I would like to invest in at this point of time. But since you're holding and you're in profit and you're willing to hold for long, I think at best hold on, but don't add. And if you get rallies up, the stock like today you've seen 6%. If you see another 7-8% in the next say month or month and a half, I would book profits out of it.
Okay. The next query is coming in from Ram from Andhra Pradesh. He wants to know, is it a right time to enter MTAR Tech? Rahul, any view on this?
See, MTAR Tech, we have seen massive moves on the downside as well as on the upticks are available now. The stock is currently between its 100 and 200 exponential moving days average. So I think till the time it doesn't cross its 100 EMA, which is placed around 5,920 levels with good volumes, this stock should be kept in the watch list. And as soon as these levels are gone up, then he can enter this stock. Currently, if at all he enters, he should keep a strict stop loss at 4,840.
Okay, all right. So that's the view coming in on MTAR Tech, though of course you cannot make an entry today because it's locked in upper circuit. But moving on to the next one, I think the next one that we have is coming in from, it's coming in on PTC India. This is from Madhav, who's writing us from Hyderabad, asking about entering this counter from a long-term perspective. Samir, any view on PTC India that you can give Madhav?
Yeah, so I wouldn't enter this stock. I mean, there's so many different stocks that you can enter. PTC is not that exciting of an counter or anything phenomenal or going to be a multi-bagger from here over the next 3-4 years. For me, there are far better companies, so I would avoid this counter.
Right. The next query is on. Next query is from Prashant, and he wants to know whether fundamentally which one is better from long-term perspective, Nalco or Hindalco at current levels. Samir, your view?
So my view on commodities always has been that don't buy when the stocks have rallied as much as they have, for the simple reason that this usually rallies come when commodity prices are elevated, and commodity is very cyclical in nature. So we think that, we are at the higher end of the price range. At some point in the next year and a half, you will see prices coming off again. And at that time, these stocks will correct. But if you have to pick a player for the longer term, the one I would pick between these two is Hindalco, for the simple reason that they are so vertically integrated when it comes from mining all the way to final product, thanks to the US assets that they own, that is Novelis and the other one. That even if there is some correction in prices, they don't have to scout for consumers or customers. They already have their sales. It's just the profitability takes a hit a little bit. But like I said, not a right time to buy any of them, but to pick one, Hindalco would be the pick.
Right. The next query is coming in from Jason from Bahrain, and he wants to know whether is it a right time to enter Vedanta from 1 year perspective. Any view on this, Samir?
Yeah, so I've always stated that, I'm not a big fan of that group per se. Having said that, irrespective of whatever, they've given good, decent returns for some of their investors. Vedanta, when you look at it from their now demerged entity, I'm guessing he's asking for Vedanta Limited. It's at best, I would say a hold and not a buy. Like I said, commodities have moved up. Whenever the price is correct, I think Vedanta by itself will also face a bit of tough time. So I think the best for Vedanta in the next 2 to 3 years is behind. I don't see that much upside, so I would avoid it as well.
Okay, the next one that we have is from Murthy, who's writing us from Bengaluru, asking whether this is a good time to enter into either Infosys or ICICI Bank. Rahul, any of these where charts are looking attractive or none of these? And if you can give our viewer any other pick that you have in the in your radar.
No, I think if at all the horizon is for long term, I told in the beginning also, Infosys looks good to me. It has already shown us that it has good support near 1,000 levels. So keeping that in mind, he can definitely invest in Infosys. The stock has got good potential to reach upside where the levels are coming near 1,300, 1,400.
All right, okay. So that's the view coming in on Infosys. It's time for a rapid fire round. Samir and Rahul, try to keep your answers as short as possible to buy, sell and hold so that we can take as many queries as possible. The first one that we have is on Bank of Maharashtra. Our viewer Kishore from Hyderabad wants to know whether to hold, add or sell. What is the technical view on this, Rahul?
The technical view on Bank of Maharashtra is typically consolidation. Downside is 78, which is the support, and upside, I guess, 92 are the levels to watch.
Okay.
The next query is on CG Power. It's for you, Samir. The viewer wants to, Ashok Reddy from Andhra Pradesh wants to know whether should he hold on to this counter or exit, book profits and exit.
I think hold on for the next 2 years.
Okay. The next one that we have is on Texmaco Rail. Our viewer Rajesh from Bengaluru has bought it at the levels of 186. 500 shares is what he's holding. So he wants to know whether he can continue to hold this for the next 2 years. What would you recommend, Samir?
Hold on to it.
Right. The next query is on Dalmia Bharat. It's for you. Samir. The viewer wants to know he's holding few shares bought at a price of 1,718. Should he sell or hold?
So at best hold, but in the cement space, if you ask me, the right stock to be investing at this point is Ambuja.
Okay, the next one is on Havel. Zuma from Bengaluru wants to enter. Is this a good price to buy? If not this, what should be the right price, Rahul?
I think Havells, it is right time to buy at the current levels.
The next query is for you, Samir. It's on ICICI Bank. Sanjay from Bangalore wants to know whether should he buy this counter for the next 1 year.
No, not for the next 1 year. I think Axis is better. I think IndusInd is better.
Okay, Vari Energies, our viewer Sagar from Bengaluru wants to know whether he can hold, sell or add this one. He's been holding this since 3,100. Rahul, what would you recommend him?
For Vari Energies, see, the stock has seen major declines. I think currently it should be avoided. If at all the stock breaches 25-50 levels, it can see a massive declines.
The next query is for you, Samir. It's on Atlanta Electricals. The viewer is holding 60 shares at a price of 1,700 rupees. Should he continue to hold this counter for the next 3 years?
Sorry, no view on this one.
Rahul, anything on charts?
Clear, avoid.
Okay, the next one is on TVS Motors. Padma from Bengaluru has bought 31 shares at the levels of 3,310 rupees and wants to know from a long-term perspective, can she continue to hold or book profits? Samir, what would you recommend?
Hold on, please hold on.
The next query is for you, Rahul. It's on Rain Industries. Siva from Amravati wants to know whether should she enter this counter for the current market price.
Rain Industries, yes, definitely it's a buy.
Okay, the next one that we have is on Crompton Greaves. Ansh from Australia has 1,000 shares at the levels of 307. From a 1 year perspective, continue to hold, Rahul.
Sorry, which stock?
Crompton Greaves.
Crompton Greaves.
It's up 0.8%.
Yeah. So Crompton Greaves, I think at the current market levels, one should avoid, only buy above 280.
Next query is for you, Samir. It's on KPIT Tech. Ajay from Coimbatore wants to know the view on this counter for the next 2 years. Should he buy?
So accumulate slowly.
Okay, the next one is on L&T. Vijay from Chennai wants to know the short-term target on this one. Rahul, what would you suggest, seeing the charts?
I think definitely it's a buy from my side. The current levels looks good. The downside is limited and the reward is high.
The next query is for you, Samir. It's on Bajaj Housing. Selvaraju from Tamil Nadu has around 1,000 shares of Bajaj Housing bought at a price of 156. Should he continue to hold this counter or exit?
So for me, it's an exit at this point of time.
Okay, transformers and rectifiers. Is this the right time to buy this for the next 2 to 3 years? Our viewer Sagar from Bengaluru is saying that he's seen a fall of 30% from the peak. Samir, what would you recommend?
Disclaimer, I'm buying it, but yes, buy it.
All right, that brings us to the end of this rapid fire round. But with that, it's time to slip into a very, very short break. Don't go anywhere. We'll be right back with more queries on the other side. And Rahul, I'm told that we'll have to let you go. So thank you so much for taking out the time.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
What if your gut was affecting more than just your digestion, your mood, your sleep, even your immunity?
The gut-brain connection is no myth. It's a living reality.
This week on NDTV Lifeline, discover how your gut influences your mind, why bloating and stress are often connected, and the simple habits that can transform your health. Only on NDTV Profit.
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement.
We are joined by Mr. Tribhuvan Adhikari, who is MD and CEO at LIC Housing Finance. Well, sir, welcome at NDTV Profit. Pleasure to have you. So my first question would be, of course, what led to the sharp decline which we saw, in pre-provision operating profit? Were there any one-offs during the quarter?
Yes, there was a single big loan account which was offloaded to ARCs. The value was about 180 crores of the outstanding principal. So that was a one-off which helped us in this quarter, resulting. But overall, I think recoveries also were good. 540 crores of recoveries were made during the quarter. Yes, there were some slippages. So overall, I think this one-off did help us to quite an extent.
Understood. And sir, also on NIM, which contracted 22 basis points quarter on quarter to 2.58%. What is the outlook for NIMs for the rest of FY27? Can it decline more?
Well, NIMs are going to be a challenge. I think margin spreads and NIMs are going to be a challenge for this year. And this is what we are looking at very closely, keeping a very close watch on that. We are, I would say, committed to protecting our margins and NIMs. The guidance we had given in the beginning of the year, with a disclaimer that if the geopolitical situation, the economic situation stays or remains normal, we would be achieving an NIM of about 2.6 to 2.7. Right now, we are at 2.58. Just a tad below the guided, I would say, NIM, which we made in the beginning of the year. Yes, we are committed to protecting that guidance of 2.6% to 2.7%, though I believe it would be at the lower end of the guided path. So we should be closing the year close to 2.6, and we would do everything what we can to ensure that we protect the NIMs and the margins.
Understood. And sir, AUM growth remained muted at 4%. How do you see AUM growth trending over remaining part of FY27?
Our disbursement growth is good. If I talk of disbursement growth year on year in quarter one, we have grown by 14.5%. Last year, in Q1, we disbursed 13,116 crores. This quarter, we were able to bump it up to 15,014 crores. So disbursement growth is good. And AUM growth is an offshoot of the disbursement growth, though of course it is not going to happen immediately because there are also exits by way of loan prepayments, repayments, and BT out, as well as BT out. So we expect this book growth to creep up slowly. Yes, right now may appear to be slightly muted at 4%, but we have guided for a double-digit growth in the loan book, and we feel the way the disbursement growth is going at the moment, we should be able to achieve the guided path of double-digit growth in the loan book.
Okay, understood. And so going forward, will the focus be on protecting margins or, accelerating loan growth? Which of the two is the bigger priority currently?
Well, if you grant me a wish, I'd like to have both. But let's see. As I said, yes, we do want book growth. We do want loan growth that has been slightly muted over the past 3, 4, 5 years, growing at approximately 4-5%. The book has been growing at approximately 4-5%. We would definitely want it to grow at a double digit as well. Disbursements also have been slightly muted. We have not been able to achieve the budgets given to us by the board. This year, we are seeing a turnaround. Q1, the disbursement has been good. 15%, near about 15% growth, as I said. But yes, given a choice, or if I'm pushed to the wall with my back to the wall, Hobson's choice, I would like to protect my margins and maybe, touch wood, I don't have to do that. Maybe sacrifice book growth, but margins are definitely at the top of the agenda.
All right, so that was the management of LIC Housing Finance. Let's try to pull up and see as to what the stock is doing at the moment. It's down by about 2% and recovered slightly from the low point of the day, but still trading with cuts of about 2%. But let's also start now again with all your stock-related queries. And on this side of the show, we're also joined by Rajesh Bhosle. Very good morning to you, Rajesh. I'll take up the first question, which is coming in from Samira. She's asking about Bajaj Holdings, bought the levels of 11,400, and from a 9 months perspective wants to know if this is the right time to continue to hold this one, or what should be the course of action. Rajesh, what is your view on the charts for this one?
Hi, good morning. So overall, if you see, we are seeing a strong structure in Bajaj Holding. The stock is continuously moving in a higher top, higher bottom structure. And we are now seeing that prices are sustaining above 200 EMA after a long time. And it has also surpassed its previous swing. So we are having a positive bias with a stop loss of around 10,800. We expect the stock can extend its move towards 12,000. So hold on to it. Very positive structure both on the daily as well as weekly chart.
Okay. By the way, for viewers who are tuning in, you can also give us a call on the number that will be flashing on your screen up there and ask your queries live for sure. PG Sharma did call us, but I think his call has been dropped. But we do have his query. He's from Ghaziabad and asking about AWL Agri Business. He's got around 500 shares, bought at levels of 189. Wants to know as to what should be the next course of action. The stock is up 2% today. Rahul, I'll stick with you for this one. Seeing the charts, what would you recommend, Mr. Sharma? Rajesh, sorry, my bad. Yeah, this is for me. Yeah, this is for you. Sorry, Rajesh, this is for
you. So the stock did see a gap up opening, but that gap is not sustaining. In fact, if you see, there is a multiple resistance around 198 levels. Once that is crossed, then we can see momentum towards 210 to 215. As of now, it's in a no trading zone. We'll wait for it to cross 198 levels. But on the lower side as well, if we see somewhere around 180 levels, there is a strong support. So as of now, if any positions are there, keep it with 180 as a support. And once 200 is crossed, then we can expect strong momentum.
Okay, all right. The next one that we have is from Subrata Mukherjee, who's writing us from Kolkata, asking about Dr. Reddy's or Dr. Lal Path. Which one is a better bet from a long-term perspective for the investment. Samir, I'll come to you on this one. What would you recommend?
Both are actually good. One is catering to the domestic diagnostic market, which is also growing. Preventive healthcare is growing. We think the operating leverages of this business are also extremely good, given the fact that after break even of a center, every additional test that you carry on leads directly to the profitability of that center and overall for the company. So, good business model, good growth opportunity there. Dr. Reddy's is a very different place. So, comparing these two is very odd. But Dr. Reddy's is more of a focus on the export of pharma medicines. Of course, they cater to the domestic market as well, which is a large share, which is also growing. But where I think if I had to pick, I would pick why I pick the export businesses. I think the opportunities that exist still for Indian pharma in the US and European market are extremely strong. They have a biologics arm, which is also gaining momentum. Once a few more drugs get greenlit out there, I think the growth would be quite good. So if I had to pick, I would pick Dr. Reddy's, but they're two non-comparable and both are good.
Right. The next query is coming in from Prem from Hyderabad. He has 72 shares of ZF Commercial. Actually, the query is for you, Rajesh, so you might have to load the chart. ZF CVC or CVS is the ticker here. He has bought 72 shares at a price of 2,696. He's sitting on a loss. Should he continue to hold or exit? Rajesh?
If you see the stock is trading around its multi-month swing low. So if you see the past multiple times, the stock has bounced from the levels of around 2200. So overall the chart structure is negative, but it's placed around its strong support. So hold on to it, keep a stop loss below 2200. Immediate resistance is around 2500, which also coincides with recent trading range and 200 DMA. Once 2500 is crossed, then possibility is there that the stock can rebound towards 2600 to 2650. So as of now, hold with a base of around 2200 levels.
Okay, all right. So that's the view coming on ZF Commercial. The next one that we have is on CMS Info Systems. This is from Lakshmi, who's writing us from Telangana. She's been holding 75 shares since the levels of 348. It's come down to 263 now, and wants to know as to what should be the next course of action for her. She's taken a slightly long-term approach, Rajesh, but on the charts, what would you recommend her? 6,000 odd rupees is where she's where her losses are sitting at, but continue to hold or book losses?
See, so as of now, I suggest to hold on to it. Overall chart structure is definitely negative, but if you see during the April as well, the stock was trading around the same levels of around 255 to 250 levels, and then there was a strong move towards 320 levels. So historically, this has been a strong support. Even if we see the RSI, we are seeing a positive divergence that is happening. So for now, hold on to it. Once it crosses 280, 85, then we can expect some momentum towards 300 levels. So as of now, it's on a strong support, so hold on to it.
All right. Okay. So that's the view coming in on CMS Info Systems. The next one that we have is coming in, and this is from Chandra, who's writing us from Germany. This is for you, Samir. He's got a generic query. What he's saying is that he's got a lump sum amount of that he wants to kind of invest for the next 3 to 5 years. What are the strong conviction counters that you believe could give him good returns, and also a view on Gravita India, if any?
Counter lastly, you said?
Gravita India.
Gallant?
Gravita India.
Oh, Gravita India. Okay. So, first of all, to address the first question, since you have a lump sum which you want to invest, my point is diversify. Don't look for one or two particular stocks. Since you're investing in India, two things you can do. One is focus about 60 to 70% on the India-focused markets. Some of it can be in consumer discretionary, which can be spread across QSR, retail, and auto. Then I would look at something in the capital market space, like something like a Motilal Oswal or something like a Nippon Asset or HDFC AMC, which is fund management, which is doing extremely well, growing businesses, very high cash generation, those are kind of things I would do it. Banking and financial is some investments I would also make. And in that, I would try to, buy one large cap bank and one mid cap. In the large cap, I would suggest HDFC Bank. In the mid cap, I would suggest IDFC First. These are the two picks that I have. And then the balance, you can put into some amount of business where we do exports. So maybe an auto anch, something like Sona BLW, where they focus on a lot of exports. Motherson Sumi is there. Those are the two which we think are good. You can look at an IT counter at these valuations. Now the downside is limited. Yes, you may not get near-term returns, but maybe look at a TCS or an Infosys. And in the pharma, I think Sun Pharma is the one that I would focus on. So you get a mix of everything, but diversify that money into 10. And as for Gravita India, great counter on the recycling space. Look, this is a space that is only going to keep increasing as more and more things get changed, upgraded. You need to recycle the older products, and they are in the right space. It's just that valuations are a little bit high, and for this business, you require a lot of upfront capex. So this is a capex heavy business, which the returns are great. It's 22-23% ROEs. But growth is going to be coming after capex, so that becomes the one slowdown. That growth may not be as great as we want it to be, and valuations have moved up in place of that.
Queries coming in from Astha Sabharwal. It's on Manorama Industries. She's holding few shares at a price of 1,576. Should she sell or hold? Rajesh, any view on this?
So as of now, I suggest to hold on to it because every dip towards short-term moving averages is getting bought into. So hold on to it. Keep a trail stop loss of around 1550 levels. On the high side, resistance is around 1680, and once that is crossed, then possibly the stock can extend towards 1800 as well. So as of now, hold on to it. 1550 can be the stop loss.
Okay, all right. The next one that we have is coming in, and this is on Giant Resource Recycling. Sitesh Roy has bought it at the levels of 343. 300 shares is what he's holding. He wants to know the short-term target on this one and a stop loss as well. Rajesh, on the chart, it's up 2% today.
So if you see during May, there was a sharp crack in the stock prices. It slipped from the levels of around 550 to current levels of around 350. So recently there has been a sharp panic in the stock. Some kind of bounce back is there definitely, and maybe it can extend towards 365 to 370 levels. So hold on to it, but once it comes around 365, look to exit. As a stop loss, 335 can be kept as a stop loss. Multiple lows are there, and once 335 is broken, we can see a resumption of downside.
Right. The next one that we have is also for you, Rajesh. Shankar from Bengaluru is planning to buy around 1,000 shares of IDFC First Bank. By the way, he's asking this question since a really long time. So, Shankar, we'll also again get this answer for you. But between IDFC First Bank and South Indian Bank, he wants to know which one should he buy at the current market price? Where is the chart looking more attractive?
So both are looking attractive, and they have outperformed the small cap banks, and we expect this positive momentum to continue. I would suggest to diversify in both of them, but at current levels, as I highlighted, they have already moved. So if in case South Indian Bank dips back towards 45, 44 levels, that would be ideal. And for the IDFC First Bank, we have seen sharp vertical rally from the 58 levels to 88. So we'll wait for a proper dip towards 80 levels where the stock can be entered.
Okay, the next one that we have is from Suman, who's writing us from Kolkata, wants to know from a long-term perspective whether to go ahead and buy NTPC or JSW Energy right now. Which one is a better bet according to you, Samir?
So between the two, I'd pick JSW Energy. But if he throws in NTPC Green, then it makes me NTPC has its old thermal assets and all, which are generating power, which is great. But NTPC Green actually is a very interesting play given the kind of capacity additions that they're doing. which is going to lead to a huge jump in profitability going forward, right? The cash flows once all these plants are up and running. JSW Energy is also going through the similar kind of expansion. So if I had to pick between NTPC and JSW Energy, at this point I would put JSW Energy. But if you put NTPC green there, that would move up in the ranks.
All right. Okay. The next one that we have is coming in on Acutaas Chemical. Viraj from Vijayawada has bought 16 odd shares at the levels of 3,500, and he wants to know as to what price range can he expect for this one going forward. A slightly long-term approach is what he's taking. On the charts, your view on this, Rajesh?
So if you see, after making high of around 3,700, the prices have slipped, and we are seeing some kind of double top kind of formation. So in the near term, he can expect some price correction, and possibly levels of around 3,000 can be retested, but somewhere around 3,000 we see strong support. That is also its previous swing low and 50 EMA. So in a very short term, downside is expected, but on a high time frame can hold on to it with a base expected to form around 3,300, 3,000 levels.
Where is coming in from Anjani from Bangalore. He wants to know whether it's a good time to add Mahindra and Mahindra and Coal India for long term. Any view on this, Samir?
So Mahindra and Mahindra, yes, buy on any small dips that you get. I'm not saying it's not good even now, but I'm thinking it's gone up in the last few days. I think if you go back maybe a month, it was about 2,900 low. So if it comes around those levels, I would strongly advise to buy. Even at these levels, it's good. So keep accumulating it. And which was the other counter you said?
Coal India.
For me, Coal India, if you're looking for a pure dividend yield kind of play, 6-7% and maybe 3-4% stock appreciation, I think that's the play. But no, I mean, as from an equity perspective, no, I would not invest in Coal India at this point.
Okay, pre-call is the other one. Ray from Bengaluru is holding 100 shares, bought at the levels of 633. A medium-term target on this one, and what is the resistance and support levels on the charts, Rajesh?
So very strong chart structure. If you see, the stock has seen vertical rally from 550 to 710, and it has now also crossed the Jan swing high of around 680 level. So very strong structure. If you see reciprocal retracement level, possibly if it keeps position held for around like 3 to 5 months, possibly the stock can head toward 760 to 770 level. And on the downside, any dip towards 670 is likely to get bought into. So very strong chart structure.
The next query is from Kalpana Vishwanathan. She wants to know whether can she buy Sona BLW at the present rate. Samir, any view on Sona BLW?
Yeah, so it was one of the counters I recommended earlier in the show. I think it's a great investment from a long-term perspective. The kind of parts that they are making for the EV space, the new products for the railways, they've made an acquisition where they're doing. So, unfortunately, the only problem with Sona BLW is the price has run up recently. Any corrections closer to 650, 700, I would be jumping in and buying. Great counter even from here, but just the fact that it's run up so much, I say wait for a correction before you buy, but this is definitely a counter to own for the long term.
Okay, the next one is also for you, Samir, and I know the answer to this one, but I'll still, ask because NTPC you've already talked about, but our viewer now wants, Sarath from Tirupati wants to know whether NTPC or SW Solar, which one is a better bet from a long-term perspective. He wants to know if he can switch, in fact, from NTPC to SW Solar. He is already holding 51 shares, bought at the levels of 344 of NTPC. What would you recommend?
So SW Solar is something we are very, very bullish on. We've been saying this for a while. But now it's kind of in the renewable energy space, given the way the stocks have corrected. You can look at Vari, you can look at Suzlon, you can look at Inox Wind, all of them. If you look at it, it's a buffet of stocks you can pick from. The only reason we are picking, we also have Vari Energy in our buy list. We also have Inox Wind, Suzlon in our buy list. But the only reason I'm sticking my neck out a lot on SW Solar is the parent company of Sterling and Wilson, which I've discussed, is Reliance, which is going to be doing huge investments in solar parks in Gujarat, which will start in the next maybe 3 to 6 months, if not already. And once the orders go out for the EPC work, and which we believe SW Solar will at least be able to get 30% of it. Even at 30% of it, you're talking of the business doing exceptionally well, and valuations on that expanded top line, and profitability looks very, very cheap from that angle. But otherwise, the entire buffet is there right now. Go ahead and pick any one of these renewable companies. I'm sure you'll make money 2 years down the line.
All right, okay. It's time for our rapid fire round now. You both know the drill, Rajesh and Sameer. Try to keep your answers as short as possible. The first one is on lemon tree. Srinivas from Indonesia wants to know if this is a good buy right now. Rajesh, on the charts.
Yes, can hold on to it and buy.
Okay.
The next query is for you, Samir. It's on Torrent Pharma. Ashita from Hyderabad is holding 25 shares, bought at a price of 3,403. Should she continue to hold or sell for long term?
Hold it.
Okay, the next one is on Suzlon. Considering that the Q1 earnings were not at all attractive, a 3 to 5 year view. Saranya from Hyderabad wants to know. Sameer?
So I don't think the earnings were bad at all. They've done the highest sales they've ever done in Q1. We think it'll go from strength to strength. This is a great correction. Please go ahead and buy.
The next query is for you, Rajesh. It's on Canfin Homes. Baswaraj from Bangalore has bought 139 shares at a price of 808 rupees. Should he average, hold? What should he do?
Hold with a stop loss of 790.
Okay, the next one is on HDFC AMC. George from Bengaluru wants to know if this is a good time to enter this counter right now. Rajesh?
Yes, and can be added.
The next query is for you, Rajesh. It's on HDFC Life. Anuj from Delhi wants to know whether can he buy HDFC Life at current levels or wait.
Yeah, it's on a multi-month swing low, so definitely can be bought.
Okay, the next one is coming in on Happiest Minds from a long-term view. Shashi from Bengaluru wants to know if this can give a good upside. Sameer?
I don't have this one uncovered. Sorry.
The next query is for you, Rajesh. It's on Sagility India. Shankar from Bangalore is holding around 1500 shares, bought at a price of 41 rupees. Should he continue to hold or exit?
Yeah, continue to hold for a levels of around 50 levels.
The next one that we have is coming in from James. He's asking about M&M and wants to know if this is a good buy right now. I think we've taken the fundamental view. Rajesh, a quick take on the technicals.
Yeah, technically, the stock is in momentum, so we can expect a movement further towards 3600. So yes.
Next query is for you, Samir. It's on Laurus Labs. Mohan from Coimbatore wants to know whether should he continue to hold Laurus Labs or exit.
So I think hold on to it. It's just that valuations have run up so much in the recent past, but otherwise it's a good counter long term. But I think it's going to be a slow mover in the near term. So just hold at best.
Tata Power is the other one from a long-term perspective. Lavanya from Chennai wants to know if this is the right level to purchase. Sameer?
Yes, please go ahead and buy this also.
The next query is for you, Samir. It's on MCX. Suresh from Indonesia has around 420 shares, bought at a price of 1,766. Is it a good time to add more?
Absolutely not. In fact, I have a sell recommendation on MCX. I think the best for MCX is happening right now. Things cannot get better. And if for whatever reason volumes dip because volatility in commodities comes off, stock can correct significantly.
Okay, Cupid is the other one. 100 shares is what Radhakrishna from Bengaluru has bought at the levels of 230. Buy more. Rajesh, on the charts.
I wouldn't buy more, but can hold on to the current positions.
The next query is for you, Sameer. It's on Mazgaon Dog. Kaushik from Baroda has few shares, bought at a price of 2,883. What's the fundamental view? Should he continue to hold or exit?
If it comes to 2,000 levels, buy. Not an exit, but if it comes down further, average out.
Okay, Patel Engineering, 100 shares bought at the levels of 54. Sumana Mukherjee from Kolkata wants to know whether to buy more and average. Rajesh?
If it dips around 25 levels, then he can add more.
The next query is for you, Rajesh. It's on Zentech. Mangaldas from Goa is holding 155 shares, bought at a price of 1,916. What should he do? Should he average or exit?
Can hold on to it, but in the near term, if it dips towards 15-30 levels, then he can average.
Alright, okay, that brings us to the end of this rapid fire round as well as Ask Profit. Rajesh and Sameer, thank you so much for taking out the time and helping us answer all those stock related questions. In fact, we've managed to answer 60 queries along with 2 management, so not bad per se, but like I said, completely out of time on this edition of Ask Profit, but do stay tuned in because KYC is coming up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies, and right now the earnings season is there and I've got you a very interesting company. But before that, try to guess which company I'm talking about. First hint I would like to give you, it's a Chennai-based tech solutions provider. Hardly two players are there in this industry. It will get very easy to guess by now. Second hint is it's an authorized reseller of Apple. Whenever Apple related news flow comes, there is a reaction in this stock. I'm sure you must be getting the name by now. I'll give you one more hint. For recently, the company came out with its strongest Q1 numbers. The benefits is because of the memory shortage and the price realizations happening. So this is the trend which we have picked up already in NDTV Profit, and now it's coming out to play as well. It's backed by Fidelity Group and there is no promoter. Interesting, right? The company in focus, of course, the shares have been in green, but the name is Reddington. This is the company I'm talking about, and of course, the logo is also green. So there is a contrast, but not for the investor returns. But why are we calling this company? First and foremost, it is the Q1 earnings season. The highest, you could say, PAT and revenue has been recorded. So we'll try to understand, is this one-off or a structural play for second or third quarter as well? And remember, there is a festive season angle also. Let's talk about the second key reason is how is the company evolving, especially, from the current levels to the future. Is there a change in the business model? Third question would be the guidance for the second quarter. This momentum, does this continue going ahead? There's a lot of trends being played out and all of them are positive for the company. The higher memory prices, is there any price hike we can expect, especially from Apple? Because the buzz in the street is there might be Apple 17's price hike coming in. The demand trends for the large enterprise clients, because this quarter they did win important enterprise deals, and also the Apple iPhone 17. That will benefit the company as well. Maybe a short-term trigger, but remember the stock has run up a lot. The growth outlook for the international business, because that has also done well, not as high as the India business, but nevertheless there is a positive momentum. Then we'll try to understand this, and of course the premiumization trend. Things are getting expensive, but so is our research on the AI data and as well as your overall setups in the IT space. But let's talk about the company itself. What does this company do? I'm sure a lot of you know about this company, but it's a revision for the people who know, and it's for the new folks. I'm going to explain it down as simple as possible. Chennai-based technology solutions provider, largely whatever you could say the communication devices or the digital devices are there, that's what the company sells. This is the presence which is there, and it's not only in India, pan-India player, but also they are having exposure in South Asia and rest of the world. This is the large network you can see, because their business model is such. It's a very important cog in the wheel. 168 warehouses and 71 sales offices. So this is a very simple business model. They have different products: IT, telecom, lifestyle, solar, cloud, enterprise, and the future, the way we are looking forward, we are going to need all of them which they sell. They're the largest authorized reseller for Apple as well. I'm sure a lot of fans of Apple are there, but right now you must be a little bit angry because the price hikes are coming across, and Apple recently raised these prices between 14 to 70%. Mac and iPad, it has already happened. So the company does benefit. To put it in simple perspective, it's just like a toll booth. Apple, 31% of the total revenue comes from this segment. Of course, the other segments are also there. We have a HP, a Dell as well, and most of them are hiking their prices because of memory shortage. This trend is likely to continue going ahead. So keep an eye on the stock. The revenue breakup, they call it SISA. SISA is very simple. It is Singapore, India and South Asia. That is where 60% of revenue comes. And if you look at the rest of the world, it's around 40%. So it's evenly balanced, if you analyze that. But moving on, after this revenue breakup, the Q1 numbers, just do that revision because everybody is talking about it. The India business, 63% growth coming in. Also, the second important point while tracking the numbers is the higher personal computer, the PC as you call it. Those realizations have went up, and even their margins have gone up. It's generally a very low margin business, high volume, but story is different now. Pricing growth is much there than the volume growth, and that's why they are benefiting it from it. Large enterprise deals were also won in this quarter, so that also aided the numbers. So 3-4 positive factors actually helped the company come with very solid numbers. The revenue growth, look at that. The global segment is 34%. The technology segment is 50%. This, of course, is the premiumization trends playing out. We have software, endpoint solutions, and mobility. All sectors hitting the out of the park, and that is where a lot of bullishness comes in the counter. But what may work for Redington? These are the 5 important points. If you can write down, share a screenshot with your friend, but this is the most important thing. Confidence in the large enterprise deals. That's where the management commentary is coming. The second one is the decent working capital management. In a business like that, inventory management and working capital management is very much important, and they have done well in this. Also, the margins and the realizations, they are likely to go up. For a business model like this, it's technically very low margin business, but from 1.5% to 2% is a very significant jump. Beneficiary of rising memory prices, that's the indirect story which I told you about. And also the FIs are slowly increasing their position. Remember, there is no promoter and FI heavy holding companies. They are almost 60 to 61% stake. But what may not work for Redington, the valuations are not at all attractive for a company like this. Its stock has run up, touching its all-time high levels. The demand determinant, of course, India is a price conscious market also, and because of the pricing going up, there might be a little bit of impact on the demand. Supply chain issue risk, of course, if there is a shortage of memory, there might be a shortage of products to sell. Also, the margins might not sustain, and there might be bargaining power of the overall of their wholesalers. They might ask them to reduce those margins. Large deals might be lumpy in nature because large deals don't happen all quarter. There are seasonality element to it. So that is why I'm giving you the second side of the coin for Redington as well. So we analyzed the entire picture for Redington and also what can work, what may not work. But what definitely works is the KYC rating. This is one of the most important things in our show. When we get you the core numbers, we get you the return ratios, how the business model looks like, and over a period of time we share with you the shareholding pattern as well as the street cred of how things move out over a time period. Interestingly, I have also taken the valuations. If you could show the rating parameters, the second plate, and then we will show you that the valuations is important, and there's just one company, I'll tell you the name, I'm not going to say it right now, where we're going to do a peer analysis. And lastly, the outlook, what lies ahead, and is there an Apple iPhone activity in the offing? That's what we'll try to understand. But let's talk about the income statement, how things have panned out. Largely, these numbers, when you look at it, 2.22%, this is the exact business model. So do not get a bit fear that why this margin is so less, because this is the business model. You need to understand that top line growth has been decent, 15%. But to give a little bit of benefit of doubt, the numbers in Q1 have been rock solid. So let's just have a look at the Q1 numbers to show you how important this is. A good jump coming back into that 2%. That's a very important jump. Top line going up almost 35%. So yes, we can see a very strong numbers. And because of that, I'm going to give this entire setup which we have given largely a strong thumbs up for income statement. Of course, the Q1 numbers is important for that. Let's talk about balance sheet, and remember, a company like this will have high working capital, so you do not get surprised when you see the borrowings, which is around 2600 crore. A lot of them are on the working capital aspect. The cash levels are also decent, but there's nothing much to actually track for a business model like this. For this company, they have some really good vendors, so the payment cycles are sorted. So I'm going to give this a neutral rating and move ahead. So we spoke about income statement, we spoke about balance sheet, and I mentioned you earlier that the working capital ratios have improved, and of course the inventory days, or you could say the other important characters which we check, that has done well. Largely, you see the numbers, the operational cash flow numbers, that conversion is pretty decent. There will be lumpiness in it. So to be honest, more than tracking the cash flows, you should be tracking overall the working capital ratios, and largely they have done well, but I'm going to give this a neutral rating. Let's move on from this and let's talk about the return ratios, and this is where my strength or in my thesis comes in for this counter. From FY24 it was 19%, but a very decent, a very low margin business, but stable. But look at that, the ROE ratios are maintained, and the story is the same when it comes to the ROC, the return on capital employed, and there's a good bump up in Q1 from the averages for both of these ratios. And if this continues because of the memory shortage, likely the ROC can hit the 20% mark. So as of now, it's a strong thumbs up when it comes to the return ratios. So shareholding, let's have a look what's happening here, and you must be surprised, Sharad, where is the promoters? So there isn't any promoter definition here. Largely FIs, VCs, Ps own the company, but in the definition of FI, DI publics, the stake hasn't changed, and the one good reason is there's some really good backers. They have Fidelity Group, which have a lot of stake in this company, and they've actually increased. A minor buying started already, and this is what I liked, an institutional support coming in. So it's a strong thumbs up when it comes to the shareholding, but the stock has hit its all-time high levels. But the question is, for the long-term investor, has the stock made any money or not? And the query is here. Last 5 years, only 90%. The stock has not even doubled. But congratulations to you if you are a medium-term investor or even a trader. You have made good money. From March lows, the stock is up 56%, and also from July lows, it's up 20%. So a good bet in the short term and medium term, but in the long term, it definitely has undertaken a very big chunk of the patience of the investors. So I'm going to keep this neutral in my rating. At times you have to be a little bit strict on your analysis, but this is the story. Let's talk about valuations, and valuations is a little bit of concern for me. This is the 12-month trailing P ratio I have taken, and you must be wondering which other companies there. Largely we don't talk about it. Company does the same work as Redington, plus minus here there on the product portfolio is Rashi Peripherals, but the valuations is high. For a business model like this is definitely high. It should be a single-digit P valuation, but look at that, it's up 20 times, and after the recent run-up, even Redington is trading at 15 times the 12-month trailing P. So as of now, valuations are not at all attractive for the entire sector. I would say you to avoid it, and it's a thumbs down when it comes to our analysis on this. Apart from this outlook, this is very strong. Memory prices are expected to rise more, and then a second order benefit comes to the company. Second important reason is the Apple's iPhone 17. That's where a price hike likely is there, and Apple iPhone 18 is going to be released in September. So definitely the company is in a good spot. The tech adoption that's accelerating across cloud AI enabled infrastructure. Just think about it. Your data prices have gone up. You're adding more equipment to your home office or all these segments, and look at that, and this has become a very important part of our expenses. Premiumization, in that also trends are playing out, and when there is a premiumization trend, remember the margin is something which the company gets on the higher side. So its outlook is also pretty strong. So let's give you the entire picture of the KYC ratings for Redington. Where does the thing stand? Income statement has been really wonderful, but take things with a pinch of salt for a business model like this when it comes to balance sheet and cash flow. Return ratios nicely maintained. Of course, Q1 numbers aiding the sentiment and also some of the numbers, but the stock that has run up, and largely for the traders and mid-term investors, it's a great news, but long-term investors, they need some time as well. Valuations not attractive. The stock has hit its lifetime high levels, so take things with a pinch of salt. Shareholding, interestingly, FIs have been increasing a bit of stake, and outlook, of course, remains very strong. So net, the company gets 5.5 out of 8. It's largely in line to positive from the average numbers we generally give out to a company in our KYC show. So this is the entire picture for the company. The analysis is done. We know about the company, but we need to know more, but from the management. So we'll be joined in by the managing director and group CEO of the company, V.S. Hariharan, and he has donned a lot of hats. 3 decades of industry experience, but not only that, he was an entrepreneur himself, and a very interesting company. It was called Third Wave Power. So he has actually entrepreneurship experience and leadership experience in HP, Wipro, Infotech, Sun. So that's how you can imagine how good he is in supply chain and sales, and of course education from IIM Bangalore and IIT Madras as well. So joining us, we'll have V.S. Hariharan with us. Good afternoon, sir. It's always a pleasure to have you, and a very stable business model, a very stable company, but this time it was very different. The Q1 numbers, what led to this growth, and how do you see it panning out?
Thanks so much for having me at the show. I loved your analysis, but I hope it is getting better than 5.5 next time. Anyway, let's talk about this quarter. I think we had a fantastic quarter, the best revenues and profits ever, almost 35,000 crores revenue, 35% growth, and 77% plus growth on profits. There are several factors that led to this growth, and it's not just the memory prices. So we are divided into 4 business units. So Software Solutions Group saw a growth of nearly 60%, and that consists of cloud security software, nothing to do with memory prices. That continues to grow because a lot of people are migrating to the cloud and software business, and AI is enabling growth there. The second part of the business which had strong growth is Technology Solutions. There is an element there on the server storage networking that got a bump up because of price rise, but the data center piece, we are beginning to win a lot of data center deals. This quarter was about 1,000 crore, but we have a backlog of many times that on data center. The movement to data centers in India because of the announcement made by the government on tax holiday and the a lot of Europe and Middle East corporate customers moving into India is driving the data center growth, and we are getting a good chunk of that. So that's another big driver growth now and into the future. On the PC business, the endpoint solutions, clearly the prices due to the shortage of supply and the price rise played a role, clearly, where the unit demand is flattish, but the revenue demand has been strong. And on the mobility, as you rightly pointed out, the premiumization, if you look at what's happened last year, the smartphone in India grew units 1%, but it grew from a value perspective 8%, driven by premiumization. And we are playing into brands that are largely in the premium category. So all 4 played a huge role in our growth. And of course, between geographies, India had a stupendous growth, 60+%. Middle East Africa, despite the West Asia crisis, had a 15% growth.
Well, very nicely put, and of course, more reasons for the growth, and that's what the point was in our analysis, that everything is hitting at the right time. But because of that, just wanted to understand how Redington was as a business model, 2 years ago, and right now for the future, how it's poised. There must be a difference, and what has happened in the last 2 to 3 years. What was that model earlier, and how things have changed now?
Okay, so very good question. So two changes we made, and one is we have intensified our focus on software solutions. And the non-physical piece of the business used to be about 10-12% of our business. Now it is 17%, growing very fast. This consists of cloud security software. People migrate to the cloud. The AI piece comes very handy there as well. On the technology solutions, our focus was a lot of inside the office. We call it on-prem server storage networking, but we're beginning to play in the non-hyperscaler data center driven by neo cloud operators. Those two are driving our growth tremendously. And on some of our core business like mobility and PCs, we have created some go-to-market models, like we famously call our D2R, direct-to-retail model for some of the premium brands. We built that model specifically for some brands, and that has really helped us. So those are 2-3 big changes we made. We've also got a geography cluster model. So we've got 8 clusters. We have an India cluster, UAE cluster, Saudi cluster, a GCCL cluster, an Africa cluster. So there's intense focus on countries, intense focus on non-physical business, intense focus on data center. All these are actually generating growth as well as better margins in some of these pockets.
Exactly, and of course a lot of funds and large investors, retail investors, all are watching our show, and they have understood that why there is a change of strategy. And when there is a change of strategy, it's not a one-off in a quarter. That means it's a structural change. So I just wanted to understand this momentum which we have in the first quarter. Will it go through in the second quarter, third quarter as well, or is there any lumpiness in your business model as such?
No, we definitely parts of it. We see the momentum continuing. Software Solutions Group, we definitely see the momentum continuing. Mobility and PCs, we have some of the momentum because of premiumization, etc. But some part of it is memory prices related. And at some point, we would see the demand, actual end user demand slackening because prices have gotten to a point where people saying, hey, it's too expensive for me in the consumer side. But commercial side, we still continue to see the demand there. And I think some of the corporate customers will move from buying the laptop outright to leasing models, financing models, etc., so that they can get the higher priced model because they need to go through the refresh cycle. And on the technology solution side, the data center will continue for the next 4, 5, 6 quarters as India goes from a 2 gigawatt to a 10, 12 gigawatt install base. So I would say 80-20, but 80% of the business we see momentum continuing for the next 4, 5, 6, 7, 8 quarters. There may be a little bit of lumpiness, especially on consumer demand as prices start slackening or softening a little bit of demand on the phone and the PC side. But we don't know. We don't think that will happen this coming quarter yet, but maybe somewhere it will play out in the next 2, 3, 4 quarters.
Exactly. There was price hikes in a lot of sectors. And Hariharan sir, do you think these price hikes are likely to come in the short term because the festival season is about to start and there's a lot of pre-buying which happens? So just wanted to understand the industry perspective.
I would think that the smartphone prices now, Android had raised prices, now Apple is raising prices. So maybe it has peaked out a little bit before the festival season, but I don't know whether it is completely stopped. Clearly on PCs, there's going to be more increase in prices in the coming quarter as I see it. But again, at some point, this will stabilize. So you will see some more short-term increase in prices is how we feel it. The brands control the price changes. We don't. But based on everything we see, that's what we see. But in maybe the next couple of quarters, this might stabilize. But it's not going to go down. We don't see for 4 to 6 quarters pricing really going down. But is there some more price increases in the horizon? We do see definitely in the PC side some more price increases.
Right, and this quarter also the PC realizations were on the higher side, and the spending which is there, be it a retail or corporate, that has changed. 2-3 years ago it was different, and now it is a part of our everyday life and what are the product cycles are, and maybe that's why the perception might change for your industry. But I want to understand the large enterprise clients deals. They at times are lumpy, at times they come in the first half, or you could say the first quarter it gets spilled into. How are those trends looking like? And you mentioned the data center angle as well. So I wanted to understand about the large enterprise clients. How's the guidance?
Yeah, so definitely the demand is not necessarily slackening, but they don't have infinite budgets to increase. So I see 2, 3, 4 things happening on the enterprise side. One, clearly the price increases on laptops and servers. People are starting to look at leasing models and financing models. Can that enable me to do things? There's also device as a service model, and that's going to evolve rapidly. And people might go into more financing leasing models to really put up in the next 1 to 2 years in terms of the price increases. That's one trend we can see. A second thing is cloud versus non-cloud. So there may be more people who might migrate to cloud, but cloud necessarily, when you get to cloud, you need to optimize your pricing, your spend on the cloud. Then there is the AI factor as well, because people are beginning to start spending on AI, both in terms of buying commoditized AI, whether it is a ChatGPT, Copilot, etc. There is a tokenization cost when it comes to AI. And so you have to really now put forward your hardware. What's your budget? What's your budget with cloud? How do I optimize that? What do I do with AI and how much spend do I have? Tokenization costs and security. How much do I keep in house? How much do I do? So all these are creating many different decision points and managing many trade-offs. We will see new forms and new alternatives emerging in terms of how people are looking at all these things.
Sir, that's a very important trend you have actually pointed out, and it's not just asset heavy model now. It is shifting to asset light model. There is leasing, financing, and also refurbishing, and these are the companies which are hardly discussed in the Indian stock market, and hopefully the street gives a proper re-rating to them. But I want to understand the international business also, how that is panning out. This time the numbers were stable. I wouldn't say as good as Indians, but how are those looking like? And there's of course the channel expansion also. If you could just share some numbers or any guidance on that.
Excellent point. So like I said in the beginning, Middle East Africa region grew 15% this quarter, year on year. And we were a little surprised how strong it came despite the West Asia crisis and the supply chain challenges we've been through. So I will break that up into a few parts. So we have a cluster called GCCL. The GCC countries and the Levant countries, which consists of Qatar and Kuwait and there is Iraq and Jordan and all of that. So that part of the geography actually grew 90+% despite the crisis. Africa grew nearly 40%. So those two are actually growth engines despite the crisis. UAE and Saudi were a little bit more sober. They're small declines, -3% and -10% declines. But we do expect, as the West Asia crisis stabilizes and becomes more of a noise level, the growth there will come back, because UAE for us was growing at 20% the last couple of years. There's a lot of spend on data center, AI, cloud in UAE, and so is Saudi. So both these markets, we do expect once the West Asia crisis, I don't know when it will be resolved, hopefully the next 1 to 3 months, and the second half can look good on the growth there, because they have delayed some spending, etc. But it's more flattish to a small decline. My outlook, if the West Asia crisis goes away, is a strong double-digit growth in that region. And then we're just opening the Southeast Asia markets, still a long way away. We focus largely on South Asia and just getting into ASEAN just now. And we'll see some growth there over the next 3 years, not the coming year.
Okay, so of course South Asia is work in progress, but a pent-up demand in GCC might be another growth trigger for your company. But you have given us the entire picture and how things stand, and right now you're in the middle of that, be it AI or data center theme, and apart from that, the memory price shortage as well. Thank you very much, Hariharan sir, for your time, and best of luck for the future of the coming quarters as well. It was a pleasure to talk with you.
Thank you so much.
So that's the management of Redington, and after a really long time, the company has come out with a very strong set of numbers, but it's a play on AI, it's a play on data, as well as on a memory shortage, and everything is happening in the same quarter itself. Interesting, right? So for these interesting stories, stay tuned to NDTV Profit and keep watching KYC.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
What if your gut was affecting more than just your digestion? Your mood, your sleep, even your immunity.
The gut-brain connection is no myth. It's a living reality.
This week on NDTV Lifeline, discover how your gut influences your mind, why bloating and stress are often connected, and the simple habits that can transform your health. Only on NDTV Profit.
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
He has been tracking markets for over a decade.
Benchmarks rejoice a dip in the oil prices, with Nifty 50 sustaining above 24,350 levels. Sensex gains over 100 points. Auto, defense lead the gains, and IT as well as FMCG are on the back foot. The IT index slipped 2.5% after a 5-session rally as the global AI trade cooled across the Asian markets. Even so, the index remains up 16% in July and is on track for the strongest monthly performance in 6 years. Crude oil still on track to post a monthly gain of more than 20% as renewed fighting between the US and Iran really threaten further disruptions to Middle Eastern energy supplies. Hyundai Motor India surges 7% after its first quarter results and upbeat management commentary impressed investors. Brokerages retained the bullish rating, citing confidence in volume recovery, new launches, and the company's growth outlook. Bajaj Finance in focus after a stronger than expected first quarter. The results prompted brokerages to raise the target price while retaining a positive stance. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar on this Friday afternoon. What a week it has been, and today the markets are really rewarding themselves, especially because of the crude oil prices really softening. But the escalation of war remains as an overhang for the market. But at least in today's trade, they're maintaining some bit of flat trend, and a huge amount of recovery has already taken place in the earlier part of the session. So stabilizing in the next half is what we see at 24,363 levels at the current moment. A large part of that, of Nifty 50 stability today, is being contributed by Bajaj Bajaj twins. Remember, Bajaj Finance, a better than expected number, much stronger, and beating estimates on all parameters has really given a very positive momentum to those two counters. So if you really take a look at Bajaj Finance as well as Bajaj Finserv, about 60 odd points are really contributed when we talk about Nifty 50. So without the contribution and the strong contribution coming in from the Bajaj twins, Nifty 50 would have been in a negative zone. So that needs to be seen. So it's a concentration of earnings-led momentum only in a couple of counters that's really contributing to Nifty 50 today. But overall, the market dynamics are looking much more positive today. And when we take a look at the broader markets, they are really performing much better than the key indices. So take a look at mid-cap 100, mid-cap 50, they are all on the gaining spree. If we take a look at the sectoral play as well, remember IT has had a fabulous week this particular week, and the AI narrative reversal overseas has really given it that benefit, and it has been the top gainer for this particular week, even though seeing a little bit of profit booking in trade today, as well as the FMCG space is minor in the red zone. Apart from that, auto, defense, pharma, financial services, all guns blazing when it comes to gains across the board. So there is an across the board momentum really playing out on the overall market. Let's get chatting for more market perspective and investment strategy from Pramod Gubbi, who's the co-founder and founding partner of Marcellus Investment Managers. Pramod, always a pleasure to speak to you on NDTV Profit. What do you make of the kind of market momentum that we are seeing? You know, the critical level of 24,000, then 24,200. Those were psychologically very important levels for the market to really cross at this particular time, while oil prices are still a worry, and war escalation is still in the uncertain zone.
No, thank you. Thanks for having me. Appreciate it. So I think the role of the macro and micro has reversed in recent times. Last couple of years, we had a fairly stable and relatively solid macro, but the micro, which is pretty much the earnings, we've had almost 2 years of single-digit earnings growth. The earnings cycle seems to be clearly bottoming out. We had a pretty reasonable Q4, and the Q1 also seems to be shaping up really well. On the other hand, the macro concerns remain. Not just the oil price, but also remember interest rates going up globally. US 10-year bond yields have touched 4.6, 4.7%. And also we're still dealing with significant excess capacity from China. So those overhangs plus the geopolitical risks have their own bearing. Within India, we're seeing the consumption challenge still hold up, the risks from AI and automation on job creation, and the relatively high household leverage poses challenges on consumption. But there are a lot of bright spots. Particularly the currency depreciation is showing its own positives. A lot of manufacturing companies are finding competitiveness in the global markets. Alongside that, we're also seeing early signs of benefits from FTAs, although a large part of the FTAs will come into force in due course. But we're seeing a lot of positive signs coming from the currency depreciation, even in this quarter's earnings as well. So I would say the best way to categorize the market is the earnings pretty much bottoming out. We're seeing a cyclical recovery in the earnings, but there are some overhangs from the macro perspective.
That's right. And Pramod Gubbi, I'm glad that you mentioned the, job-related consumption impact. Not many people had been talking about it. And only a few days back in this particular week, we did get shocker results and the stocks got punished when we talk about the retail and the consumption space. But we have been in denial about the consumption story also because of the household budgets going up. I'm glad you mentioned that. But when we talk about the IT sector, now, Pramod, we have seen extreme volatility, and this particular week has been especially good for the IT sector, and it is still gaining 6% after seeing a little bit of profit booking today. What is your strategy on IT sector for a medium term and even the long term view on the AI thrust playing in, and in the medium term, it's, bread and butter business really playing out?
Yeah, I'm glad you mentioned the investment horizon here, medium and long term. That's where the real question on IT comes in. Given the pace at which we're seeing AI developments come through both ways, right? From being new model leaders, the way Anthropic came out with Claude, multiple versions of Claude early part of this year, and then finally Moonshot's Kimi K3. We're seeing very rapid developments in the AI space. And to that extent, it's very, very hard to take even a medium term view, forget about a long term view on something like IT services, which has very meaningful ramifications from the development of AI itself. Yes, there was a tactical angle to it, given how much the stocks had been beaten down. Valuation was cheaper. But clearly, the market was saying we have no visibility in terms of long-term structural growth for this industry, unless and until we know where AI is going to stabilize. And we are far from a stable situation on AI, and that's bound to be the case. Any sort of new technology platform, whether it was the internet or the smartphone and now AI, we are in a transition phase. I don't think it's anybody's case to now say that, look, this is where steady state will be. Until such time, I think the overhang will remain, particularly for long-term investors on IT, no matter how cheap it is. So from our perspective, we're watching the space. Of course, we like the valuations, but I think the disruption risks or the potential disruption risks outweigh the valuation attractiveness.
Right. And Pramod, at least speaking to the AI capability companies and founders, at least the understanding is that they're two different languages altogether. So it will be too much to expect the IT services to really build and pivot that unless there is collaboration, which is already taking place. But to another point, which are the spots of really attractive valuations, or at least thematic plays, which you are really looking at for a medium-term play in the current market scenario?
Yeah, I mean, while I said that the earnings recovery is clearly here, I think at the market level, there are very few spots which you can say are attractive from a valuation perspective. Perhaps the only one that stands out is financials. Lenders across banks and NBFCs, insurance as well, you can see valuations on an absolute basis attractive and relative to the rest of the market. If you leave aside financials or valuation, there are some structural growth trends. One of them has been around healthcare, and this is across the board, whether it's hospitals, diagnostics, pharmaceuticals, medical devices, and so on. We believe that the rise of healthcare insurance, both government as well as private, and also in some ways outsourcing of healthcare provision from the government to the private also makes it a structural driver. Having said that, stocks are not cheap here, but if you're looking for secular growth stories, I think healthcare is one spot to look at. The more interesting piece now, like I said, was the fact that the rupee is depreciated. Yes, it has caused its own problems, but there are also bright spots coming from the rupee depreciation, which is finally we seem to be gaining some competitiveness on the manufacturing side. A lot of things are coming together. It's not just the currency weakness, but also Western buyers looking for an alternative sourcing place other than China, the China plus one. And finally, the FTAs, like we said, many of them are yet to take case, but I think they're opening up new opportunities just when our manufacturers are becoming competitive in the global space. So that opens up a whole host of players from pharma to chemicals to engineering goods, autos, auto ancillaries, textiles as well. So that can be a very interesting play, at least for the next 3 years.
All right. So Pramod, could be many ideas, and of course, thrust on manufacturing acumen of India really continues. Good to know. And the usage of technology will be also one of the break points for this particular sector going forward. Thank you so much. It's always a pleasure to get chatting with you. All right, moving on to another company which is in news today. We are talking about Hester Bioscience, and take a look at that particular counter, up almost 1% in trade at the current moment. Priya Gandhi, who's the ED of Hester Bioscience, joins in. Priya, always a pleasure to welcome you on NDTV Profit. Of course, strong numbers when we talk about the poultry healthcare, which delivered a 48% growth. Can you give us a breakup on what really led this kind of a growth? Was it volume-led versus the institutional order-led?
Sure. Thank you so much for having me. Yes, on a standalone basis, we are pleased to report a growth of 14% in our top line, backed by the growth, a strong growth in our poultry division, which was a 48% jump that we saw compared to the corresponding quarter of the previous year. Our poultry division primarily comprises of the biologicals products, the vaccines that we have, and along with that, we also have healthcare products that we have introduced. Over the last few years, we have been able to make a comprehensive product portfolio to meet the emerging needs of our customers. We have also had stronger penetration into the institute business. More technical selling, generating more demand and growing ourselves geographically. So couple of these factors, it's not just simply one event in the last quarter, but quite a few efforts have been made in the last quarter to further strengthen our poultry top line and performance.
Right. So when, Priya, we look at this sustainability of this growth, since you said many factors as well as many levers have really impacted this, are they sustainable in nature for this present quarter and the rest of the financial year as well?
Yes, our endeavor is to make this into a sustainable growth. Along with the top line, you also see that our bottom line has grown sustainably. And, compared to our last year, we see the top line as well as the bottom line in the division that has grown. And we do, our endeavor is going to be in sustaining this growth on a top line as well as a bottom line basis.
Right. So that was one segment, but when we talk about animal healthcare, the revenue fell 50% on a YOY basis. Priya, can you highlight the concerns from there? What really transpired and what are the solutions that we are really looking at? When do you also expect the tender execution to really normalize?
Sure. Just to give a little bit of context, the poultry and the animal healthcare, both the divisions operate very differently. And I would recommend to look at these two divisions very differently. So coming to the animal healthcare degrowth, yes, this was primarily impacted due to the timing of the government vaccination program execution, particularly in the PPR as well as the lumpy skin disease immunization program. We supply our goat pox vaccine for the LSD immunization program. And this was a timing-led impact that we are seeing. However, in the coming quarters, we are very confident and optimistic that we will be able to cover it up in the coming quarters. Having said that, we are also mindful that the procurement of government can cause some volatility on a quarter-on-quarter basis. We are mindful and we are working on certain strategies in order to make the animal healthcare business more stable, enter certain commercial markets, enter export markets, and also strengthen our biological product portfolio that can, such that we can have a diversified product portfolio.
Right. So, Priya, if we don't take a look at the short-term vision of quarter-on-quarter where the volatility is there, which you mentioned, when we especially talk about animal healthcare business, when is the turnaround expected to kick in your view with all the efforts being taken?
If you see our performance in Q4 last year as well as Q1, our focus has been on strengthening our overall operational efficiency, our operational discipline, cost management, etc., which is very well reflected in our bottom line, our EBITDA as well as our PAT. Speaking on the top line growth, again, our objectives are very clear for this year. We want to strengthen our poultry biologicals portfolio. In fact, one of the milestones that we have achieved in the last quarter is that we we received the commercialization license for the H9N2 marketing as well as manufacturing license, which has been a good addition to our overall biologicals portfolio. And along with that, we also have certain product pipelines in our biologicals, in our animal health segment. And as I mentioned before, we are looking at opportunities in the commercial market, in the export markets. And with this, we do see, and we have reasons to believe that in the coming quarter and the coming financial year, we will be able to stabilize our overall top line.
Right, Priya, we are completely running out of time. One very quick question. You said, you talked about the geographical expansion. Which geographies do you see giving maximum growth very quickly, and the turnaround of Nepal as well as Africa contribution?
Yes, so Africa continues to be our high focus point in the coming quarter and in the coming year. Africa, the continent of Africa has one of the highest livestock population in the world. And along with that, it has some significant unmet animal health needs. So in the coming quarters, we are going to be focusing on meeting those needs. We have a very strong manufacturing base that we have set up, certain registrations that we have already made, etc. So that gives us a very strong base for our future growth opportunities. And at the same time, in Nepal, there continue to be certain geopolitical disturbances, which is sort of impacting our overall performance.
Yes.
But going forward, we are positive to turn it around.
All right, Priya Gandhi, always a pleasure speaking to you. All the best for all your efforts for the next quarters. Thank you so much for joining us. All right, from one earnings to another, let's shift focus and welcome on the show Sanjeev Patil, who's the Senior VP Strategy and Biotechnology of Privi Specialty Chemicals. Thank you so much, Sanjeev Patil, for joining us right here on NDTV Profit. And the stock is really gaining handsomely, over 1% in trade. Of course, strong growth as well as demand momentum is what we have seen in the quarter gone by. Do you see the current demand scenario really sustaining through this financial year despite the global uncertainties that we see?
Thank you for hosting us. Good afternoon to all the viewers. Yes, we do feel that the demand momentum will continue in the current financial year, as well as I think in the near future, because the entire world, particularly Asia and China, they are undergoing a complete demographic change, wherein the demand for day-to-day uses, has been going up constantly, and we have been able to get more and more share from our customers, and therefore we have consistently maintained about 20% growth. If you look at last 13 quarters, we have been maintaining that, and even if you look at last 20 years, we have been growing at over extremely high teens in terms of growth, and maintain the profitability as well.
Right. So, Sanjeev, in this particular quarter, of course, the fire-related incident has had some impact on the company. But minus that particular impact, what would your EBITDA margin and basically the operational performance, profitability would have been?
So the incidents were very small, actually. In a sense, it was our finished good which was on its way to the cargo, and then it caught fire. So our EBITDA margin would have been what we earned in the Q1. That's about nearly 25%. We are at 24.6%. So we would have been at 25% otherwise, without that particular incidence.
Sanjeev, for this particular, yes.
This quarter, yeah.
So this particular quarter, we are already 1 month down in Q2. What would be your projection on the margin expansion from the last quarter that you have reported? And what are the factors really at play there?
There are a couple of factors in this. One is that this particular incident that we had, that will add on to margins further. In addition to that, what will happen is, the first quarter of every financial year, since we take annual maintenance, we effectively get about 80 days to work out of 90. So therefore, second quarter generally is historically also provides higher revenue, and therefore it will lead to absorption of overheads much better, and leading to improved margins. So we always feel and we always maintain that we would be in north of 20 in terms of EBITDA margin. But for the last 12 quarters, we have demonstrated almost 25% EBITDA margin quarter on quarter for 12 quarters. So we will continue to maintain that tempo. And we also are positive about achieving 20% growth in revenues as we have promised. As you can see, our net profit increased by 37% as compared to last year, same quarter. So that also trend, I see that it will continue.
Right. So sustainability is what you're mentioning. But Sanjeev, you have also filed an insurance claim. When is the settlement expected? Will that kick in this very quarter?
Yeah. In this quarter, yes.
All right. All right. So that settlement will really take place now itself. Was there any customer shipment delay or any business disruption due to that? Is there any lasting impact of the incident that we still see on the business?
No impact at all, because it's a very small. I mean, our monthly export and monthly revenue is about 250 odd crores. So in that 4-5 crore is a very small amount. It's just that we thought that we are so finicky about the numbers that we thought we must mention this in terms of transparency of reporting.
Right. And Sanjeev, when we talk about the new products as launches, also the pipeline on that, can you give us the visibility on the growth momentum there? And how much are you ascribing the growth to the existing products versus the new products that are in the pipeline?
So first, let's look at the existing products.
Yes.
So in the existing products, we are expecting that it will add around 10% volume growth to our current portfolio. And the new products, the projects are underway. We have given a guidance of 5K, 1K in the next 4 years. We are well on track of that. And the projects are under implementation. We expect from second half of the next financial year, these projects to start providing revenues. And since we work very closely with our customers, we are pretty confident that we will be able to convert capacities into actual revenues in a very seamless way.
Right. And you have a vision for FY30, Sanjeev, and that is targeting 5,000 crore rupees of revenue and 1,000 crore plus of EBITDA. While at this particular run rate, if we see 152 odd crore rupees in 1 quarter, so there is a lot of growth that is really expected in the next 4 years or so. Which are going to be the main key drivers for the growth for reaching the vision of FY30?
So we convert waste from pulp mill into value-added aroma chemicals right now, and we are among the 4 companies globally to do that. Going forward, we pick up another waste, agri waste, called as corn cob, and convert that into products like maltol, ethyl maltol, and cyclopentanone. And in cyclopentanone, we will be the first company globally to make cyclopentanone from a renewable resource. So these 3 molecules will add almost about 40% of the growth. The next 20% would come from specialty molecules. About 10 of them we are working on. We already have completed laboratory trials. We are at pilot scale, and these are being done in close connect with our customers. So that would add around 500 to 600 crores of revenue from specialty molecules. And then the amalgamation and merger with PB Fine Sciences, that would provide balance 500 crores. And that's how we will go from 2,500 crore, which we did last year, to 5,000 crore, 2029-30.
All right. So, Sanjeev, the math is really worked out. It's all now left to execution in the next few years for you. All the best for that. And thank you so much for joining us right here on NDTV Profit. With that, completely out of time on this edition of Markets at 12. But do keep it with NDTV Profit. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा। आप अपना देख लो।
What if your gut was affecting more than just your digestion, your mood, your sleep, even your immunity?
The gut-brain connection is no myth. It's a living reality.
This week on NDTV Lifeline, discover how your gut influences your mind by blowing.
Hello and welcome to NDTV Profit. You're watching trending stocks from the NDTV Profit Suzlon studio. With me, Hiral Dadia, and I have Mahima Vachhrajani also standing at the Profit Market Pit with all the action out there in the markets. It's an interesting day of trade, Mahima, because if you pull up Nifty 50 and Bank Nifty on the screens as well, you'll see that mild recovery that's there. IT is also very interesting. We'll pull up that one on the screens as well. You have Nifty 50, which is at the day's highest levels. Bank Nifty, though, trying to make a mark but not really sustaining the kind of moves that we're looking at. You have IT also, which is trading under pressure, but from the place where IT opened up, see the kind of recovery that has come in as well. An upward slope that you're seeing, but still you're down almost 1.2% in today's day of trade. Let's just quickly look at the heat map in terms of Nifty 50, and then I'll toss it over to Mahima to take us through all the factors that we should be watching out for in terms of today's session. What are the key highlights of trade as we speak? But overall, in terms of the heat map of what you're seeing, Bajaj Finance and Finserv reacting to that strong set of numbers, M&M as well reacting to numbers, and there is a counter impact on the Shriram Finance, Jio Finance of a rub-off effect happening there. Apart from that, you have Adani Ports, Sun Pharma. Sun Pharma ahead of numbers is seeing some gains of nearly 1.2% as we speak. What's losing out? You know, the kind of rally that we've seen with regards to Nifty IT as a sector in the month of July, I think there is some bit of profit booking that's coming in there as well, because there is not too much confidence of sustainability when you talk about IT as a sector. Hence, you have names like Infosys, TCS, all of them that are trading under pressure. Eternal is down in trade. ITC ahead of numbers is also trading under pressure. And likewise, iSure, which reported numbers yesterday, is down nearly 1%. But Mahima, what are the factors that you're watching out for if you have to look at the sectors, the broader markets, and a lot of stock-specific action?
Yeah, a lot of stock-specific action, and just talking about the Nifty 50 itself, right? Because as you mentioned, ITC not doing very well ahead of earnings, and we are expecting 3 big earnings today from the Nifty 50. You have ITC, you have Sun Pharma, you also have Maruti Suzuki. So majorly, these three are the ones that we'll be watching out for. However, Sun Pharma is doing very well ahead of its earnings. It'll be interesting to watch out for. Inline set of numbers is what is being expected here, but still stock is trading around 1.2% higher. But let's also try to pull up the mid cap 150 and the small cap 250 because it's faring better as compared to benchmarks here. Overall the mid cap 150 almost at the day's high point, up by about 0.6 odd percent. Again here very earning specific driven, and the small cap 250 also at the day's highest point. Both of them doing much better as compared to where the benchmarks go. Let's try to pull up the BSE 500 as well and see as to what are some specific names that are either doing well or not doing well. You have something like a Quest Corp which is topping that chart, a Bajaj Finance, a Nifty 50 stock in that list as well, now seeing gains of about 7.5%. So very strong numbers for Bajaj Finance. But the question really here would be whether this kind of growth is sustainable or not. But Balkrishna, Bajaj Finance, so both twins doing very well. You also have Westlife Food, a strong quarter for this one as well, and a turnaround to say the least for Westlife. We've seen good gains coming in the last 2 days as well. Sterlite back in the green today, HFCL also back in the green. These two counters are either on the red with lower circuit or on the green side with an upper circuit. But Sapphire Foods on the other side, Thermax has recovered quite a bit from the day's low point, from a 15% negative to now around negative 5% because of the positive commentary coming in from the management in the con call. In fact, we also spoke to the management exclusively, and we'll get you that conversation part in a bit. But Just Dial, City Union Bank continues to be under pressure. I think this is the fourth or the fifth day in a row where it's seen a downtick of around 3 to 4 odd percent. But Devyani International is the other one which is down by about 3 odd percent, and Data Patterns and Mastex also on the red side of the list. So Hira, that's with regards to where the markets go. But what's there on your watch list?
Interesting names there as well. Thank you, Mahima, for that. Bajaj Finance. Brokerages are bullish. If CLSA, which has given Iron Man status to the counter, and you're having a rub-off effect on a Bajaj Finserv as well. Thermax, look at the counter, was under pressure, but a good recovery that's coming in. The PAT has been hit by a cost overrun. The management commentary post the con call has what has caused that recovery in terms of where Thermax goes. M&M, you have Kotak Securities, which is maintained a buy. Hyundai, brokerages are positive, and the commentary in terms of the conference call is something which has enthused the street, and that's the reason why you're seeing the kind of gains that you're seeing. Balkrishna Industries as well is extending the gains on the back of Q1 numbers. Swiggy, your city has cut the target price on the counter. Astra Micro has seen an order win, along with the GRSC as well, which has seen an order win. So 3 defense stocks which are in trade focus today: Astra Micro, GRSC on order win, and a Mascon Dock on the back of a good set of numbers that have been reported as well. Aarti Industries, solid Q1 commentary is also very solid from the management when you talk about FY27 as a whole. Netweb, you have ICICI Securities, which is seeing a 28% upside on the counter, and that's the reason why that stock is up nearly 8%. Nucleus Software is another one, a weak quarter. The profits are down 32%, so you're watching out for that one in trade. Thangamayil, the losses have continued in terms of the stock price as well on the back of the weak commentary. I think it's the third or the fourth consecutive session where the stock is locked in lower circuit. Mankind, domestic growth has underperformed, and that's the reason why it's under pressure. Tricol, profits up, strong quarter. GNG is also very interesting because a very good set of numbers. In fact, the management has gone ahead and upgraded the guidance as well for FY27 from a 25% to a 30%. However, you're seeing the pressure on the counter, and I think it's more of profit booking that is coming in after the 120% kind of gains that have come in on this counter in the last 6 months. CG Power is another one. Smart volumes there along with Schneider, Hitachi. So that entire pack has been buzzing in trade as we speak. So that's with regards to where the watch list goes. But one stock that we mentioned on the watch list is a Nucleus Software. Let's pull up that one on the screens and see what the counter is doing in trade as we speak. Because there is some bit of pressure. And this is after reporting a weak set of Q1 numbers. Now, it has been dragged by a subdued India business. To discuss the quarter gone by, we are now joined by Ashok Kumar Bhura, CFO at Nucleus Software. Ashok, welcome to the show. Always a pleasure to speak to you. My question to you is, what has really not worked and what has led to this weakness? Because your margins are at the lowest since 20 quarters. Revenue growth has declined for a second quarter in a low. India business, there is degrowth. It's surprising to see that the Middle East has continued to grow. How would you actually describe the quarter and what has led to this underperformance?
So, if you remember, we have clocked a great order book last quarter, and our business is long-term business, and it takes a little time to convert that to revenue. We are on strong fundamentals in terms of getting the order book, a strong and healthy order book. EBITDA is under pressure because of increase in cost. We have introduced ESOPs, RSUs this year for our employees. That little impact is because of that, and another impact is because of increments in this quarter, and that is what is impacting EBITDA a bit. In terms of revenue, it has been more or less hovering around 210 crores for past few quarters. The silver lining and what we see is a healthy order book. This quarter, it is in excess of 300 crores. Last quarter, we had an order book of in excess of 600 crores. So on back of that, there is a strong order book which supports the momentum for the future.
Okay, Ashok, hi. Mahima also joining in this side. The order book that you mentioned, just want to get a sense as to what is the executable timeline for this one. And from a slightly macro perspective, I wanted to understand that the slowdown that you've seen in this quarter, can you attribute a bit of this to, overall structural change because of seeing lesser discretionary spending by banks, or no, that is not the case?
That is not the case, honestly speaking. While yes, in Middle East, few of the orders have been pushed back or deferred. Other than that, there is no major impact per se, especially on us in terms of securing orders.
So my question then to you, Ashok, sorry, I beg your pardon, is if you're talking about the reason why the weakness has come in terms of the first quarter, right? Where do you see the key parameters actually normalizing for FY27? What are you envisioning for the revenue growth, the margins, where does that number normalize, and in terms of profitability?
While we refrain from giving any future guidance on this, I can only say that we are on a strong trajectory in terms of order booking, which will help us build the growth for future quarters. Margins will be under pressure for maybe 1 or 2 quarters, but after that we see a little better margins on.
And what is causing the weakness when it comes to the India business? Because 55% of your revenues come in from the India business, and that is what has declined. So when do you expect growth returning back in the India business?
So India business, if I talk about order book, it is reflecting absolutely fine. We have been able to secure good order book from India as well as from few of the global players on that front. Revenue is a mix of delivery which we do, and we are ramping up the delivery which will fuel the growth for the future quarters.
Ashok, got it. Just to follow up on what you just mentioned. So in terms of geographical distribution or geographical breakup, where is the most traction coming in from right now? And because Middle East has done well for you this quarter, as you mentioned, do you not see any kind of disruption because of the West Asia conflict? Part one of the question, and you said that margins for the next 2 quarters will continue to be under pressure. Post then, when you expect a recovery, what will be the levers exactly?
So our levers for future growth will be accelerating the deliveries. We are on a solid order book. The key for us for future growth will be accelerating the delivery pace for our orders, and especially with respect to Middle East, we have not seen too much of impact because of the ongoing war. Save and except a few of the engagements which you are engaged in are little deferred. So that is it. That is not getting dropped. Only they are getting pushed for a quarter or so.
Okay. Ashok, my question is, if you talk about any banking software company, everyone is right now actually talking mainly about AI. So what is that tangible revenue opportunity that Nucleus Software is seeing from AI so far? How much of your revenues are AI based, and where do you plan to scale it up to? Are you seeing any tangible revenue aspirations from there?
Yeah. So I'll clarify this again. We are not a AI company which has a revenue line item from AI. So our AI is more embedded into our software and offerings to our customer, which makes our customers' life simple and help them scale thus their solution and serve their customers better. So we have been experimenting from past few quarters on a lot of stuff which enrich our product and offers customer uh, enable our customers to offer a better solution to their customers. So it is not a revenue stream for us, but yes, it is more in terms of investing in AI and having a good product for our customer or a better product for our customer, which helps them serve their customer in a much better way.
Got it. I think lots to watch out for, but thank you so much, Ashok, for joining in, hoping for better numbers and improved execution as well on the back of the commentary that you're making so far, but the stock under pressure as we speak. But in fact, let's also now get in Somil Mehta from Mirae Asset Sharekhan. Somil, welcome to the show. Always a pleasure to speak to you. A quick one in terms of a Nucleus Software. That stock is down nearly 6.5% on the back of earnings. But what are charts indicating?
See, good afternoon to everyone. Nuclear, just give me a second. I'm pulling out the charts. Nuclear Software, it has been in the downtrend for a little while now. And I would expect this stock to go down till at least 590 and 570. So those are the next support levels I'm looking at. At this point of time, in the very, very short term, 670 would be my, stop loss if somebody has a position. Overall, my view would be negative. I'll be, suggesting to exit.
All right, Somil, hi. Mahima, this side. It's time for a rapid fire round now. I'll start with Netweb Tech because the stock is buzzing and ICICI Securities still sees a 28% upside from here. It's run up quite a bit. Do you expect, and are technicals in support of this 28% upside?
Absolutely, it's a great stock to be in. It has, it's already in an uptrend, taken support at 20-40 daily moving average. It's been consolidating in the last couple of trading sessions, but my view would be positive. Targets would be 5,200.
Right. The other one is Thangamayal Jewelry. A 240% run up is what it's seen in the past 1 year, but in the last couple of days it's down almost 30%, and this is on account of weak commentary which is coming from the management. What are the charts indicating here?
See, my view is negative on this stock. It has been trending down in the short term. It may go down till at least 4,200, 4,300 levels. So stay away.
Okay, Mankind is the other one where overall domestic growth is something which is something that the street is not liked. What are your views on the charts here?
See, my view is positive on Mankind. It may see a short-term pain till 2,350, which is the 200 daily moving average, but buy on decline should be the strategy.
All right, CG Power and Schneider Electric, both of these are back in action. Strong volumes also coming in on this one. Any particular name from both of these that you like technically?
I like both of them, but I would go with CG Power. Positive on the stock, great outlook in the long term.
All right, and the last one on our list is Precall. It's been a strong quarter for this one. Do you think technically also it's equally strong and a possible entry right now?
Precall Limited, yes, absolutely. I think, but no, I'm not suggesting it for the short term. Medium to long term would be a great pick, and I'll be expecting the stock to go above 800 levels.
All right, with that, Somil, thank you so much for taking out the time and taking us through all those stocks. With that, back to you, Hiral.
Thank you so much for that, Mahima and Somil as well. But Another counter which is in focus is Thermax. The company actually reported a weak first quarter as the project cost has overrun. Margins have been under pressure as well and profitability has been impacted. But look at the recovery in terms of the stock as well. It's now off the lows, and this is post the strong commentary from the management as well. In fact, we did get an opportunity to speak to the MD and CEO, that's Ashish Bhandari, on their growth outlook and what they're expecting in terms of FY27. Let's listen in.
Starting Q2 onwards itself, you should see a significant improvement. And I'll share why I'm bullish on the year as a whole. Let me take one by one on some of the areas. First, on revenues, you would see our backlog itself now is more than 14,000 crores. In that 14,000 crores, the portion which is of these areas that we don't like is now less than 400, which means it has come down to less than 10%. And in this particular year, we would want to bring it down to zero. Our legacy projects around FGDs, some of the other government projects are all practically done now. NRL is the last remaining project, which too, we have taken the hit that we had to against that project. And now we have shown previously also when our revenues cross 3,000 crores, we are able to deliver a good amount of profitability. That will become the norm going forward. We have the backlog to be able to deliver a 3,000 crore plus kind of a revenue number on a continuous basis. And this backlog is more and more profitable. It has quite a few international projects. And as these international projects start to convert into revenue, the profitability jump will also start to show up.
Got it. In fact, on the back of that strong management commentary from a 16% downtick, the stock has recovered quite sharply, now down only 4%. In fact, we also have Tapan Doshi joining in. Tapan, welcome to the show. Hiral on this side, always a pleasure to speak to you. What do you make of the commentary from the Thermax management? Because the stock was absolutely beaten down. The post-conference call commentary is what has got the mood upbeat. And now you're just seeing cuts of 4%. Would you be a buyer?
Good afternoon, Hiral. No, if you see the result, result was okay. Somehow they have a good order book also. And if you see energy transition tailwind is already there. Again, green energy solution, what they are providing, that is what is helping the company over the time. Again, I feel that working capital intensity will be there. So there will be a pressure on the margin and we have to see the execution. There is a delay in execution also. See, honestly, the stock is having a higher valuation, I don't know, 84p. And whatever told by the management, and of course, the balance sheet is strong. But still, I will wait. Maybe 10% down from here is a level one can buy on dips because still I feel valuation is on a higher side.
With regards to where Thermax commentary goes as well from here on. But moving on, Maruti Suzuki, that company is also set to report its Q1 earnings in today's session. That stock pretty much dilly-dally, not seeing too much ahead of the numbers, 0.4% higher. Let's actually head across to my colleague Danish, who tracks the auto space closely in terms of what the key expectation is from the earnings. Danish, good morning. What are you expecting in terms of Maruti's expectations from the first quarter?
Well, good morning. Maruti Suzuki is expected to post a strong set of revenue this time, and is expected that the company will be reporting at least 38% jump in the overall revenue. But on the other hand, if we talk about the EBITDA, that is also expected to rise by 20%. And if we look at the margin is expected to fall by over 100 BPS, and it is because of the various external factors that we are seeing, especially because of the commodity cycle. And we have seen that over the past few months, especially after the Middle East crisis began, there is a strong pressure on the entire commodity prices, all the raw material prices. So that could impact the overall profitability of the company. And because of this particular reason, we can expect the profit after tax to also come down by at least 12%. But at the same time, the company is expected to post a strong set of revenue this time. On the other hand, what is really aiding this high revenue that is expected in some time is the fact that the company has seen over 29% jump in the volumes, and it has come on the back of at least 35% jump in the SUV sales that the Maruti company that Maruti has seen over the past few weeks. And we are also seeing that Maruti slowly is increasing its presence in the SUV market, and this is benefiting the company. But on the other hand, because of the margins are expected to go down because of the commodity cycle, then we can expect a certain cooling at that particular level. But what is very interesting to see that what the management commentary really comes out later and as it is expected to talk about the demand outlook and also the new SUV launches that the company will do. So all in all, if we see, it is going to be kind of strong numbers that the company is expected to come out with, but we can expect certain cooling down in the margin.
Okay, so that's the expectation. Tapan, from the companies that have reported numbers so far, what is your expectation? Because if we talk about a Hyundai, slightly weak, but a good turnaround story from the management commentary as well, very similar to what we saw for a Thermax. Likewise, you speak about M&M or even for the two-wheeler categories. What's your view in terms of where Maruti goes and what would you be actually eyeing?
So I'm positive on Maruti and I think they should give a good number. Only the thing is I want to say what will be the margin pressure and what will be the guidance over the time. Because see, I feel that maybe in 1 or 2 quarters after the SUV demand will go up again and EV launches pipeline is strong for Maruti now from last 1 year onwards and capacity expansion is already on the way. Of course, it's a strong franchise and we know it's a cash rich balance sheet also. So that is not a problem. Only thing is that how they are able to maintain the EBITDA margin over the time. So one has to see the what is coming out from the management and then take a decision. But overall, I am positive. It will be always on a buy on dips category.
All right, okay. Buy on dips category for Maruti Suzuki, but Sun Pharma is the other one from the Nifty 50 pack that is expected to post its earnings today. And we have Varsha joining Biotaxis very closely to tell us as to what you can expect from the earnings.
Well, as said, steady numbers is expected. Revenue is expected to grow 12%, EBITDA is expected to grow 2%. You may see some kind of margin pressure at 28% versus 30-31% last year, and net profit is expected to grow almost 25%. Now, talking about the revenue growth, you may see the growth which will be led by India formulation and of course specialty portfolio. Specialty portfolio is nothing but the lever for the company. But margin pressure is, you may see kind of margin pressure which will be led by higher input cost and higher R&D on the specialty portfolio. While domestic formulation is expected to grow at around 13% year on year, specialty and chronic therapies will likely remain the key drivers for the company. Onto the specialty business is expected to almost grow 11 to 17%. Brokers or analysts are expecting $367 million when it comes to specialty sales. Onto US business, base US generics business is expected to remain flat. Limited contribution is expected from new generic launches. Emerging markets are expected to grow at 8% year on year. So overall, a steady set of numbers is expected. But yeah, you may see a margin pressure, of course, on the back of higher R&D on specialty and higher input cost.
All right, Varsha, thank you so much for that. Steady set of numbers, inline set of numbers, but margin pressure could be a factor to watch out for. Tapan, in the pharma space, because we've already seen a lot of names that have run up quite a bit, right? Anything that you still feel that is correctly valued and could be a good stock to enter into?
See, I think if someone wants to see pharma, I think CDMO is a sector which one can look at it like Laurus Lab or Divis Lab. Of course, buy on dips category, it will be there. And here also, I think Lupin, Sun Pharma and Cipla will be the one because you see their expansion over the geographies is increasing. Again, some of the new patents are coming and there they are having a high margin. Of course, this is a sector which will give you a steady return to all the investors. And from here also, I think US policy is not so aggressive on this pharma, even though some generic level policy is coming, but I think this will not have an impact. So I'm positive on all the stock which I mentioned. Over the time, I think pharma will be a steady performer.
All right, a steady performer on the pharma index. But with that, Tapan, thank you so much for taking out the time and helping us talk us through all the stocks that we discussed. Completely out of time on this edition of Trending Stocks, but do stay tuned in because more news and updates on the other side of the break.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबां केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
What if your gut was affecting more than just your digestion, your mood, your sleep, even your immunity?
The gut-brain connection is no myth. It's a living reality.
This week on NDTV Lifeline, discover how your gut influences your mind, why bloating and stress are often connected, and the simple habits that can transform your health. Only on NDTV Profit.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management.
Benchmarks rejoice a dip in oil prices with Nifty 50 sustaining above 24,400 levels. Sensex gains over 200 points. Auto media lead gains. IT and FMCG meanwhile on the back foot. The IT index slips 2.5% after a 5-session rally as the global AI trade cools across Asian markets. Even so, the index remains up 16% in July and is on track for its strongest monthly performance in 6 years. Crude oil still on track to post a monthly gain of more than 20% as renewed fighting between the US and Iran threaten further disruptions to Middle Eastern energy supplies. Hyundai Motor India surges 7% after its first quarter results, and upbeat management commentary impressed investors. Brokerages retained bullish ratings, citing confidence in volume recovery, new launches, and the company's growth outlook. Bajaj Finance in focus after a stronger than expected first quarter. The results prompted brokerages to raise target prices while retaining a positive stance as well. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the Nifty 50, and it's actually very close to the day's highest point. 24,400 is the kind of level that you're seeing coming in, as you can see on your screens as well. When you talk about Sensex as well, quite a bit of uptick that you've seen in just the last few minutes as well. There you go, about a 280 point uptick that you're looking at right now when you talk about Sensex as well. And even when you take a look at the list of losers and gainers from within the sectors, right? You've got media leading the charge with 2.5% uptick, auto, defense, pharma, financial services, rural, all of those sectors in great shape right now. What's not doing so well right now is IT and FMCG. So those two sectors on the back foot. IT seems to have snapped that 5-day gaining streak as well and seems to be on the back foot right now. Let's also quickly talk about the list of gainers and losers also from within the Nifty 50, because it's actually a very interesting list that we've got in terms of some of the earnings counters that have been reacting to their earnings and numbers as well. Before we do that, you do have something like a PVV Infra, some of those counters that are doing quite well for themselves have already hit upper circuits. When you talk about something like a Hyundai Motor, NetWeb Technology and your Bajaj Twins, of course, leading the charge as well. So some of those counters also doing quite well for themselves. That said and done, let's also talk about the top gainers from within the Nifty 50, and it's the Bajaj Twins, Bajaj Finance as well as Bajaj Finserv making it to the top of that list. 5.5% uptick coming in for Bajaj Finserv, Bajaj Finance 8.5% uptick. What remains to be seen is whether this momentum can be sustained after a good set of numbers coming in. But you do also have M&M that's doing quite well for itself with that 5% gain coming in, Adani Ports as well, Sun Pharma, Shriram Finance, Jio Financial Services, some of the other counters that are doing quite well for themselves. Now, when you talk about the list of losers as well, some of the counters that are on the back foot, no surprises here. Some of your IT names make it to this list. So TCS down about 2%, Infosys about 2% as well, Eternal and Max Healthcare, Eicher Motors, some of the other counters that are on the back foot. Same can be said about something like a Wipro and Tech Mahindra. So some of those counters also on the back foot, and it's actually heavyweight HDFC Bank also that's not doing all that much in the trading session, so not much of heavy lifting coming in, at least from HDFC Bank. But let's also move on and talk about the entire commodities complex as well, and that's where you're seeing some interesting moves also come in. When you talk about oil, the rally seems to have paused just a bit right now after that sharp surge that you saw coming in. So there you go, $88 a barrel for Brent, and WTI somewhere close to $82 a barrel, 1.5% downtick also coming in. When you talk about the move for the month though, that's very much on the positive side. So somewhere close to 20% gains also coming in on a monthly basis for oil. And when you talk about gold prices, steady as we speak. But let's also get you some of those highlights in terms of what you should be expecting going forward. Dinesh Samani, founder Pro IntelliTrade Services, joins us on the show right now. Mr. Samani, a very good afternoon to you, and thank you so much for taking time out and joining us this afternoon. First things first, just wanted to try and understand what you think about the current sort of juxtaposition of a couple of triggers when you talk about oil prices right now. So you do have on one side oil prices gaining on a monthly basis given the kind of escalation that we've seen, some bit of concern on the back of the de-escalation, and since then it seems to have paired some of the previous gains as well. What are you expecting going forward now?
Yeah, good afternoon. And the geopolitical tensions are not at all easing out. We have seen the crude oil prices which collapsed from $120 to $67. They went back up again to $90 to $93, a 35 to 37% gain in a very quick short of time. Then probably a fall did occur and prices came down to $80 as far as WTI crude is concerned. But I think overall, the scenario is still dicey. The geopolitical tensions are not easing out. There are escalations from both the ends. There are no peace talks coming up. Overall, I see things are dicey and situation is still tricky. There is no peace talk coming up, and probably we may expect crude to trade in a very narrow range of, say, $75 on the downside and $92 on the upside. That's a $15 to $70 raise in the next coming 1 month.
No, absolutely. And when you talk about some of the volatility as well, quite the interesting set of factors that we've got here, Mr. Samani. On the one hand, you do have US-Iran exchanging fresh, military strikes as well. You do have the Black Sea tanker attacks that are there, adding to that list. And other than that, you also do have the Red Sea Security Alliance that Saudi is pushing right now. Quite a lot of factors that you're passing through right now. Are you then penciling in another escalation? What is the kind of price level that you're keeping in mind, or at least the lower band seems to have been revised upwards for Brent, right? So what are you then expecting in that lower band then?
Yeah, definitely. Earlier, it was just the Strait of Hormuz which was obstructing the 20% crude oil prices, crude oil supply. Now there comes the Red Sea and then the Black Sea, and things are escalating like anything. The supply disruption is like anything. Overall, if I look at the fundamentals of the crude oil prices, there is nothing changed at all. The supply is already there and consumption is already there, but the way to the supplier and to the consumer has been blocked out, and that's the major reason that the prices are escalating in those particular areas. But overall, still, even though the geopolitical tension has escalated, crude oil prices haven't crossed that 100 mark substantially. We have seen WTI just inching towards that $100 mark, and it reaches again $92 to $93 mark. So overall, still I expect prices should cool off or should remain in a very narrow range. I think $15 to $17, that is what I expect in the next 1 month.
No, absolutely. And it did go up to, $102 a barrel when you talk about Brent as well, but didn't really hold on next to those levels as well. So are you then expecting those levels to not be maintained going forward if there is an escalation of sorts, if, something like that happens? Do you think that $100 a barrel is a very key resistance level when you talk about prices?
It is actually a very key resistance level. Simultaneously, it is also a sentimental level as well. But I think the way it touches it and it recesses from those levels, it is quite clear that 100 should act as a resistance as of now. I don't expect prices to substantially sustain above those levels. Downside again, 86, 87 should be a support for WTI Brent crude.
No, absolutely. And the weekly price swings, we've seen them also exceeding more than $11 a barrel as well. So that's something that you're looking at when you talk about Brent as well. But let's also move on and talk about gold. What are you looking at in terms of the factors there? There's actually quite a lot that is happening. You've got the symposium as well. You've got Fed also giving in some triggers this week. So going into the next week now, as we wrap up this week, what are you then expecting for gold prices?
Yeah, with the Fed meeting last Wednesday, we see some relief rally that is coming up in gold prices. The Fed it was expected more than 3 out of 9 members, they voted against the rate hike, but still there was no rate hike this Wednesday. But there are probabilities of 61% in September, and that could act pressure on the gold prices. But this is something which we saw after a 5th month. We have seen a positive month as far as gold is concerned. It fell almost from $5,600 to almost $39.30. Now, as of now, $39.30 to $41.50. This is the range since last 15 to 20 days. So prices are consolidating, and more or less what I could see is there is a possibility of a bottom formation around 39.80 to 40.30. So that's the range where one can accumulate gold for a long term.
No, absolutely. And, when you talk about fresh buys as well, what you're then saying is that the levels do remain attractive. When you talk about both gold and silver for that matter, do you think that the levels for fresh buys are quite attractive right now?
As far as Indian markets are concerned, both levels are very much attractive. Okay. 1,40,000 is acting as a very crucial support as far as MCX gold is concerned, and 2,15,000 is acting as a very crucial support for silver. I think prices are bottoming out down in those levels. As far as COMEX market is concerned, 3980, 4020, that's a good level for accumulation. As far as silver is concerned, $56.50 to $57 is also a good level to buy.
No, absolutely. And does the dollar swing driving some of that near-term volatility, does that concern you in a substantial manner? Because some of the triggers for gold that it has been traditionally responding to have been a little bit challenged throughout the course of this war.
It was definitely a challenge because it's no more safe haven buying right now. After the war, we have seen prices have declined almost by $600 to $700. It went up to $48.50 and then it collapsed back to $39.30. So almost a $900 fall when the war started. So gold as of now is no more a safe haven buying. But if I think it's a value buying right now.
No, absolutely, and thank you so much for taking time out and joining us this afternoon. With some of those factors to also keep in mind, the key news that you're picking up right now is expect the volatility to stay as far as oil is concerned. And when you talk about gold and silver, these levels are quite attractive for fresh buys, so you should be looking at that as well if that's something that you're tracking. But let's also move on and talk about what sources are telling NDTV Profit that the cabinet is likely to approve 84,000 crore rupees deep sea oil and gas exploration. In fact, Shrimi Chaudhary joining in with some more updates on this one.
Yeah, that's right. It's a mega energy push which is coming in, and in fact, we expect cabinet approval today. The meeting is underway. The cabinet meeting led by Prime Minister Narendra Modi, and it's an ambitious, over 80,000 crore incentive program, which is likely to be called Samudra Manthan, and this is essentially to attract global investment into India's deep water and ultra deep water oil and gas exploration sector. And the proposed scheme actually is, of course, reducing the financial risk of offshore exploration by sharing a part of cost of drilling exploratory wells. And by lowering the risk for investors, the government hoping to attract global energy majors with deep water expertise, advanced technology and capital to India offshore basin. And this is coming at a time, remember, when we are facing a lot of issues when it comes to oil sector, especially on the crude front, the kind of crude bill which we are seeing the volatility due to West Asia crisis. It's very crucial scheme, and under the proposal, the government may fund up to 50% of the cost of exploratory drilling in deep water and ultra deep water blocks, and incentives are expected to be available to both public and private companies with support from the seismic survey also under the consideration. So let's see how that will pan out, but this is going to be a mega scheme in order to sort of reduce the dependency on the crude oil which India is facing, especially amid the West Asia crisis.
No, absolutely, and thank you so much, Shrimi, for joining us with all of those details. We'll definitely keep an eye on this one as well, but let's also move on and talk about India's E85 flex fuel vehicle rollout that is beginning to gather pace now after a weak month in June as well. Vehicle registrations are improving now in July, with two-wheelers driving most of the demand. In fact, Danish joining in with some more details when it comes to this one.
Well, that's correct. The flex fuel vehicles or the E85 compatible vehicles in India are finally showing a sign of life. Last month, the overall registrations were in low single digits, but now, as per the latest data that is available on the Government Vahan portal, we can clearly see that in the month of July till the 30th of July, we are seeing that there have been 67 E85 registrations, and most of these registrations are for the two-wheelers. And let me remind you that Hero came out with these E85 bikes just a month back, and this month 61 of those have been registered on the Vahan portal. On the other hand, we are seeing that Maruti Suzuki's Wagoner Flex Fuel, it is still not gaining a lot of traction, because in the month of July there have been registrations in a single digit, and we can clearly see that people are now preferring to buy more two-wheelers, E85 two-wheelers, in comparison to an E85 car. And in the coming few months, it is expected that there will be various other companies that will be also coming out with more product mix. So if we all in all look at the scheme of things, the E85 demand has finally started to pick up. And let me remind you that whenever a new technology comes in to ground, it takes a little bit of time to catch up. But within a month, we are seeing a sharp improvement in this demand. And very lastly, if I talk about the current availability of these E85 dispensed fuel pumps, as of now, they're in the double digit. But by the end of this year, the government has an aim to expand this to at least 500 outlets. And by the next year, the government's aim is to have at least 5,000 E85 petrol pumps. So all in all, if we see, India's flex fuel vehicle have started to show a sign of life.
No, absolutely. Some sign of life that we're seeing coming in there. Thank you so much, Danish, for joining us with all of those details. Let's also talk about Godrej Consumer Products, though, that's taken another round of price hikes across key household brands. Channel checks are suggesting that prices have gone up for Goodnight mosquito repellents, as well as, hit insect sprays and Synthol soaps. In fact, Ridhima is joining in with all of those details and a summation of what these hikes really mean for the company's business as well, Ridhima.
So killing mosquitoes this monsoon is all set to get more expensive, and also the soaps
as Godrej Consumer Products takes a price hike in the mosquito repellent brands Goodnight and Hit, and also soap brand Synthol. So they've taken a price increase of for Goodnight Liquid 45 ml from 85 to 90 rupees, up by about 5.9% in July. And remember that Goodnight 60 ml prices had increased from 110 to 115, up by about 4.5% in June. Now next up, Black Hit 650 ml prices have been increased from 310 to 350, up by about 12.9% in July. And before this, Black and Red Hit of 200 ml prices had already increased from 110 to 125, up by about 13.6% in June. And now Synthol soap 75 gram pack of 4 prices have increased from 95 to 105, up by about 10.5% in July. Now for Synthol, the prices had increased from 95 to 100 earlier, but it was rolled back to 95. So now the effective price increase is of 10 to 10.5%. This is as per our channel checks. And now the prices are mainly rising because of higher input cost, which has put a pressure on the palm oil prices, which have risen, the chemicals used for soaps and these mosquito repellents, and also the packaging costs, which have gone up. Now if we understand how important are these segments for Godrej Consumer Products, about 63.3% of their total revenue comes from India, and 22% of the total revenue for GCPL comes from the segment of home insecticide, which is the HI segment, and 90% of this revenue comes from Goodnight, which makes it a major player, and 10% comes from Hit. And the EBITDA margins for household insecticide segment is about 24% and market share of about 60%. Now going on to the soaps, now 18% of total revenue of GCPL comes from the soap segment, and 37% of soap revenue comes from Synthol, and the total contribution of Synthol is about 6.7% of the total revenue, with EBITDA margins of about 18 to 20%. This has a market share of 10 to 12%, with other competitors like HUL in this space. And also for mosquito repellent brands, there are other brands like Mortein and All Out from SC Johnson and Reckitt. Now, we reached out to GCPL, but we haven't got any response from them. But in Q4 earnings, they had guided that they will be taking a price increase because of the crude oil and the palm oil pressure, which they are facing a hit by 6 to 9%. Now, we have to keep a check on the other brands of mosquito repellents, Mortein and All Out of SC Johnson and Reckitt, and also HUL, which has already taken a price increase of 6 to 8%, and they would also continue to take more price increase.
No, absolutely, and thank you so much, Ridhima, for joining us with all of those details. So if you're going to be killing mosquitoes this monsoon, that's going to get costlier, and that's the essence of what Ridhima is saying. But let's also take you to Auckland, talk about a ground report coming in from New Zealand. In fact, my colleague Nimit Dixit caught up with Nikhil Ravishankar, who's the CEO at Air New Zealand. This conversation becomes important as Air New Zealand prepares for direct India operations as it seeks to build demand with Air India. Let's listen in to a snippet of that conversation.
Thank you, Nikhil, for taking the time. Just learned that you're from Bangalore. I'm from Bangalore, so I love that about you already. And you've been part of this FTA since the announcements, the negotiation started. You've been a strong member of the contingent, both from the New Zealand and the India side, I would like to say, when this got signed as well. I want to understand from an aviation and an Air New Zealand perspective, where do you see the value that you can bring in an FTA signed between India and New Zealand? Where do you see the value for your company?
Well, aviation has been one of the most critical enablers of trade between markets, between countries. And so we have quite a central role, I think, to play, particularly in the modern economy. Of course, sea freight still plays, mission critical role, and bulk of trade takes place through that mode of transport. But I think as when you think about it through the lens of modern economies and where the world's going, this people-to-people connection, sort of the high-end air freight trade, which typically, is either quite, high value, even produce and goods, but also highly sophisticated produce and goods. And the exchange of ideas that you facilitate in a service or a knowledge economy, all of that's facilitated through aviation. So, we are not only excited about the FTA, but we also understand we have a huge responsibility in trying to help enable us all to unlock the full potential of that free trade agreement.
And when you talk about the alliances, you have one since last year with the Star Alliance, which you have with Air India and Singapore Airlines, and you have access to some about 16 ports and through your code share.
Indeed.
What's the difference? Is this sort of a stopgap arrangement that you have working towards where you're testing the waters to see if you can set up direct access flights to India, or is this the final? Is this how it's going to look 3 years down the line?
We often talk about the genius of the and. A lot of things that are, complex, like air connectivity, it's always an and. It's not one or the other. It's not direct connectivity or, transiting through Singapore. I think the future of air connectivity between India and New Zealand, it will be a combination of both. My wife's from Kochi in Kerala. And if we had a direct service, say, into New Delhi, for her to go visit her family, it would be a transit journey out of New Delhi, or it could be a transit out of Singapore. It's customer choice. So we all across India, the Indian diaspora in New Zealand, we all have family, across the length and breadth of the country. And so connectivity is both a combination of direct as well as, having a really world-class transit hub, or in fact, many transit.
All right, then there you go. So some insights coming in for connectivity as far as Air New Zealand is concerned. But let's also talk about a dramatic border surge that is unfolding at Spain's doorstep. Thousands of migrants crossed from Morocco into Spanish territory in a matter of hours, overwhelming the border controls, sparking urgent calls for military intervention as well. Local leaders want Madrid to declare a national emergency, but Spain's government is saying that existing measures are enough to protect the border. The incident is now putting Europe's migration policies and border security back under the spotlight. And talking about the US as well, when we talk about migration as well as visas, the Trump administration is actually weighing a proposal that could make working in America after graduation far more expensive for international students particularly. So a report is saying that officials are considering a $100,000 fee for those applying under the optional practical training or OPT program. If approved, the move could impact US universities, global talent and major employers in tech and finance that rely on international graduates. And that's the word coming in terms of some of those key updates as well. But that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
What if your gut was affecting more than just your digestion, your mood, your sleep, even your immunity?
The gut-brain connection is no myth. It's a living reality.
This week on NDTV Lifeline, discover how your gut influences your mind, why bloating and stress are often connected, and the simple habits that can transform your health. Only on NDTV Profit.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Soumit Sarkar and my co-anchor Varsha. In the next half an hour, we'll try to take you the most important small cap stocks that have been buzzing in trade either on the back of price or volume. But first, if you look at the markets, the Nifty is continuing its upward trend now for the fifth consecutive session. One of the days we did slip by around 10 odd points, but the trend was still on the positive side. But today we are up close to around 100 odd points in trade, about 24,400 level. Another major resistance level has been crossed by Nifty. Now, if Nifty close above this 24,400 level, then a technical analyst believe that we could see 24,600 as well in the near term. Nifty Bank tracking the benchmark up around 200 points in trade. If you look at the other sectoral indices, Nifty IT and FMCG, which have been gaining, are now seeing some profit booking. Nifty FMCG down around 0.7%, Nifty IT down close to 1.5% in trade. On the gaining side, we have Nifty Auto up around 1.8%, largely on the back of M&M. Yesterday, the company came out with its numbers. Today, CLSA had upgraded the counter to a high conviction outperform. That stock is up, leading the entire Nifty Auto index in green followed by Nifty Pharma, Nifty Financial Services, Nifty Energy, up anywhere close to around 1% odd. And yet a good day for the Nifty Small Cap Index as well. The index is up close to around 0.8%. But let's get in Varsha to understand which are the key stocks that have been buzzing in the Small Cap Index.
Well, good day when it comes to small cap stocks. You have, West Agro, which is buzzing almost 12%. This is led by volumes, good volumes over here, 23 times of its 30-day average. If you see, you have Sheetal Cool Products also is up almost 12%. Four times of its 30-day average when it comes to volume. 63 Moons Technology is also trading, at almost 9% up today. Again, good volumes there also, 12 times of its 30-day average. Transpec Industry is also buzzing in trade. You have, Ganesh Consumer also in focus, 7%. The stock is up almost 7% in trade on the back of volumes. The volumes are not that great, 2x of its 30-day average. Nelco, if you see, is up almost 6% in trade on the back of good volumes here also. Deep Industries, the stock is continuing its rally after its Q1 results. We did speak to the management though as well. You have Kesoram Industries up almost 5%. Quest Corp is also buzzing in trade, up almost 5%. Let's see what are the stocks which are on the losing trend. You have, SQS India BFSI, which is under pressure. Nuclear Software is also under pressure, is down almost 6% in trade. BGR Energy System is down almost 5% in trade, and Mangalam Organics is down almost 4% in trade. But one stock, which is in focus is of course Transpec Industry. If you see, the stock has gained over 20% in last 2 sessions, is set to hit a new all-time high. Onto the competitive strength when it comes to this counter, you have over 50 years of chemistry expertise, unique recycling system with closed loop chemistry. Onto the key triggers, one is of course the diversification. They are expanding beyond acid chloride chemistry, also aiming to broaden customer base and end use industries, I would say. They do have long-term contract with one of the global chemical major, wherein they've entered 10-year exclusive supply agreement with a global chemical giant. They are supplying acid chlorides under the contract, for which they have dedicated manufacturing facility created for the product, and the contract will be actually EPS accretive. Onto the outlook, they remain cautious when it comes to macro environment. New product launches and FY27 commercializations are key factors. But Tata Steel is in focus on the back of Q1 FY27 numbers, and let's bring in Nisha to give us more details on that.
That's right. Thanks, Varsha, for that. And the stock is now gaining in trade, almost 2% up in the last few minutes of trade, or half an hour. This particular stock has really gained momentum after its Q1 numbers, and we'll be joined by the management very soon. In fact, taking you through one key highlight is that it's a beat on revenue, beat on EBITDA. But when we talk about the EBITDA margins, it is below the expectation. TV Narendran joins in to talk more about the numbers. Mr. Narendran, always a pleasure to get chatting with you every quarter. My first question, there were some shutdowns which really impacted the volume, and your margins have been below the expectations. The key highlights for what really transpired and what all is going to be carried forward for Q2.
Obviously in India, we are getting the benefits of the investments that we made in volumes and product mix, etc. We've of course been helped by the prices. The prices in Q1 were about 6,000 rupees higher than it was in Q4, and we had guided that. Coking coal costs went up, and we had an impact of the Middle Eastern crisis. The West Asia crisis, I think, hit us by about 1,200 crores in the quarter. So these numbers have been delivered despite that, largely because of a lot of cost takeout actions that we've done over the years. We still have work to do. I think the volumes can be better in India. We had a few shutdowns and some operational instability. So hence we expect Q2 to actually be better than Q1 in terms of volumes. The margins may get compressed a bit because coal prices are going up and steel prices have pretty much stabilized. But the rupees crores will probably be higher in Q2 compared to Q1 because the volumes will be higher. We expect Netherlands to do better in Q2 than Q1, and UK also to do better in Q2 than in Q1.
You slightly spoke about the margin picture, and of course, it is below what the street was expecting. Of course, there are many constraints, supply constraints, as well as the raw material cost. Give us a better picture on the margin sustainability in Q2.
So we expect coking coal prices from a consumption basis to go up about $5 per ton in Q2 compared to Q1 in India, and about $10 a ton in Netherlands in Q2 compared to Q1. In UK, as you know, we've shut the blast furnace coke oven, so we just send slabs from here and coils from here. As far as iron ore is concerned, for Netherlands, we expect it to be about $5 per ton lower. The margins in India will get compressed a bit because we expect the price of steel prices to be about 1,500 rupees per ton lower in Q2 compared to Q1. So we will see a margin compression, but because the volumes in Q2 will be much higher than Q1, we expect the rupees crore to be higher because the volumes will make margin compression.
Right, you spoke about the prices in India. Give us a better picture of the global price outlook, and you operate in 3 different regions. So the price realization picture in this quarter as it is sustaining for you in this quarter.
So I just told you about India. So if you look at Europe, I think in Netherlands in Q1, our realizations were about 70 euros per ton higher than Q4. And next quarter will be about 10 euros per ton higher. So effectively, you've had about 80 euros per ton increase in realizations over 2 quarters. In the UK, if you look at last quarter, we were 90 pounds per ton higher than the previous quarter, because in UK, there were some specific trade actions which the UK government took, which had an impact on prices.
Right. Also, many expansionary projects are on the anvil and many are really at the moment underway. So, Mr. Narendran, what are the debt and leverage levels that you are comfortable with, and what have you ended the quarter with?
So the net debt to equity is, we are forecasting it to be in the 2.3 to 2.5 range. We are at 2.3 already, and we'll be at that level. And I think we are comfortable that internal cash that we generate is good enough to take care of all the capex that we have planned.
And the most recent expansionary projects, if you can take us through that, there are many that have been announced recently.
No, this financial year we have a pretty clean year because last year we had a blast furnace relining in Jamshedpur, and hence we lost production in Jamshedpur. In the next financial year, we have a blast furnace relining again in another blast furnace in Jamshedpur. So we lose some volumes there. But this year is a clean year. That's why this year we expect volumes to be about 2 million tons higher than the previous year. We also have a new plant which is up in Ludhiana. So our expansion will now focus on 2 things. One is in India, Nilachal, of course, which we've just announced. Plus, we continue to expand in our downstream businesses. We are doubling our tin plate capacity. We are investing in wires. We are growing our tubes business. We've acquired some of our JV partners, their share in businesses. So a lot of consolidation and streamlining of our value chain so that we have full control over it is going on.
You spoke about the downstream projects, and downstream projects generally escalate the margin. It's a higher margin business that really kicks in. So, Mr. Narendran, which quarter, which financial year you will see the downstream operations really kicking in terms of better profitability?
So rather than give you a specific guidance, I think let me explain it this way. We feel that downstream businesses get us closer to our customers. We feel that it helps us differentiate through the quality of products and services that we can deliver. It also helps us insulate ourselves from rising raw material costs because 2030 onwards, our iron ore costs will also change. So we believe that the value capture opportunity lies more in midstream and downstream than in upstream. And that's why while we will have the optionality to build upstream, we will have a better balance between downstream growth and upstream growth going forward. In some sense, the stickiness of our margins is reflective of the fact that we have a fairly strong downstream presence and a very good franchise with products like Tata Tiscon, Tata Steelium, Tata Astrum, etc. So that's why in India we are consistently able to deliver good numbers irrespective of whether the steel price is going up or going down.
Right, and my final question to you, of course, supply chain constraints and escalation in the raw material costs because of the war situation has been impacting the margins, eroding away a lot of your profits. Can you give us a picture on how much is owed coming in from the supply chain constraints for this quarter and the guidance for Q2?
So, Nisha, it has had an impact on cost for sure. It has not impacted production because we've been able to find alternate sources for critical inputs we were getting from the Middle East. But it has had an impact on cost. So we import a lot of limestone for India from the Middle East. We are now diversifying sources to other geographies. We buy a lot of pyroxenite from the Middle East. Again, we are looking at other sources. So we made sure that our plants run. I think in the early part of the quarter, we had some problems in our downstream facilities because propane was not available or gas supplies were not available, LNG was not available, etc. LPG was not available, etc. So I think it has had a marginal impact on production. It has had a material impact on costs. So overall, at Tata Steel level, it has had an impact of 10 million pounds in UK, 20 million euros in Netherlands, and about 800 crores in India. That's been the impact in one quarter. And we expect it to have a similar impact in Q2 because we don't see any respite in what's happening. Largely because of rising freight costs, rising insurance costs, rising gas prices, particularly for Europe, and rising costs of some of the consumables which you get from there.
All right, TV Narendran, always a pleasure chatting with you. Thank you so much and all the best for this quarter as well. So with that, I hand it over to you, Varsha. Of course, looks like the market is on steroid. It's gaining momentum. Tata Steel has gained very handsomely in the last few minutes of trade. But 800 crore rupees of cost escalation in every quarter because of the supply chain constraints owing to the war. That is the big headline coming in, which will sustain even in Q2.
Absolutely. Well, thank you so much, Nisha, for joining in. With that, let's also invite, Gaurang Shah, who's Senior Vice President at Geojit Financial. Gaurang, you heard the management of Tata Steel. Just wanted to understand your view and how do you read the numbers?
Hi, Varsha. Thank you so much for having me on your show. Good afternoon to all your viewers, to you and your team. A small disclosure, which is mandatory. All recommendations that I'll be sharing with you on your show, they're part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So yes, the verbatim was quite positive in terms of the outlook of the company and the growth going forward, as your colleague Nisha was in conversation with the management. As a disclosure, we do maintain a positive stance on Tata Steel, and I think the new capacities and new capabilities that will come on stream will definitely add to positivities. Demand seems to be extremely robust, is what we understand. The only problem was the constraints in terms of the geopolitical situation and the raw material input cost, which could be taken care of as we go into the next couple of quarters.
Understood. Well, moving on, RPG Life Sciences is focused on the back of course, Q1 numbers and, on the API business as well. But let's bring in Ashok Nair, who is Managing Director at RPG Life Sciences, to speak more about it. Mr. Nair, welcome at NDTV Profit. Pleasure to have you. Just wanted to understand before we, speak on Q1 numbers, I want to understand about the API business. So, why separate API business now when the existing integrated model, was already working or was working fine?
First of all, good afternoon and thank you for having me here, Varsha. So for me, it's an exciting news to share with you that we have formed our RPG AP subsidiary as a dedicated API business to bring sharper management focus, dedicated growth capital, and greater strategic flexibility. So allowing us to participate more aggressively in the next phase of growth in the API sector, where India is structurally well positioned given the market trends, while RPG Life Sciences continues to build its formulation business. So it's a complementary. It's not that. So we want to give sharper focus to both of this thing, and that's how this API subsidiary has come into play.
And so, what revenue and EBITDA, are you targeting for RPG Active Pharma over the next 3 to 5 years, and the 700 crore capital will be primarily used for?
Yeah. So if you look over the past 3-4 years, our API business has grown almost by 13 to 14%. And our first quarter has been extremely good with 35% growth. So our ambition to build RPGAP into a scaled and a differentiated API platform with a broader product portfolio, expanding manufacturing capabilities, and a stronger presence across both domestic and international markets. So we intend to pursue a balanced mix of organic growth, capacity expansion, and strategic acquisitions. While we are not sharing our specific financial targets at this stage, but we see a significant runway for growth and value creation over the coming years over the past.
In your opening statement, you mentioned separate growth capital. So given that you are now carving out the API business, could we also see a separate fundraise, a separate investor coming in the API business only?
So, as we said, we have earmarked a commitment capital of 700, and already an PE investment has come into us, and he now holds around 40% stake in our subsidiary, and that's already come. And the 700 crore commitment is for further acquisitions over the period of 12 months. And the first is Actis is the first such step, but our ambition is to build a broader platform over the time.
Right.
And investment is the PE fund, which is we have onboarded.
Right. And on the Actis Generics acquisition, just wanted to understand, how much additional manufacturing capacity does Actis add to the platform, and what revenue contribution do you expect for next 2 to 3 years?
So before that, let me tell you, there were multiple things that excited us about Actis from a value creation lens. Most notable was in the portfolio of complex intermediates and APIs like rivaroxaban and sitagliptin, along with highly capable R&D with a healthy pipeline. So not just these APIs are growing in a big way, but the formulation linked to it is also expected to continue to grow. Now, they also have a strong order book. Plant is running at full capacity, and manufacturing is met with growing demand. So our idea is to expand the reach through LS, RPG LS, and exploit the markets both in India and abroad. Currently, they have around 50 crore of revenue with margins in high teens, early 20s. And as we increase turnover with market expansion, focus capex, and new launches, I think the operating leverage will start to kick in, leading to not just revenue expansion, but a profitability improvement as well. So their revenue is in the range of 50 crore, as I said, and I expect significant runway for growth and value creation over the coming years.
And sir, any more acquisition that we could expect down the line?
Yeah, so as I said, we have committed 700 crores for this. This is the first step, and we are in the process of building a larger platform. So we are actively seeking more acquisitions in this space.
Right, understood. Sir, now, talking about the Q1 numbers, I wanted to understand, the API, which grew almost 36% despite fire incident. How much growth was lost because of the disruption?
So this quarter, we have not lost any growth because of disruption. Because if you see, our plants got restored in last October, and it took another 3 months for us to do the validations and get other further regulatory approvals. So the first quarter is actually a result of that we were back on this, and we grew almost by 35%. And of course, on the plant unit coming back to operations. So for the last time, it was temporarily impacted by the fire last year. And our IF has also grown by 8% in the first quarter. And domestic, of course, you must have seen that we have grown by 15%, almost 1.3 times in the market. And most importantly, we have entered into the top 50th rank in the domestic space, and we are the 5th fastest growing company. So if you look, not only revenues have grown by 16%, our EBITDA has grown by 18% in first quarter, and the EBITDA margin has increased to 24.5 from 24. So overall, it's been a good quarter, and we are outperforming the Indian pharma market.
Right. And sir, you have also highlighted a goal to build immunosuppressant portfolio into 200 crore business. What's the current size of that portfolio today, and what's the timeline for reaching that 200 crore mark?
So currently our immunosuppressant is growing around 13%. Our revenue currently is at 140 crore. Looking the way we are in this particular growth, by FY28 we should be at 200 crores. But our endeavor is to see that how fast we can do that. But 200 crore FY21, yeah. 28.
And so lastly on the financial, just wanted to understand, the sustainable EBITDA margin range for FY27 and beyond, and what kind of revenue growth are you targeting for FY27?
See, our endeavor is to become 1,000 crore in the next 2 years. Our EBITDA has always been at 24.5. We would surely be a shade better than what we are doing today. And for us, the growth is structural, right? So what have you seen in the past? It was a transformative thing in the last 3-4 years. So we would continue to grow. Our ambition is simple: continuing delivery, market-beating growth, strengthen our international presence, scale our API, and build a more future-ready pharmaceutical company.
Thank you, sir. Thank you for joining us and giving us the way forward for RPG Life Science. Well, that was the management, very optimistic on its growth plan. Gaurang, any view on RPG Life Science here at the current valuations?
Hi, Sumit. Good afternoon to you as well. So as I was listening to the verbatim given by the management when you and Varsha were conversing with them, I think one thing stands out absolutely clear is the kind of growth that the management is perceiving in the quarters to come by, and the scale of business that will be expanded because of new product launches. Synergy as far as formulations and API business, I think that's going extremely well. Numbers for the first quarter were better, and we do have a lot of coverage in the entire pharma universe, whether it is API, generics, biosimilar, or CDMOs. We used to cover RPG once point of time, Sumit, but since our target were in place, we have not further created any coverage on RPG Life Science. But let me say this, I think the entire pharma universe, along with healthcare hospitals and diagnostic companies, are poised for a very decent growth in the years to come by. It's a strong company, Sumit, but no specific comments.
Right. Gaurang, I also wanted to ask you since we are talking about API, any other companies that you like when it comes to API and generics?
So let me list down companies that we have, Varsha, for the better understanding of your viewers. So right from Gland Pharma to Glenmark to Aurobindo to Natco to Cipla to Divi's to Dr. Reddy's to Sun Pharma, Cipla, couple of more names are there. In the pharma universe, in the healthcare, we are positive on Apollo, Narayan Rudalaya, Fortis Healthcare, and Max Healthcare, along with Rainbow Children. In the diagnostic side of the world, we are positive on a company called Dr. Lal Path Labs. And my understanding, Varsha, is that when you look at pharma, you should look at it in totality. Look at all these three, because all these three make a combined universe called pharma.
Such.
Understood. Well, moving on, Nucleus Software is one such company which is in focus. Let's pull up that chart as well. The stock is under pressure on the back of Q1 FY27 numbers. The stock is down almost 7%, but we do have Shivam to give us more details on that.
Yeah, before getting on to the financials of the company, let's talk about what the company's business is. So the Nucleus Software Exports provides lending and transaction banking facilities to the global financial companies, and it also offers fintech solutions to more than 200 banks in terms for supporting the retail, corporate and SME finance and automotives too. Now coming to the stock performance, the stock is witnessing a tremendous pressure in today's session, and also has touched a 3-year intraday low on in this session. Also in terms of volumes too, we have seen the volumes increasing by 5 times compared to the average volumes. In terms of Q1 results, those results have for Q1 are weak. In fact, the margins are at lowest levels for the last 20 quarters. In terms of revenue growth, we have also seen a decline for second quarter in a row, and this pressure in margins and revenue growth is due to its degrowth in the India business, which constitutes around 55% of the total business. Also in terms of global business, the Middle East business has continued to grow despite there has been geopolitical uncertainty which is currently prevailing. And in terms of the one-time gains to the company has witnessed around 9.8 crores of gains due to gratuity. In terms of stock taker to the company hasn't performed that well and has given negative returns on multiple period basis.
Well, thank you so much, Shivam, for all the details. Gaurang, a very quick answer on Nucleus Software.
So, Varsha, we don't cover Nucleus Software, so I won't go into specifics.
Understood. Well, thank you so much, Gaurang, for joining in and having a conversation with us. It was a pleasure to have you at NDTV Profit. Thank you so
Varsha.
much. Well, viewers, this is all the time that we have on this edition of Small Cap Buzzers. Stay tuned. Ask Profit Afternoon Edition coming up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। पी मार्क द मस्टर्ड स्पेशलिस्ट सिंस 1933।
सरसों से सरसों।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा। आप अपना देख लो।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
पी मार्क द मस्टर्ड स्पेशलिस्ट सिंस 1933। बरसों से सरसों। कुछ तो बात है इस दिल में।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा। आप अपना देख लो।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire? पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Kia ora from New Zealand, and NDTV Profit is here in New Zealand. We're here to show you what is going to be the outcome of the big free trade agreement that India and New Zealand have signed earlier this year. We're going to take you through large kiwi orchards and understand what exporters are looking at when they export that kiwi to India. We're going to meet with one of the banks that funds a lot of this trade in ANZ. We're also going to be talking to the policy makers responsible for the free trade agreement. Come along with us as NDTV Profit takes you through New Zealand, takes you from these geothermal springs around us to all the different parts of the country which is going to be affected by the free trade agreement, and how this free trade agreement brings value to you sitting back home in India as well as to the people here in New Zealand. Let's have a look.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world.
Good afternoon, you're watching the afternoon edition of Ask Profit with me, Somit Sarkar. Now, if you look at the markets, firstly, it's up around 95 points for the fifth consecutive trading session. We are seeing this uptrend that has been going around in the Nifty 50, that's the benchmark index. 24,400, we are above that level, which is a crucial resistance that we had seen earlier. And technical analysts believe that if we see a decisive close above this 24,400 level today, then 24,600 is something that we can eye for in the coming days going forward. Nifty Bank Index clearly tracking the benchmark. It's up around 0.3%, up around 200 points. 57,300 is the key level that we are watching around for the Nifty Bank Index. On the sectoral indices, if you look at, is the Nifty IT Index, which is seeing some profit booking coming into trade. And in fact, the AI trade has also reversed in Korean markets, were up around 10-15 odd % in trade today, and hence some profit booking coming in on the Nifty IT Index. Nifty FMCG is also down around 1 odd %. It was one of the top gainers in trade yesterday. So again, some profit booking in this side as well. On the gainer side, if you look at Nifty Auto, that's up close to around 1.8% in trade, followed by Nifty Financial Service. This is because of Bajaj Finance. Bajaj Finance is up 8% after reporting a stellar set of numbers. Nifty Pharma, that's up around 1.25%. Nifty Energy up around 1%, and Nifty PSU Bank Index, that's also up close to around 1% in trade. If you see stock specific action on the FNO side, it's Bajaj Finance and Hyundai Motors which are up more than 8%. In fact, Bajaj Finance is now up 9% in trade, while Hyundai Motors is up around 8.8% in trade. Bajaj FinServ followed by around a strong set of numbers, and again, given the rub-off effect of Bajaj Finance, that's also up 6%. On the losing side, we have Mankind Pharma, Swiggy, Kalyan Jewellers and TCS down anywhere between 3 to 4 odd % in trade. But my colleague Nimit Dixit spoke to Nikhil Ravishankar, who is the CEO of Air New Zealand. This conversation becomes important as Air New Zealand prepares for direct India operations as it seeks to build demand with Air India. Let us listen into that slice of the conversation.
Thank you, Nikhil, for taking the time. Just learned that you're from Bangalore. I'm from Bangalore, so I love that about you already. And you've been part of this FTA since the announcements, the negotiation started. You've been a strong member of the contingent, both from the New Zealand and the India side, I would like to say, when this got signed as well. I want to understand from an aviation and an Air New Zealand perspective, where do you see the value that you can bring in an FTA signed between India and New Zealand? Where do you see the value for your company?
Well, aviation has been one of the most critical enablers of trade between markets, between countries. And so we have quite a central role, I think, to play, particularly in the modern economy. Of course, sea freight still plays, mission critical role, and bulk of trade takes place through that mode of transport. But I think when you think about it through the lens of modern economies and where the world's going, this people-to-people connection, sort of the high-end air freight trade, which typically, is either quite, high value, even produce and goods, but also highly sophisticated produce and goods. And the exchange of ideas that you facilitate in a service or a knowledge economy, all of that's facilitated through aviation. So, we are not only excited about the FTA, but we also understand we have a huge responsibility in trying to help enable us all to unlock the full potential of that free trade agreement.
Let's start off with the queries now. Both our guest, Ruchit Jain, Vice President Equity Technical Research with Wealth Management, Motilal Oswal, while Avinash Gorakshakar, Director Research, Profit Mart Securities are present. First query coming in from Andhra Pradesh. Narayana wants to know, he has 10 shares of GE Vernova TND at bought at a price of 5,105. Should he hold or exit for medium term? Ruchit, any view on this?
Recommend to hold the stock. We have already seen a correction from the recent highs. The stock is quite close to its 200 DMA support, which is around 3,900. So downside seems to be limited, so can continue to hold.
Rajesh from Hyderabad wants to know what would be a good investment from long-term perspective, Welspun Corp or Gland Pharma. Avinash, what would be your view here?
No, I think given the choice of these two companies, it's better that he puts his money in Wellscome Corp. I think the company has been doing pretty well in terms of top line profitability. They've also reduced debt considerably. So, from a medium term perspective, Wellscome Corp could be a better choice from a 12 to 15 months kind of time frame.
Okay, the next query is from Anil Nair from Abu Dhabi. He is holding 261 shares of Premier Explosive, bought at a price of 726. He's been holding this counter for the last 2 years. Should he continue to hold or exit? Avinash, any view on Premier Explosive?
No, I think he can continue to hold. I think recently there was some corporate announcement that this company will be taken over by Apollo Micro. So I think clearly in terms of the integration benefits, Premier Explosive would definitely benefit. So I think it's better that he keeps a time frame of at least a year, year and a half. I think so that he can get the benefit. And definitely the company is also doing well. So continue to hold.
Next query is from Siva from Amravati. He's holding 100 shares of NetWeb Tech, bought at a price of 4,950. Should he hold this counter for the next 3 months, Ruchit?
Yes, can hold on. The stock is good support around 4,050 to 4,100. And we have already seen a dip from the recent highs of 5,200. So keeping a stop loss below 4,050, you can hold your long positions for a probable pullback move towards 4,850 to 4,900.
Right. Next, we have a caller query coming in from Vijayawada. Bindu, you can go ahead and ask your query.
Hello. Good afternoon. I'm holding Cochin Shipyard at the rate of 14.05, 50 shares. So I want to ask the technical analysis for the 6 months time frame.
Okay. For 6 months time frame, Ruchit, any view on Cochin Shipyard?
The stock has been a relative underperformer or is in a corrective phase since last few months. So although price-wise downside seems to be limited, but the stock might continue to show some time-wise correction for next few months. On the lower side, 1300 is the immediate support and 1550 is the immediate resistance. So we expect some consolidation to take place. If you are looking for fresh buying within the defense space itself, then I would recommend to go along with Paras Defense, where the relative chart sectors are quite strong. And if you look at last 1 or 2 months, the buying volumes in the defense space are going more towards the private defense stocks rather than these PSU names. So Paras Defense, I would say, would be preferred over Cochin Shipyard.
Okay, Paras Defense over Cochin Shipyard. The next query is from Shivam from Chennai. It's on HDFC Bank. He's holding 20 shares, bought at a price of 909. Avinash, should he continue to hold this counter or exit?
No, I think if he's got a time frame of say 12 to 15 months, Amit, he can continue to hold. I would believe that from a fundamental perspective, I think it's better to hold, wait for a couple of quarters and then take a fresh trade.
Okay. The next query is from Kiran from Hyderabad. He wants to know whether is it a good time to buy Dixon for the next 6 to 12 months. Ruchit, any view on Dixon?
I think keep a buy and dip approach. We have been witnessing that higher top, higher bottom structure. And on declines, the 13,000 to 13,500 is now become a strong support zone. So again, if you get any kind of dips, then you can look to buy on declines.
The next query is on Vedanta Oil and Gas. The viewer, the viewer hasn't mentioned his name, but he wants to know whether is it a good buy for short term Vedanta Oil and Gas. Ruchit, can you give a technical view given the fact that chart would be limited here?
Yeah, limited chart success, but whatever has been post listing activity, 31 has become an immediate support. So not much data to give any positional view, but for immediate perspective, can keep stop loss below 31 rupees.
Okay. The next one is from Uma from Bangalore. It's on Anantaraj. Any short-term target on this one, Ruchit?
So still need a breakout or a follow-up move above 625. Once the stock surpasses that, then you can expect levels around 650 in the near.
The next query is for you, Avinash. It's from Christopher from Chandigarh. He's holding 3,510 shares of Mamta Machinery, bought at a price of 386. He wants a 5-year view on this counter.
No, I think he can continue to hold, but recent floods have resulted in the plant being shut down for some time. So in the near term, the numbers could be little affected. So if he's got a long-term view, I think stay invested for the next 12 to 18 months. It's got a decent order book, has got a very strong export market for its products. So continue to hold. Long-term prospects appear to be quite good.
Okay. Jai Krishnan from Kerala wants a suggestion of 2 stocks that he could buy for the next 6 months. Ruchit, any stock that look good on charts?
Paytm is looking good. You can go long on Paytm at current levels. Overall, we have seen a good breakout recently. The previous resistance is now acting as a support. So downside there seems to be limited. And Paras Defense, which I recommended during the defense stock query as well. So this is also looking good if you are a positional trader. So both Paytm and Paras Defense can be bought now.
Okay. The next query is from Raj from New Delhi. It's on Equita Small Finance Bank. He's holding 70 shares, bought at a price of 78. Avinash, any view on Equita Small Finance Bank? Should he continue to hold or exit?
I think if he can hold on for the next 12 to 18 months, I think he should hold on. Most of the small finance banks have reported very strong numbers, and we expect this momentum to continue in FY27. So continue to hold, but keep a time frame of 12 to 15 months.
Okay, the next query is from Anjali from Bangalore. It's on MTAR Tech. She has bought few shares at a price of 6,869 rupees. Should she continue to hold this counter or exit? Avinash, any view?
No, I think if she's got a 2-year view, then I think Swamit she can hold on because she's purchased it at a fairly high level. But considering the order book and the kind of exposure they have in the defense and the nuclear power kind of market, I would suggest that long-term prospects are good, but you'll have to keep a time frame of at least 2 years to get a reasonably good risk reward.
The next query is from Gautam from USA. He wants to know the good entry price for SJS Enterprises. Avinash, any view on SJS?
No, I think it operates in a very niche space for the auto component business. So I think if he at all wants to buy it, it's better that he buys it in a staggered manner. Long-term prospects are good, but I think at these valuations, it appears a little pricey. So you could use an SIP approach to accumulate the stock in a gradual manner.
Okay. The next query is from Mahesh from Hyderabad. He wants to know the short-term target on Bharat Electronics. Any view on this, Ruchit?
So we have seen the stock showing a negative reaction post its results during this week. Now immediate support which was there around 400 has been breached. So on higher levels 400 would now become a resistance. 400 to 410 would be the immediate resistance, and major support would now be seen around 360 370 zones. So looking for entry point, then you should review if the stock comes around 370.
Okay. The next query is on from Varun from Coimbatore. He's holding few shares of ITC around 3,200, bought at a price of 356. Avinash, should he continue to hold this counter?
No, I think if he's got a long-term vision, I think around 12 to 18 months only, then he should hold on, because in the short term, we don't see any major, kind of earnings triggers happening. So to that extent, the stock may be a short-term underperformer, but long-term prospects appear to be good.
Okay. The next query is on Anthony wants to know whether can he buy Sagility for the next 5 years. Avinash, any view here?
Yeah, I think if he's got a long-term view, he can definitely add here. It's a well-established, company which operates in the medical services market in the US. Has got a very decent order book, a very good clientele. So yes, longer term, I think he can definitely stay invested.
GAIL has come out with their Q1 numbers. It looks like a very solid set. Street was expecting, I believe, the EBITDA to be close to 2,864 crore, but the company has reported an EBITDA of 6,376 crore. Margins have come in at 16.36%, while the net profit number that stands at close to 4,292 as against street estimates of close to 1,729. So solid beat coming in across all parameters for GAIL India. Now, if you look at the segmental performance here, it seems like the gas marketing business has stood out for GAIL, because the gas marketing EBIT that has jumped from a loss of 151 crore to close to 3,500 crore of profit. So a stellar set of numbers coming in from the gas marketing business and the LPG business. From 144 crore, the EBIT has jumped to 773 crore. And so both of these segments have led to a solid set of numbers coming in for GAIL in the first quarter of FY27. A solid beat on the gas marketing, petrochemical and the LPG division. Avinash, any view on GAIL? The stock looks quite undervalued at this point.
No, exactly, Somit. Numbers have been much better than what the street expected, and very strong earnings beat, both on the operational EBITDA as well as on the EBIT and profit after tax side. So I think the stock should get re-rated. We'll have the conference call soon. So I think we'll get a fair amount of idea what kind of growth outlook the management shares for the coming 2 to 3 quarters for this financial year. but definitely one can look at it from a long-term perspective.
Okay. The next query is coming in. The next query is on NTPC. E. Venkatraman, the senior citizen, he wants to know whether should he buy NTPC from long-term perspective. Avinash, any view here?
No, I think NTPC has been a slight underperformer, and I think if the investor can hold on for the next 2 years, then only I think he should think of investing here, because in the very near term, I don't think the stock will possibly get re-rated from the current level. So prefer a hold here, fresh buying maybe at lower levels.
The next query is on Maruti Suzuki. For any short-term targets on this one, Ruchit?
Auto as a space has been doing well. Maruti has seen a strong consolidation over the last few months, and immediate resistance is around 14,600. So 14,600 is the level to watch out for. If that breakout is there, then you can expect an up move towards 15,200.
Okay. The next one is from Madan from Hyderabad. He's holding 500 shares of Axis Bank. Any view on this counter for the 6 months perspective?
So it has been a relative underperformer within the private banking space. So if it can get any kind of pullback move towards 1280, 1300, I think it should face resistance there also. So it doesn't seem much positive. Comparatively within the private sector banks, I think ICICI stands out.
Okay, Arun from Hyderabad is holding 90 shares of J&K Bank. He wants to know what at a price of 186. He wants to know whether should he continue to hold this for long term. Avinash, any view on J&K Bank here?
Yeah, I think Somit, he can hold for long term, but one needs to understand that Q1 numbers were quite disappointing. And despite the fact that profit growth was not as good as what the street expected, I think if one can hold on for the next 12 to 15 months, one could definitely get a reasonably good risk reward. So continue to hold. Keep a time frame of 12 to 15 months.
Okay. We start with our rapid fire segment now. Now Ruchit and Avinash would request you to keep your answers short here. Shankar from Bangalore is holding 320 shares of Tenneco Clean, bought at a price of 580. Should he average or continue to hold on this, Avinash?
Yeah, I think he should average and take a 12 to 15 month view.
The next query is for you, Ruchit. It's on Lloyd's Engineering. The viewer is holding around 1100 shares, bought at a price of 88 a month ago. Should he continue to hold or exit?
Continue to hold.
Okay. Ruchit, the next query is for you again. It's from Koteshwar from Amravati, RVNL. He's holding 1000 shares. Should he continue to hold or exit?
Trend is not positive, but these are not the levels to exit. So wait for pullback move to make decisions.
The next query is for you, Avinash. It's on Gabriel India. Mohan from Mysore is holding 12 shares, bought at a price of 1230. Should he continue to hold this counter for long term?
Yeah, I think he should continue to hold.
The next query is for you again, Avinash. It's from Sairam. He's holding few shares of Coal India and DLF. Should he continue to hold these counters for long term?
Yeah, I think both counters, GAIL as well as Coal India, can be held on for the next 12 to 18 months.
The next query is on Tube Investments for you, Avinash. Vasant from Chennai is holding 148 shares, bought at a price of 2,900. Should he continue to hold or should he buy more to average? Any view?
No, I think he can average if he can stay invested for the next 1.5 years. It's a well-managed company from the Murugappa Group. Definitely hold on.
The next query is for you, Ruchit. It's on Voltam Transformers. Bharat from Andhra Pradesh is holding 50 shares, bought at a price of 9,930. Any targets on this counter that you could give?
11,000 could be the resistance or should be kept as a target, and now 9,000 is the support.
The next query is for you, Avinash. It's from Sriram from Vishakhapatnam. He's holding 1,800 shares of NTPC Green, bought at a price of 104. Should he continue to hold this counter for long term?
Yeah, I think he should continue to hold for the next 12 to 18 months. I think company is a subsidiary of NTPC, and I think within the renewable space, it's a well-established player. So continue to hold.
The next query is for you, Ruchit. It's on BSE. Ram Kumar wants to know whether is it a good time to buy this counter.
Yes, can buy at current level.
The next query is for you again, Ruchit. It's on Minda Corp. The viewer is holding few shares, bought at a price of 660. Should he hold or sell?
Continue to hold.
The next query is for you, Avinash. Roshni from Bangalore wants to know whether should she buy more of Suzlon or Inox Wind.
I think Inox can be a better choice, considering that we've seen a very steep depreciation, and I think the company recently got a 1600 crore order also. So I think we should definitely look at Inox Wind at these levels.
The next query is for you, Avinash. It's on Vedanta Iron and Steel. Varun wants to know whether should he buy this counter at current price.
Yeah, I think if he can stay invested for the next 12 to 18 months, he can definitely accumulate it in a staggered manner.
The next query is for you, Avinash, again. Ishwar from Kolkata had recently applied for Indo MIM IPO and he has been allotted shares. Should he continue to hold this counter or exit?
No, I think he should continue to hold.
The next query is for you, Ruchit. It's on Reliance Industries. Raman from Chennai is holding 200 shares of Reliance bought at a price of 1,376. Should he hold or exit this counter?
Should hold at current level.
The next query is for you, Ruchit. It's from Satyan. He's holding few shares of Delivery bought at a price of 510. Any medium-term target should he continue to hold?
Can hold with stop loss below 460.
The next query is for you, Avinash. It's on JSW Steel. Aryansh from Hyderabad has around 1,000 shares of JSW Steel bought at a price of 1,280. Should he hold or exit?
I think continue to hold.
Okay. The next query is on M&M Finance and it's for you, Ruchit. Ashwini from Chennai is holding 271 shares bought at a price of 375.37. Any short-term target on this counter?
Keep stop loss below 355 and hold for potential targets around 425.
Well, that was the last query on our segment. Well, thank you, Avinash. Thank you, Ruchit, for joining us. And we have managed to solve nearly 101 queries in the morning session and in the afternoon session of Ask Profit. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे लाइफ में स्क्रैचेस तो आएंगे गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा आप अपना देख लो
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में
For someone who's born and brought up in the US, is a developmental economist, what are you doing in the space of coffee?
Back when I was in Bangalore as a kid, I remembered distinctly later in my life, remembered we would do these holidays where we would visit these plantations. On a personal level, felt very smitten, I guess, by specialty coffee. And I kind of asked myself, how is a cup of coffee selling, a black coffee selling for $12?
Why would this conversation even enter the picture when you're living your life in the US? You have a very secure career going on.
Yeah.
Right? You work with very large firms.
Not a doctor, not an engineer, kind of, failure on all fronts, I guess, in that way. I learned how to roast coffee. I just worked for free for this roastery in Brooklyn, and I kind of
So you became a barista. You are priced also very, very premium. The fact is that it's an indulgence for the average Indian to even look at your store.
We are not trying to appeal to all audiences at the same time. Trying to appeal to everybody doesn't really ensure you appeal to anybody.
What if your gut was affecting more than just your digestion, your mood, your sleep, even your immunity?
The gut-brain connection is no myth, it's a living reality.
This week on NDTV Lifeline, discover how your gut influences your mind, why bloating and stress are often connected, and the simple habits that can transform your health. Only on NDTV Profit.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। fire? For someone who's born and brought up in the US, is a developmental economist, what are you doing in the space of coffee?
Back when I was in Bangalore as a kid, I remembered distinctly later in my life, remembered we would do these holidays where we would visit these plantations. On a personal level, felt very smitten, I guess, by specialty coffee. And I kind of asked myself, how is a cup of coffee selling, a black coffee selling for $12?
Hi, thanks so much for joining in. Happy Friday to you. And it's actually looking like a decent end to the trading week. We're coming to you live from the NDTV Profit Suzlon studio. My name is Alex Matthew. With me is Mahima Vachajani. And this is India Market Close. Let's pull up the benchmark Nifty 50. We're up and about. And we're off the high point of the day, but we're still trading above that 24,400 mark.
Fingers crossed.
For the longest time. That level has been quite the resistance, quite the hurdle. So holding above that is a good sign. However, of course, that resistance has now shifted upwards to 24,500 and subsequently 600 as well. You've actually seen quite a bit of action in the large cap names, and in fact, some of those names have distinct storylines attached to them. So pull up the heat map for the Nifty 50, and right on top you will see the stock of the day, which is now up 9%. When was the last time this happened for Bajaj Finance? Do you know?
For a Nifty 50 company, in fact, right? We've seen up to 7% in this earnings season, either up or down, but 9% is something that we've never seen on Nifty 50, and Bajaj Finserv is also following that mark.
Yeah,
both the Bajaj Twins, understandably, doing very well. M&M also good gains throughout the day, and that's been
strong
maintained.
Commentary coming through from the management, and you heard Anish Shah speak to NDTV Profits Neeraj Shah just a short while back, maybe earlier this morning, and he seemed quite confident about the lineup of products that they've got for the rest of the financial year in the automotive space. And also tractors, the sales have not been as bad, or the performance has not been as bad as anticipated, and the path ahead therefore for the full year does not look terrible. It's up as much as 4%. Adani Ports, a little bit of a comeback from the selling that it witnessed after the earnings, and so it's up about 2%. Sun Pharma, of course, along with the rest of the on the earnings reacting, right? It's up about 2% ahead of the earnings, right? And the automotive pack as a whole is gaining. It's building on those gains from yesterday as well. What is not working is the IT pack, but it must also be said that the IT pack as a whole has come off from the low point of the day. TCS is the worst performer, but at one point of time you had the whole host of IT stocks right here. So pull up the intraday chart for the Nifty IT and you'll see what I'm talking about. At one point of time it was down 3%. That was the gap down that it saw. It is now 1.5% lower. So some of that selling pressure has dissipated.
Has come off, at least for now, is what we're seeing. And when we were speaking to Gautam Shah, he did suggest that from here on, at least a 12 to 13% up move can be expected on the IT index, and certain pockets in the mid cap and the small cap space where there is overvaluation, but still there is upside that you can see. But let's also try to pull up the broad end of spectrum, because that's continued to outperform the benchmarks. The mid cap 150 is now almost at the day's high point, if not exactly at the day's high point, but still gains of about 0.5%, and the small cap 250 is even doing better at that 0.6% mark, slightly off from the day's high point, but still holding up is what we are seeing. The advanced decline ratio, if we can try to see that, interesting one, because the gap has narrowed though, but still in the favors of the bull, marginally, very marginally. I think the BSE 500, because yet another day, it's very earning specific even on the BSE 500. You have stocks that are reacting just on the back of numbers, and both the Bajaj Twins on that map as well.
Sun Pharma numbers coming through, and from what I can see, I think the net profit number is more or less in line with expectations, about 2,900 crore rupees. It's actually fallen. And you'll have to read through the fine print as well. 2,895 crore rupees versus an estimate of 2,974. So it's not a big miss. 15,300 crore rupees in the way of revenues versus estimates of 15,500 crore or thereabouts. So more or less in line. This initial spate of volatility is something that has become practically par for the course this earnings season, where the initial trades come through, right? The initial jerk, and then there is sanity that prevails, if you can call it that. There you go, 15,300 crore. Just a shade below. You will only say that it's a miss on either end or a beat on the other end if there's a gap of about 5% from the consensus estimates. That's the way that I look at it, and that isn't the case today. It's down at this moment. It's actually come off from 2% higher for the stock at this moment, but 2020 it was trading higher by about 2% before the markets came through.
Right, but I think the EBITDA is surprising because it's a beat both on margin front as well as the numbers, of course, because when I was talking to Varsha about this, she was mentioning that because of the specialty business, the margins could be under pressure, but that's not been the case. So that's possibly some positivity in the stock probably.
Interesting,
because 28.9 versus an estimate of 28.2. So better than what the street was expecting, and the EBITDA number also, if you can try to pull that up, because it's come in at that 4,400, slightly better. I mean, it's not like a huge margin that we've seen versus estimate, but most certainly a better number as compared to where revenue and PAT stand.
I want to pull up the slightly longer term charts for Sun Pharmaceuticals while we're at it, while we should get Varsha on to talk about it. This is the intraday. Is this the intraday? Okay, so pull up the... Okay, so there you go. So it's actually gained quite substantially from the low point at the end of April and towards the start of May. And so from that perspective, a little money getting taken off the table is really par for the course. But some of those numbers, let's reiterate them for you. The margins are better than anticipated. The profit number is more or less in line with expectations, even though there was a one-time loss that was reported of about 200 crore rupees. Other income coming in at 724 crore rupees. Versus 464 crore rupees. So there's some element of the other income that has come through that has contributed to the bottom line, and from that perspective, maybe to a certain extent, that is also being taken into account. The stock is currently trading in the red, whereas it was up as much as 2% at the start. So let's bring on our experts for the day and find out what they have to say about this in fact, we've got Sudeep Bandyopadhyay. Sudeep, your initial thoughts on the numbers. It seems like it's broadly in line with expectations, but Sun Pharma has gained from the low point of this year. So some money being taken off the table. Are you sanguine on the numbers though that you've heard?
Yeah, numbers look pretty much in line with what was being expected. In fact, the EBITDA figure, I think I saw, and it's better than what was being expected. So by and large, it's pretty much in line. And, we have been positive on Sun Pharma for a very long time. And I think the company has moved into a different orbit post-acquisition of Organon. And with 70-80% of their products being in the branded and patented category. So for them, it's a long-term positive. So we are positive on Sun Pharma. A little bit of profit taking once the numbers have come out is par for the course. Nothing to be worried about.
Right, so that's the view, of course, the fundamental one. But Sachin, Alex was mentioning, since the April lows, it's, recovered quite a bit. And in terms of where the charts go, do you think that from here on, of course, this could be a small jolt, but from here on, do you think the charts are looking attractive enough? Would you think that this could be an opportunity to buy?
Buy on dips will be a very good strategy in this. 1900 and 1850 is a very good support levels, and there are multiple confluences at that area basically. Even we are getting in that zone, that will be actually a good opportunity. On the upside, actually we can see 2500 and 3000 levels on a long-term chart, because on a long-term chart, on a monthly basis, this is a good breakout levels. It is almost 1.5 years of a good breakout.
Good breakout on Sun Pharma where the charts go, but I think Varsha is joining us to give us more details on the numbers. Varsha, per se, largely in line is what we can expect, but the margin pressure that you were talking about has not come through, if I'm not wrong. inline set of numbers, but the negative point I see over here is, US business, which was actually expected to be flat, but now US business is actually down almost 10% year on year. So this is the kind of one negative I would say, but overall, an inline set of numbers I would say. And when it comes to the global innovative medicine sales, which is up almost 13%, which accounts almost 22% of the sales, while the net profit, which is up 20, 25, 22, 27%, is also one of other income is also one of the reason why you are seeing that 27% jump in the net profit. Onto the India formulation business, well, it grew almost 16%, which almost contribute 36% to the total consolidated sales. US formulation was down almost 9.7%, and innovative medicines continued to grow, partially offsetting the decline in the generic business. US sale accounted for approximately 27% of the total consolidated sales, while emerging markets, if you see, was up almost 4.2% and accounted for almost 19% of the consolidated sales, and global innovative medicine sales were up almost 12.8% and accounted for 22% of the overall sale. But that the US business is, I think, one of the reason why you're seeing the stock is down almost 1%, was expected to be flat, came out down almost 10%.
Therefore, just to clarify the point, it's a miss on the bottom line if you adjust for the other income which has spiked in the quarter gone by, right? Over 700 crore rupees compared with just over 400 crore rupees, and the fact that the US business is down 10%. So therefore, it is a miss on the bottom line.
Yes, absolutely. And there was also one-time loss, which has also impacted, but that was also covered up by the other income.
Understood. So, Sudeep, with that caveat, to say that the US business is not doing perhaps as well or is doing worse than anticipated with a decline of 10%, would you like to revise your initial reaction to Sun Pharmaceuticals?
Well, I think it's a little too early. I need to definitely see the internals as well as listen to the management commentary, and I'm sure there will be some cogent explanation for this kind of a miss as far as US revenue is concerned. Also, remember there is this corporate action, which is the organ and acquisition, that is underway and must have created some dissonance or disruption as far as US business is concerned. Let's hear the management commentary. As I'm saying again, I mean, look at it from a long-term perspective. I think it's they are building a very, very strong, robust business. They have a very good track record of consolidating the acquisitions. They have done it for a very long time consistently, and I'm pretty confident they will do the same for Organon as well. So long-term, definitely positive. Nothing to worry about. This specific revenue dip as far as US is concerned.
And a quick view, would it be a buy based on the fundamentals?
Oh, absolutely. And I've been telling that for quite some time. This result, whether it is 10% down or 10% up, I would maintain my view on buying Sun from a 1+ year kind of perspective.
All right. Okay. So that's the view coming in Sun Pharma, but from a 2% plus in the last couple of minutes, we've gone to a negative 1% on Sun Pharma. So 3% downtake is what we're witnessing, and a sharp downtake in the counter. But moving on to the next segment, that's stock of the day, because it has to be Bajaj Finance, right? After the moves that we've seen on this counter, we talked about this while we were opening the show, and to understand as to what's kind of worked this quarter and what is the reason as to why the stock has zoomed so much and whether this kind of growth is sustainable or not, we are now joined by Shivam, who is going to give us all that perspective. Shivam?
Yes, the first reason why the Bajaj Finance stock is seeing a significant upside is the Q1 results that has been pretty strong for the company. In fact, the net interest income has gone up by 23% and PAT has also increased by 27%, which were more than the street estimates. In terms of AUM2, we have seen a growth of around 24%, and which is near to the higher band of the guidance that the company has given for 22 to 23 to 24, 25% of the AUM growth in upcoming period. And also this AUM growth was mainly led by the improvement in the gold loan business, which is now constituting around 4% of the AUM, which has been targeted at around 5% for FY27. So on this front too, the company remains on track. In terms of margins, the company management has stated that the margins has remained steady for Q1, and asset quality too has improved, where we have seen the net NPA is reducing, which is positive for the company. And in terms of loan loss provisions too, we have seen a slight moderation. Also, the brokerages have upgraded the company's rating and targets prices too, and which we'll see later. And in terms of management commentary too, the overall commentary has been positive. In terms of outlook for FY27, the company has stated that they remain optimistic about the credit cost outlook as the AI-led transformation is taking place, and also this will help in improving the customer acquisition and reducing the overall cost of the company. In terms of MSME growth, that is expected to regain momentum by Q3 of FY27, and also the company is aiming to deliver around 25 to 40 basis point of improvement in OPEX to net total income in FY27. Also, however, in terms of margins, the management has stated that there might be a slight moderation of around 10 to 15 basis point in margins, and that is due to the higher funding cost going forward. In terms of brokerage upgrades that I was talking about, the Motilal Oswal has upgraded rating to buy and has increased the target price to 1300 from 1120. In terms of the ICICI Securities, that has also upgraded the rating to buy and has rated the target price to 1250 from 1000. Talking about the valuations of the company, the 1 year forward price to book ratio stands at around 4.93, and while the 5-year average is around 7.5x. So on valuation front too, the stocks looks pretty attractive. So overall, these were the reasons why we are seeing a significant upside in Bajaj Finance today.
Right, Shivam, thank you so much for getting us those details. Sudeep, I'll quickly come to you because, as Shivam was mentioning that the price to book versus the 5-year average is much better right now. But after the run-up that it's seen today, one, and secondly, just from the fact that it's been a continuous growth that Bajaj Finance has seen, do you think that this kind of growth rate is sustainable for the company?
Well, undoubtedly the performance has been outstanding, and as you rightly said, consistently they have been performing and outperforming. So there is absolutely nothing to comment about their performance other than congratulate them. But as far as the valuation is concerned, 5-time book is not cheap, 4.93 or 5, whatever you take. It's not a cheap stock. It is valued very richly. And I would be little, concerned buying at these levels. Yes, there are some brokerage recommendations for buying for a higher price. And yes, it is lower than long-term average. But still, 5-time book for an NBFC, I think, is a very, very rich valuation. So I would not recommend a buy at this level. Amongst the larger NBFCs, I do like Shriram Finance. I think, if I have to buy one of these larger NBFCs, I will probably go to Shriram Finance at this stage.
Okay. All right. Let me get a check on the technicals also very quickly while we're at it. Sachin, what's the view on Bajaj Finance? So the call on the fundamentals is do not buy after 9% up move, right? And that seems pretty reasonable. But of course, the charts can indicate something else with regard to momentum. What would you say?
Right. Actually, today on a weekly and monthly basis, it has given a good breakout after 9 months of consolidation. So it is actually breakout buy levels, and the targets are coming around 1259 and 1414 levels on the upside. On the downside, there is a huge support levels around 1060 and 1040 levels. Any dip toward this level could be a very good buying opportunity, basically.
Okay, all right. So that's the technical view on Bajaj Finance. Let's now try to get in to tell us what he's been hearing from the dealing room chatter that he's picked up. Somit, good afternoon to you. What is it that you're hearing today?
Right, a host of stocks that remain in focus in trade today. Firstly, it's PN Gadgil. Now, the company opened their QIP yesterday. The dealers are indicating that the demand is quite strong for this QIP. In fact, the QIP has been fully subscribed, is what dealing rooms are indicating. Multiple private equity investors and VCCs have subscribed to this QIP. To name a few, Tata AIG, MK Ventures, Polycab's family office and few Singapore-based offices are among the key investors who have put in money in this QIP. When it comes to TIL, that stock has been buzzing in trade. A few days back, it had hit an upper circuit. Then there was a block deal which indicated that Madhu Kela family has bought shares in this company. Now, what dealing rooms are indicating here is that a corporate restructuring plan is underway for TIL. Merger and turnaround plan is in work, and this stock could turn around going forward, is what dealing rooms are indicating. For GE Vernova, TND and Latent View, there are buy flows on the large HNI and the PMS desk. Dealers expect strong Q1 numbers from both the counters. For Alchem Labs, there's a buzz of a new CEO announcement to come in anytime soon. In fact, dealing rooms are indicating that the new CEO announcement would come in along with the results of the company. When it comes to Nazara Tech, dealers indicate that there could be a management change very soon. In fact, there's an EGM on August 10th and the new CEO could be appointed there, and dealing rooms are indicating that either a global guy might come in as a new CEO or an existing shareholder could also be appointed as the CEO of Nazara Tech. And lastly, when it comes to SBI Fund, there are buy flows on the PMS desk. Dealers indicate selling pressure in this counter is largely over. In fact, the stock was in red at the start of the day and right now it's trading nearly 3% higher.
Yeah, that's interesting. SBI Fund in particular. Of course, it's the new kid on the block, relatively speaking. Sudeep, what's the view on this one? Because it's had gains post-listing, SBI Funds, and it joins a few other very large peers. So if you compare it with an HDFC AMC, if you put in ICICI Prudential AMC and Nippon as well, what would be your preferred pick and how would you play the AMC story?
Well, I think if I have to pick one, probably I'll go to the ICICI one. In terms of the revenue, in terms of their earnings from the AUM, they are way ahead of the pack. So definitely them. But I don't find any major challenge with SBI as well. They are undoubtedly the largest. However, their equity AUM being lower comparatively, their earnings is a bit lower compared to even HDFC. But the plans they disclosed during the IPO time and even after that, very clearly they have a roadmap to reach almost that 44, 45 bips, which HDFC does earn. And I think that should be a very good place for them to reach, considering the size they have, and which is significantly bigger compared to most other funds. So yes, from a long-term investor's point of view, even SBI funds does look.
Yeah, all right. So that's the view on SBI funds, but Maruti Suzuki is the other one where we're expecting the earnings anytime now. I mean, all set to post its earnings, but let's try to understand as to what you can expect from the Q1 earnings of Maruti Suzuki, and we have Danish joining by with all those details. Danish?
Maruti Suzuki is expected to post a strong set of revenue this time, and is expected that the company will be reporting at least 38% jump in the overall revenue. But on the other hand, if we talk about the EBITDA, that is also expected to rise by 20%. And if we look at the margin is expected to fall by over 100 BPS, and it is because of the various external factors that we are seeing, especially because of the commodity cycle. And we have seen that over the past few months, especially after the Middle East crisis began, there is a strong pressure on the entire commodity prices, all the raw material prices. So that could impact the overall profitability of the company. And because of this particular reason, we can expect the profit after tax to also come down by at least 12%. But at the same time, the company is expected to post a strong set of revenue this time. On the other hand, what is really aiding this high revenue that is expected in some time is the fact that the company has seen over 29% jump in the volumes, and it has come on the back of at least 35% jump in the SUV sales that the Maruti Maruti has seen over the past few weeks. And we are also seeing that Maruti slowly is increasing its presence in the SUV market, and this is benefiting the company. But on the other hand, because of the margins are expected to go down because of the commodity cycle, then we can expect a certain cooling at that particular level. But what is very interesting to see that what the management commentary really comes out later, and as it is expected to talk about the demand outlook and also the new SUV launches that the company will do. So all in all, if we see, it is going to be kind of strong numbers that the company is expected to come out with, but we can expect certain cooling down in the margin.
Okay, all right. That indeed is a question, right? And to a certain extent, Sudeep, it is a question that a lot of companies will have to face in the second quarter. you have to look at that line item that has to do with inventory gains, because you have a situation where raw materials existed in the books of certain companies, and then the prices went up, and the final product prices have actually gone up before they've had to effectively pass it on. So there is, in certain situations, a margin benefit that has taken place in the first quarter, which will completely devolve in the second quarter. So how do you look at the automotive pack as a whole? They've had pretty robust demand.
You're absolutely right. I think it's that there was no issue as far as Maruti and its demand is concerned, and the numbers speak for themselves as far as the volume is concerned. I think the only challenge is on the margin, and you're absolutely right. We have to see what kind of inventory they were holding and what kind of hit they have taken because of commodity price escalation and input cost escalation in general. I think the management commentary will make that to an extent clear. But more interesting will be their commentary as far as the margins are concerned going forward, particularly Q2 and Q3. Q2 will be a very interesting piece for most companies, because you are 100% right. Some inventory benefit and some inventory-led disadvantage also may be there, because some commodity prices have corrected also sharply in the recent past. So we'll have to wait for the management commentary. But my gut feel is the margins from Q2 onwards will improve only as far as Maruti is concerned.
Okay, all right. So that's the view coming in on Maruti Suzuki. But let's try to get to understand as to what One EMI is also doing in trade right now, also known as Kisht very popularly, and see as to what the stock is doing. Not doing much, but just to take a look at how the overall growth has been like. Plus, the management has also guided for a strong 40% AUM growth. To understand as to how things have shaped up, how things are going to look like going forward. We are now joined by Ranveer Singh, who's the founder and CEO of Kisht, joining us now. A very good afternoon to you, Mr. Singh. Thank you so much for taking out the time. Mahima this side. I think I'll start with your AUM growth guidance, because you've said that you will continue to see that 40% plus growth, and this is after the pause that you've taken in certain geographies. Just want to get a sense that, considering that you will also be maintaining credit cost alongside of this AUM growth, how do you plan to do that?
Thank you, Mahima, first of all, for having me. Truly appreciated being here. Just to emphatically mention this again, we have given a guidance of a growth of 40% plus on AUM. If you look at our last quarter performance, it has been a 13% growth. Simple compounding on this over a period of 4 quarters can easily tell you the numbers, which can be much higher as well. And while doing it, we are also saying that we will keep the gross NPA under 2.25% plus the credit cost will come down by 15%. The reason we are able to deliver this is basically twofold. First and foremost, this relentless focus that we have had on risk, not only now but from the last many quarters, particularly in the last 2 quarters as we were navigating through the second order impact of the West Asia crisis. And the thing that you alluded to, where we also had, paused that disbursement in few geographies which we thought could be high-risk geographies, which of course we have started opening up after having seen the data which is playing out as per our desired outcome. The second, in our business, Mahima, the big thing is we have a large base of customer, 12.25 million customers. A majority of them, almost 75-80% of them, are very, very high-quality customers. Now, we being able to serve them across multiple loans actually creates a degree of stability, not only on the overall business, but the confidence that we have on the growth that we can achieve on the back of that. It gets reflected in the share of repeat customers that we get, and that also contributes to being able to say with some degree of conviction that we're able to achieve the growth. That has actually contributed to being able to live up to what we are.
Okay. Ranveer, hi, Alex here. So I'm just focused on the collection efficiency data that I'm seeing in the first quarter, and it stands pretty high at 96.8. But I've been looking at some of the players in the space, and they've actually managed to push it further, right? They've taken it all the way to 99%. So I'm just wondering whether that is something that you will likely see in the second quarter. What are the signs that you're seeing on the ground?
Yeah, so Alex, as far as the collection efficiency number goes, our collection efficiency number would be improving, but it will be range bound. The reason it would be unfair to compare it with some other institutions who may be delivering 99% because there are different business models, there are different products. So, for example, in my own book, I have a 7.7% of my book is loan against property. Here, the collection efficiency is upwards of 99%. So, I don't think the comparison is a very apple to apple comparison. But I think the broader point that you're making is what is going to be the trend on collection efficiency. As I mentioned, as a response to what Mahima was asking, we will see a 15% reduction in our credit cost. Now, that reduction in the credit cost is more an output variable, but the input variable for that is our collection efficiency number will also deliver the same trend in a manner where they will remain constant or they will have a marginal improvement.
I'm just trying to understand the construct of the book, Ranveer, and loan against property, as you've mentioned, is one of the subcomponents. What is the secured versus unsecured book for you?
Today, as I speak, the secured book is 7.7%, 92.3% is unsecured. 2.5 years back, we started this business. And so if you go to the beginning of FY26, the same share of 7.7 was 2.5%. So we have come a long way. As a percentage, it still shows a small number because, as you know, my book is growing at a very fast pace. For example, last year the growth rate was around 73%. Before that, it was 62%. So, as a proportion of the business, it always comes out as a smaller increase. But yeah, as we speak today, it is around 7.7%, which is 60%.
So, therefore, follow up on that. What is the intention with regard to maybe building out more of the secured book? Obviously, the sweeter margins are in the unsecured book, and that is the model that you've followed. But from the perspective of strong asset quality and management of risk, etc., one would assume that a higher share of secured would benefit you.
Yeah, so Alex, the way we see the way we view the world, going forward is as follows. You are right. The unsecured gives us good growth, but as far as the profitability is concerned, the way we have built the book, both our personal loan and secured book, which is the loan against property, they both are built to deliver a 20% plus ROE. It's not as if the unsecured is giving a higher profitability or it will give a higher profitability in future. The rationale for starting this business, of course, there are diversification benefits, but that was not the strategic rationale. The big strategic rationale for starting this business is I have a large base of customers, and these customers every month take multiple other products. So when we evaluate what are the other products which we are not able to serve their need on, where we will be very competitive in serving the need, loan against property just stands out. Needless to say, this business requires a slightly different business model. You need to have branches. It can't be 100% digital. So it requires, investment in infrastructure and the build-up, which will be far more gradual as against what you see on the unsecured side. So that was the rationale. And we remain completely committed to that objective. So the share of secured will increase. But at least for the next few quarters and next few years, the unsecured will continue to, the numbers will fail any number in comparison to what we will build on the unsecured personal loan side.
Ranveer, if I'm not wrong, you've also guided for nearly 100 basis points reduction in funding cost, 15% decline in credit cost. But just want to get a sense that you want to maintain your ROA above that 5% mark. How is that going to happen?
Yeah, so just let me explain the reduction in the cost of fund. Our expectation is the minimum reduction would be 100 basis point, if not more. The big reason for this is after we got rated as A-, which is by CRISIL in February, all incremental borrowings are happening at 200 to 250 basis points lower than what my average cost of fund otherwise is. And that will take some time to fully play out because I still carry a large book of debt, which will take time before it completely goes off from the book. So we have just put a very conservative estimate saying that, at least 100 basis point increase, improvement in the cost of fund will happen, if not much more. Sorry, what was the second question beyond the cost of fund?
The ROA above 5%, how do you plan to maintain that or maybe increase more than that percentage?
Exactly. So we are committed to delivering 5% ROA plus an ROE of 20% plus. The confidence, or rather the conviction, comes from primarily three reasons. First and foremost, there is improvement in cost of fund which is happening. Second, if anybody who has looked at our risk profile over the last 18, 24 months, there is a secular decline in the risk, and that secular decline in the risk adds immediately to the overall profitability of 5%. But the foremost reason which will contribute to this is the operating leverage, which will kick in as we scale up further. We still carry almost 50% of our total cost, which is fixed or indirect costs. So once you double the book, this cost basically doesn't increase in the same fashion. There will only be some inflationary increase in the cost. So the combination of these three things does contribute significantly to the overall P&L. So much so that not only I will maintain the 5%, but it allows me to use the extra margin, give it to the customer back, and reduce my pricing to the customer, which will further improve my risk.
Yeah, it'll improve your competitiveness as well. Ranveer, thanks so much for taking the time. Pleasure speaking with you, and look forward to our next chat.
Pleasure is all mine. Thank you once again for having me here.
Our pleasure entirely. Sudeep, if you were listening into the conversation, what did you think? One, it is up as much as 86% from listing, right? So tremendous gains. The question is, if you have not bought yet, is this the counter to get into in that space? Because it's a largely unsecured book, but they're reaping the benefits of their risk strategy, right? You also had Satin Credit Care with reported numbers. The numbers seem to be okay, but the stock is taken a little bit of a battering today, down 6% or thereabouts. And you have seen signs that a few of the players in the unsecured space have turned a corner on asset quality.
I agree with you, Alex. I think as far as unsecured loans are concerned, things are significantly better compared to where it was a few quarters back. And the improvement is benefiting all these players like, KIST and Satin and pretty much the entire microfinance industry. But having said that, I think, all these guys, even KIST gentleman was mentioning that they have been trying to pivot at least a part of their book towards secured, which is a right strategy, which is a good strategy, and the entire industry is working on that strategy. Now, the only challenge as far as this strategy is concerned, that the returns will come down and the return ratios will start looking different on an unsecured loan, because you are taking incremental risk, your returns expectations and your returns are higher. So when they pivot the book towards secured, I think things will start looking differently on the return front. Now, there is fundamentally nothing wrong with that, and I think that is the way forward. With what happened with unsecured books over the last 2-3 years, I think people have learned their lesson, and the pivot definitely is towards secured loan. We'll have to wait and watch how these companies navigate this transition. But as far as One EMI Tech or KISS is concerned, I think the valuation at this stage is very, very kind of full, I would say. And
challenging,
I don't think I will recommend it buy.
Yeah, that's fair. On that note, Sudeep, Sachin, thanks so much for taking the time. Pleasure speaking with you as always. I want to draw your attention to an update on a story that my colleague Shrimi had broken yesterday, and this is part of what she had told you exclusively yesterday. The National Stock Exchange has gotten SEBI in principle approval for a settlement of past lapses in the co-location case. This was a major overhang for the company. That settlement proposal involves a payment of 1,491 crore rupees to the SEBI. It clears a key regulatory hurdle ahead of that NSE IPO. And that settlement covers the co-location and the dark fiber related regulatory cases. NSE had faced regulatory action over governance lapses and controls, and that co-location case centered around preferential access that was provided, or allegations that were made of preferential access for some brokers. That SEBI scrutiny focused on fair and equal market access concerns, and the NSE says that the settlement remains subject to final regulatory conditions. The settlement is expected to boost investor confidence as well, and that co-location settlement that is paid of about 1,500 crore rupees is the highest ever in Indian capital market history. So the next thing to watch out for is the final approval coming through for the IPO of NSE. Certainly one of the most watched for IPOs in the current year. Now, we have to slip in a very quick break for stock-specific action. On the other side, we will be in conversation with Vinay Rajani as well as Neeraj Diwan. We'll join them on the other side of this break. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे लाइफ में स्क्रैचेस तो आएंगे, गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉल मार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों, कुछ तो बात है इस दिल में।
For someone who's born and brought up in the US, is a developmental economist, what are you doing in the space of coffee?
Back when I was in Bangalore as a kid, I remembered distinctly later in my life, remembered we would do these holidays where we would visit these plantations. On a personal level, felt very smitten, I guess, by specialty coffee. And I kind of asked myself, how is a cup of coffee selling, a black coffee selling for $12?
Why would this conversation even enter the picture when you're living your life in the US? You have a very secure career going on.
Yeah.
Right? You work with very large firms.
Not a doctor, not an engineer, kind of, failure on all fronts, I guess, in that way. I learned how to roast coffee. I just worked for free for this roastery in Brooklyn, and I kind of
So you became a barista. You are priced also very, very premium. The fact is that it's an indulgence for the average Indian to even look at your store.
We are not trying to
Welcome back. You're watching NDTV Profit. This is India Market Close, and you're watching this live from the NDTV Profit Suzlon studio. Joining us on this side of the break is Vinay Rajani, who is Senior Technical and Derivative Analyst at HDFC Securities, as well as Neeraj Diwan, Independent Market Expert. Gentlemen, thanks so much for taking the time, and good afternoon to you. Vinay, I'll come to you first. We're closing out reasonably positive, but we've given up a little bit of ground. Of course, in certain pockets, we're better off than we were earlier on in the session, particularly in the IT pack. So, more positive than negative at the end of the week?
Yeah, definitely it is looking more positive, because obviously in last 6 trading sessions, we have seen a rise of more than 800 points from the swing low of 23,606. And Nifty is looking strong, we can say. Whatever intraday correction was there, it is some of them it is recovered in last 10-15 minutes, so it's a sign So Nifty is closing on a strong note. However, the important resistance of 530 is yet to be taken out. We are waiting for that, but the mid caps are right now performing. The micro cap, the small cap indices are performing. See, broader market are again suggesting that the overall sentiment is improving right now, and now I can see a clear cut breakout of the Nifty next 50 index also. So though the Nifty is still yet to be yet to surpass the crucial resistance, but Nifty next 50 index is looking very strong on the charts, which clearly suggests that the overall sentiment should remain strong. We can do well in the next week, and we are closing on a strong note. And unless we see a level below 24,000, one should have a bullish strategy for the market.
Interesting. Nifty next 50 is seeing a breakout is something that Vinay has just told us, and it'll be interesting to watch out for it. When we spoke to Atul Suri, he had also mentioned the same, that if you want to play the large cap, it's going to be via Nifty next 50.
Yeah, no, that's very, very interesting, right? Because if you look at, and particularly if you look at the constitution of the Nifty next 50, it's fascinating. If you think about the Nifty 50 and the weightage that HDFC Bank and Reliance Industries and ICICI Bank have, so you put 5 stocks together or 6 stocks together and they'll amount to 25-30%. But that's not true for the Nifty next 50. It's much more evenly distributed, and so therefore the weightage and the impact of one stock underperforming or outperforming is not there.
Yeah, absolutely. And I think Vinay will also quickly take your picks for the day if you've got calls for BTST. And I'm guessing it is BTST and not the other way around.
Yeah, so one can do long in Geo Finance. So Geo Finance has given a fresh breakout from the consolidation, and entire NBFC space, the finance space, been doing good, and I think we can choose a long trade from that. So Geo Finance August future I am recommending around 257 one can go long. 250 should be the stop loss, and 270 is the target. This is not a purely BTST call, but for 3 to 4 trading session. The second stock I like is the Polycap. So stock has registered a 10% correction from its all-time high, and now seems to be finding support near its long-term moving average, and again seems to be resuming its uptrend. So I think around 9175 August future can be traded long in Polycap August future. 8700 is a 1 week stop loss, and on the upside I am expecting a position targeted 9900.
All right. Let's head across now to my colleague Parth, because Thermax is one of the stocks that we focused on at the start of trade today. At one point of time, wow, look at that story, right? It's one of the stories of the day, because at one point of time, this stock was down 15%. Take a look at that gap down that opened up. And this because the margins for this company in the first quarter dropped to 3% compared with a double-digit margin in the year-ago quarter. As much as could go wrong for this company in the first quarter did actually go wrong. But it's recovered quite considerably from the low point of the day, because certain commentary came through from the management, both when they spoke to us earlier today and on a conference call that was subsequently done. So it's in positive territory. What are the factors, and can it be laid out in a bull versus bear case study or scenario? Let's go across to Parth to find out. Parth?
Absolutely, Alex, and it has been such an eventful day for the investors of Thermax. The stock first opening at a gap down of 8.5%, seeing lows of almost 16% down, and now coming back in green. Let's start with the first point of the bull versus bear analysis. The order balance of the company have hit a record level of over 14,000 crores, seeing a growth of 23% year on year. But on the other side, the order book showed a very small growth of just 2% year on year, touching 2,800 crores. But let's look at the segment-wise numbers, starting with that industrial infra segment. In that, the company has reported a 91 crore one-time overrun cost, and that has impacted the PBIT of that segment, which reported a loss versus a profit in the same quarter last year. But on the bull side, that 1,200 crore project is completed 74%. So we might not see that similar kind of impact in the coming quarters. Moving on to the next segment, the industrial product segment, where the order book is up 8% year on year. The balances have also shot up 16% to reach over 5,300 crores. But on the other side, the margins have fallen down because of cost concerns and weaker exports. The margins have come down from 8.3% to just 6.1% during the quarter. In the next segment, if we talk about the green solutions business that the company is in, the order booking shot up by almost 150% year on year to reach reached 382 crores. But there's one thing that almost 140 crores were because of a one-time accounting change. So we have to take that into account as well. On the last segment, which the company is in, the chemical business segment, that there as well the margins have gone up from 9.3% to 11.2% year on year, but the order book has fallen down 1% year on year. So they are getting more quality numbers from that, but the orders are not coming in yet. On the last side, the main trigger which caused that recovery, the management has guided that all of the remaining quarters of FY27 will see a revenue run rate of over 3,000 crores. But the execution still remains the key, because we saw in Q1 that they could only report the revenues of 2,300 crores because of a 300 crore deferment that the company saw. So that's the entire bull versus bear case scenario for Thermax. We actually had a chat with the management in the morning as well, and and after that chat we had seen the recovery in Thermax. So please do listen into that bite as well.
Starting Q2 onwards itself, you should see a significant improvement. And I'll share why I'm bullish on the year as a whole. Let me take one by one on some of the areas. First, on revenues, you would see our backlog itself now is more than 14,000 crores. In that 14,000 crores, the portion which is of these areas that we don't like is now less than 400, which means it has come down to less than 10%. And in this particular year, we would want to bring it down to zero. Our legacy projects around FGDs, some of the other government projects are all practically done now. NRL is the last remaining project, which too, we have taken the hit that we had to against that project. And now we have shown previously also, when our revenues cross 3,000 crores, we are able to deliver a good amount of profitability. That will become the norm going forward. We have the backlog to be able to deliver a 3,000 crore plus kind of a revenue number on a continuous basis. And this backlog is more and more profitable. It has quite a few international projects. And as these international projects start to convert into revenue, the profitability jump will also start to show up.
So you heard the management and the recovery, the sharp recovery that we've seen in the counter from a negative 16% to now a positive 2% almost. I don't think I've witnessed that in the last three odd years of my career. But Neeraj, I'll come to you on this one. The way things have transpired throughout the day, con call commentaries, as and when the con call commentary was coming in, the stock saw recovery. And before that, in fact, when we spoke to them, the recovery was underway. What do you make of this? And just from the lens that the power that management commentary has, despite of what the earnings have been like, what would you say on that and your overall view on Thermax?
Yeah, good afternoon. Actually, once the results came, definitely they were disastrous because the margin compression and the way the profits had fallen. But I think the clarification which has come regarding one cost project overrun that has happened, and plus the management is very positive on the next 2-3 quarters of this year. Normally the capital good companies are valued based on the order position and the execution that company can do over the next 12 to 18 months. And there's a clear visibility for Thermax for next 12 to 18 months of good orders which are already there with them, and they are hopeful of doing it at good margins. So I think I will have a constructive view on Thermax. I think capital good companies had corrected earlier before the results. Barring Thermax, we saw correction in other companies also which are related to power, capital good, infrastructure. I think most of them are coming out with good commentaries for the rest of the year. So that is positive, and I think that is the kind of stance I will take for Thermax also.
This though, Neeraj, and the stock is up 2% right now. It's a fantastic story of anybody who had this on their radar and used this as an opportunity, because the stock did gain very substantially in the run-up to the results as well, right? So a lot of people would have had it on their radar and maybe thought it was too expensive. What do you think about that right now? Are there better valued companies in the capital goods space?
I would say that, you compare the good companies, whether it's Cummins, Thermax. So in the capital goods space, stocks are expensive. You're not getting them cheaper like they were maybe last year or March. So after March, we've seen a good recovery in most of these names. So see, I'm positive on the capital goods space, whether it's Siemens, whether it's Thermax, Cummins. These are good companies with good execution capabilities. So I feel that order books are very healthy. Even if you see an infrastructure capital company like L&T, the results may not be that great this quarter, but the management commentary and the management optimism for the rest of the year was very positive. So I think that the whole sector, if someone looking at quality, then you will get them little expensive. And one can even invest at these prices today in the names that I mentioned. I think if you're investing for 12 months to 18 months, you should get decent return. So if you go a little down and see companies which are not of this caliber or the large cap company, you'll get companies which are cheaper also in capital goods space. But I would rather stay with the quality names right now.
All right, so that's the view on Thermax, but let's take a look at Dixon Tech. EBITDA down by about 4%, but revenue has seen a good growth coming in. The stock is recovering. Let's try to pull up the stock and see as to what it's doing right now. EBITDA margins at 3% versus that of 3.8%. We'll also have to kind of understand as to how this is done versus the estimates, but other income pretty high at 528 odd crores. So that PAT line conversion that we're seeing is largely on account of the other income number that we're seeing. The net profit jump of 663 odd crore versus that of 220 odd crore.
I think that the revenue number is ahead of consensus estimates, because from what I can see, 14,000 or thereabouts. So 15,508 is what it's come at. But 14,280, I believe, was the consensus estimate for the revenue target. And the expectation for margin was actually that it would stay compressed. So that's where a little bit of pressure is coming through. So if it's come through at 3%, it is below the range that was expected to be reported of 3.5 to 4%. So that is really what you spotted on the EBITDA number as well, where there is a degrowth on the EBITDA front. There was expected to be a little bit of pressure on the margins, and that seems to have come through. The 463 crore rupees, down as much as 4%. We've got a few numbers, and of course we'll talk about it in more detail, but Neeraj, a quick spot on what you think about Dixon, because after that initial uptick, it's actually once again settled low at 1%. I think the numbers on the EBITDA front are now trickling through, where it's below the expected range of 3.5 to 4%. It's coming at 3%, and that seems to be a little bit of a disappointment, despite the fact that on the top line front, it is better than expected.
Yeah, I would say it's a mixed bag kind of a number, because revenue is definitely more than expected, and margin pressure is there, which earlier we had anticipated some pressure, but it is little more than what we were expecting. So again, it will depend on what management has to say for the rest of the year. That will be important to see now.
Just from the fact that the stock has jumped so much because of the Vivo JV approval, plus there's ECMS also underway, that could be a possible growth lever going forward.
Yeah, the stock is dropping even sharper.
But even sharper, yes, almost a 4% downtick. Wow, did not expect that. But Vinay, a quick view on the charts as well for Dixon Tech.
Yeah, so stock has found resistance on its previous swing high, which was 14,685 made on 16th July. So there is a strong resistance around this level, 14,680. And now the stock has started coming down because of the result. I see the primary trend is still up. On the downside, I see a strong support at 13,200. So that can be looked at as a support. So yes, that is a strong support, but the primary trend of the stock is quite bullish. So it may happen that it can come down for a time being, but at lower level, it will find support and resume its uptrend.
So just if you're looking at the stock and you're wondering what is happening right now, the gain has been quite spectacular for this stock since the announcement of the Vivo IPO. Not Vivo IPO, rather, the Vivo joint venture. The stock is up as much as 15% despite the 4% crack that you're seeing today. So a few things that you need to bear in mind. The revenue seemingly is ahead of estimates. It was expected to come through at about 14,280 crore rupees. It's coming at over 15,000 crore rupees. It's a growth of 20% odd. on a year-on-year basis. The margins were expected to remain under pressure, and they were expected in a range of 3.5 to 4%. The comparable quarter, the margin stood at 3.8%. It has come in at 3%. So it's significantly below the lower end of what was expected to pan out, which is why you're seeing so much pressure on the stock. And the PAT number has come through. You have to bear in mind that there seems to be an other income component of that as well. And so if you account for that, there is a bearing on the stock. But if I were to push you, Neeraj, to talk about the space, the EMS space as a whole, Sirma posted numbers not too long back, and it is one stock that continues to outperform. And the margin of safety here on the earnings front is not very high. It's wafer thin. So if you were to pick someone from the pack right now, what would it be and why?
See, I would rather go for the branded consumer durable space. I think that is where still valuation is attractive. Those are companies with much longer track record. I think there I feel it's better for someone who's looking at safety to invest. See, what is the problem with EMS is that we've seen little bit of guidance mismatch here and there. The stock correct a lot because the margin that they're working on are very thin. And plus, they get the government incentives also. They're part of PLI scheme, so they make money because of that. So what if PLI scheme is not there after a couple of years? At this thin margin with this competition, for a long term, I'm getting little cautious on this space. So I would rather prefer the consumer durable space than the EMS players.
The view on Dixon Tech, I'm just wondering when Keynes Tech earnings are, because it's been gaining since the past couple of days, so it will be interesting to watch out for as to how that counter does. Today also it's up almost 4.5%, but ITC is the other one that could be on a disappointing front today. It is expected to post its earnings post market hours because revenue may fall by around 6-odd%, EBITDA may fall around 14-odd%, and net profit may fall around 11-odd%.
Why
and this
is that though?
Largely on account of one, that this is the entire quarter where the full excise duty will be considered, and on the back of that there is going to be price hikes. So there is going to be a volume drop.
So this is on cigarettes, right?
This is on cigarettes. This is on cigarettes, yes, what I'm talking about. And secondly, for FMCG business, in the past couple of quarters we've seen as to how FMCG businesses tried to maintain the earnings for ITC, but this time the expectation are that it's going to be a steady quarter and not a stellar one, and that's why the overall expectation is going to be that there could be pressure when the numbers come out. Plus the paper business and agri businesses where there's going to be inflationary pressure hitting them hard. So that could put pressure on margins along with the tobacco leaf inflation, which has been on a higher end, could put pressure on the margins as well. So that's the expectation that you can have from ITC earnings.
Okay. Vinay, quickly on the charts for ITC and the rest of the consumption pack, what would you do?
Yeah, so ITC is clearly into a downtrend, but recently in last 2 months we have seen that the stock has found support at 275 two times and bounced back. So that is a double bottom, we can say. So if it were to break that level, then definitely it will resume its primary downtrend. So definitely we should not anticipate a bottom. We should not go against the trend. 275 is the support. If it breaks, then definitely the downside could be deeper.
So that's the view on ITC, but somebody in the newsroom today also asked me कि stock और कितना नीचे जाएगा, but that's a question that we'll have to wait and watch out for. But with that, Neeraj and Vinay, thank you so much for taking out the time and helping us understand all the stocks that we discussed. But let's take a look as to how the markets are closing today. It will be an interesting one to watch out for because this will set a tone for the next week. The Nifty 50 ending well above the 24,300 levels, below the 24,400 levels though, but we've seen a strong resilient week for the benchmarks for sure this week. So above the 24,300 levels, up by about 0.2-odd%. The bank Nifty, however, is closing around 57,200 levels, though it's picked up from the day's low point, but still much below the higher levels that we've seen on the bank Nifty. Let's also try to pull up the Nifty 50 heat map and see as to how the chart is looking like. You have Bajaj Twins topping that chart, still gaining in that range of 6 to 8-odd%, followed by Jio Financials. Couple of days good returns the stock has given. M&M also very strong and steady, up 3%, followed by Tata Motors You also have Shriram Finance on that list. But on the flip side, you have TCS, Infosys, Wipro, some IT names which have recovered from the low point, but still trading with cuts of anywhere between 1.5 to 2.5 odd percent. You also have something like an Eternal, which was expected to kind of be in positive today on the back of Zepto pausing its IPO, but that has not been the case. There's still profit taking coming in on this one, down by about 2.5%. You also have names like Indigo, Tata Consumer, Nestle, so FMCG continues to be under pressure. Let's also pull up the point contribution to understand as to what are the heavyweights that have contributed to for that 24,300 levels. Of course, has to be Bajaj Finance on the top of that chart, followed by M&M, Reliance and Bajaj Finserv. Let's also try to pull up the sectoral heat map and see as to how sectors have done today. You have auto, of course, arguably topping that chart, followed by defense, and you have IT that continues to be under pressure, followed by FMCG and consumption. I'm wondering where realty is, but it's almost flat as we speak. But the advanced decline ratio as well, and then the mid cap 150 and the small cap 250, because it's narrowed in the last 1 hour as well, but still in the favor of the bulls for now. The mid cap 150 closing off from the day's high point, but still closing around 0.4% higher, and the small cap 250, and of course outperforming the benchmarks, has taken a significant hit down, now just up by about 0.3% from that 0.7%. So a small cap 250 has definitely come off significantly from the day's high point. Quickly, the BSE 500 before I wrap up the show. You have a lot of stock specific and earnings action on your screen here. Aptus Value down 6%, Akin, Sapphire, Balaji Amines, etc. City Union Bank continues to be under pressure, but you have Bajaj Finance and Bajaj Finserv, both Nifty 50 stocks on that chart, and something like Quest Corp and Balakrishna also seeing gains of about 6% each. So that's with regards to how markets have closed for Friday, but completely out of time on this edition of India Market Close. But do stay tuned in for more news and updates on the other side.
Co-powered by CoinSwitch.
Good evening, you're watching Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Shreyanti Singh. First up, let's take a look at the top headlines. Bitcoin above 64,000 levels on macro-driven moves. Institutional crypto trading hits record 72% in the first half of calendar year 26. South Korean crypto trading surges amid stock market plunge. SEC ready to act alone if Clarity Act fails, says Chair Paul Atkins. And those are the top crypto headlines at this hour. But with the deadline to file crypto taxes just around the corner, let's also get you some more expert opinion at this hour. Let's hear out some insights coming in from Raj Kapoor, founder, India Blockchain Forum on crypto tax in simple terms.
I like this question always because everybody asks me this question. India didn't ban crypto or anything, but we are living in some sort of a paradox. If you look at it, we have not decided what is crypto. We say it doesn't exist, yet we tax it. But it is taxed, yes. If we make money, we should be taxed, yes. But there are 5 things which I think every one of us should know. We know that there's a 30% flat tax on every gain. It doesn't matter if you held it for a day, 2 days, 5 years. It doesn't make a difference. It doesn't matter what tax bracket you are in. Flat is flat. We, in fact, have the highest crypto tax regime on this planet right now, 30%. The second thing which we should know, 1% TDS on every single transaction. Well, this isn't an extra tax because it's advanced tax and you can claim it back at the time of filing. But actually, it kills liquidity. Traders bleed out in this micro deduction before even they know they've made any money. So they've already paid the 1% tax before they make money. Third, zero loss offsets. This is everybody should know these things because if they're investing in crypto, they should know these things before they actually invest into it. You lose on Bitcoin and you win on Ethereum. Sorry, there's no netting. Every asset lives and dies in its own silo. No other tax regime in India works like this. That's a very brutal thing, but that's how it is. Fourth, there is no carry forward. This year's losses, they die this year. They don't follow you into the next year's return. So, sorry guys, if you made a loss this year. It cannot be offset next year. And the fifth one, which we all should know, there's an 18% GST on exchange fees. Platforms that take commission get an 18% stacked on top, therefore rising the cost of every trade. Now, these are the 5 things you should really know as far as crypto taxation is concerned. We also know that taxation is important, yes, but I think we also need to know that it should not be harsh. We need to bring in more people and liquidity. So we built a tax system for an asset class, and still we don't legally define it. So we are taxing the destination without drawing the map. And if you look at it, by April 2027, India joins the OECD's CARF framework as automatic global data sharing on offshore wallets. That means a Dubai wallet, your Binance account, your invisible holdings, it stops being invisible.
All right, and that's the word coming in as far as crypto tax is concerned. But as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry as a whole. The team is available to provide guidance and help users make informed decisions. And that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hello and welcome to a very special conversation that is about who's calling the shots in India's box office story. And in fact, joining me here is someone who straddles Hollywood, Bollywood and pretty much everything in between as well, to talk about what really lies ahead for the movie business, the popcorn margins, and of course, whether or not cinema is keeping in touch with the youngsters of today. Ajay Bijli, who is the Managing Director of PVR Inox, joins me on this very special conversation. Thank you so much, Ajay, for taking out the time.
Thank you for having me.
You know, there are a bunch of questions around our financials, all of which have very good, you know, whether margins have improved, your costing has come down, you have a lot of capital to be able to allocate, and I'm going to come to all of that. But before that, we are sitting and having this conversation at a time when there is a national discourse around the young and the restless of India, so to say. A generation that is consuming 50-second reels. Do you see them enjoying 3-hour-long cinemas?
Yeah, I mean, that's the dichotomy of how human nature is. I mean, you know, we're all full of contradictions, we're all full of disparate tastes and preferences, we're not straitjacketed. And I'm extremely grateful to not just the youth, but all the demographics who come to our cinemas. We got 150 million people.
Yeah.
Who the content has to stick to them. It's not the length of the content, it's the stickiness of the content.
Okay.
And if you look at, in fact, all the movies, I know Dhurandhar 1, Dhurandhar 2 is talked about the most. But if you look at all the box office biggest hits since time immemorial have been very long films.
Yeah.
Whether it's Lawrence of Arabia, whether it's Gone with the Wind, Avatar 1, 2, 3, Lord of the Rings.
Yeah, all of them. Lord of the
Oppenheimer
Rings.
2 years ago.
Yes.
And now, of course, Odyssey.
Yeah.
So I think it's not the length. It is the can I be immersed in the movie? Can I be engaged in the movie? So the content, if it's engaging, I think then people will stick around for as long as what is needed. If it's not engaging, even 15 seconds is too long.
but you know, at a time when, you know, some of these examples you gave is about, you know, 2 years, 3 years, 4 years. And the one thing I now hear often is the 4-year back generation is not the generation right now.
Yeah.
Are movies keeping in touch with the young people of today, the Gen Zs, their ambitions, their aspirations, what they feel? Or do you see more of that cinema happening?
Well, if you look at the results and the box office collections of India,
Yeah.
that only proves that the filmmakers have their pulse of the market. Because if they didn't, then people wouldn't have come to see the films, and we wouldn't have had box office now bigger than what it was pre-COVID.
Yeah.
So India's recovery has been the best, even in the first half, calendar year, not financial year. Calendar year, 20% growth has been there in India box office.
Yeah.
As opposed to globally, it's only been 14% in UK and US. So obviously the filmmakers, it's like a product. They're making a product, and and the consumer is the youth primarily, but
Yeah.
also, of course, other demographic as well. So the filmmakers are very conscious of the fact that what they're showing and how they're presenting it is connecting with the audiences or not. So what has happened is, I've seen in the last 2-3 years, funny enough, horror as a genre is doing very well.
Yeah.
Then, you know,
Surprisingly, but yes.
and comedy horror as well. So comedy is doing well. Like we had these movies, Welcome to the Jungle and Dhamal 4. They've done very well. I think people want just to have a good time, and even the budgets don't matter, because movies like Obsession, like Backrooms, like Main Vapas Aaunga, Sayyara, 12th Fail. So many movies have proven that it's not the budget that is attracting people. It's the storytelling. Because and the box office hit is not a function of how much it was made for. A box office hit is how much ultimately it ended up collecting at the box office.
I think it's most heartening to know that the art of storytelling can be appreciated by even the present generation. I
Yes,
think, you know, that itself is so heartening.
Absolutely. They're glued to, in fact, this pin drop silence. Even those things about, okay, people are using their mobile phones and all. When a movie is good, there's nobody looking at the mobile phone. You go and watch Odyssey.
And is that reflecting in, and how is that reflecting in terms of numbers? You know, you've got premium pricing when it comes to, films like Odyssey. Is that something that you see having a major impact, and how is that really playing out?
Well, you know, the whole idea of PVR was to not be a one-size-fits-all offering, because you can't be a pan-India player in India if you only make it for a certain demographic.
Yeah.
Of course, there are luxury products and all that, so they have a certain idea. I'm not a luxury product. Our ticket price is 279, average ticket price. So we have offerings which cater to every spending power, for lack of a better word. So for example, we have 100 rupees, 150 rupees cinema solution as well, quality cinema solution. For those people who want to make frequent visits to the cinemas, and of course who for them it's that much is all they can pay, you know, and if you want to go with their family, eat popcorn, Pepsi. And on the other hand, there are people who are very service sensitive and who want to come to a director's cut, they want to go to Insignia. For them, price is not that kind of a deterrent. What is deterrent is quality of the experience. So they want the quality of the experience to be very good, seats to recline, service on seats, a variety of F&B, great sound and projection system. So I think because only 265 of our screens are actually, out of the 1800 roughly, are premium screens. Rest are all mainstream cinema, but neat, clean, tidy. And even those, what we do is that even in smaller towns, there's an aspirational consumer.
Right.
For that, we'll probably have maybe 2 rows or 1 row of recliner at the back. Okay, because there also you find that people say, okay, I want to sit and get a great experience.
Yes.
Or we'll put our own format called PXL, which is in a way a big screen experience as well, like IMAX, but it doesn't have the restrictions of an IMAX. IMAX has got a restriction that only Hollywood films get played, or Indian films, could be regional, could be Hindi, which are shot on IMAX. So we thought we should have another format called PXL, which gives you that 12-meter height screen. So there we also charge a premium.
And in terms of some of these numbers that are coming out, since we are talking finances and the exact financials of the company, the EBITDA is at about, when you say 550 bips, you're talking about 5.5%. Some would say, or in fact analysts would say, is that something that can actually be a sustainable long-term story, or do you see that being a story right now for this particular quarter?
Well, the EBITDA is not 5.5%, it's 15.5%.
Okay.
This quarter, we've ended at that. So it's a 550 bips improvement from last year.
550 bips improvement, that's what I'm saying. Is that sustainable? Is that sustainable?
I think it can only go up from here, because we are really focusing on both the...
you are saying that the improvement in EBITDA margins could be even higher from what it is right now?
Absolutely. I mean, that's all we're working towards, because, we've come out of a situation where, pandemic was there. Then after that, there was a Hollywood strike. The continuity of films was not there.
Yes.
So we are working very hard. Our pre-COVID EBITDA was 18%. So the company is working very, very hard to reach that level by working on our denominator as well as the numerator. So denominator, we're making sure all the cinemas that are coming now, we've opened almost 400 odd screens post the merger, post-COVID. And most of the deals are on minimum guarantees of rental which are low, or rev share. And also on the numerator side, we are working very hard. You must have seen some of our promotions, like, the Tuesday 99 rupee offer. Now just last week, we've started morning show 99 rupees offer, 92 rupees offer. Then first day, first show offer on Friday. Then we've done a front row offer. So we are working on manufacturing footfalls to take our occupancies up as well.
No, that's great. And this reminds me of the offer that used to come when I was, so I'm the millennial generation. There was this 7 rupee ticket that had come out, the morning show. And I remember watching Chicago at that 7 rupee ticket.
So you're the one who brought my budget down.
Yeah. Yes, you're the one who actually gave us a flavor at 7 rupees. Yes.
Actually, that's got another story which I'll tell you for another time. But that was a government restriction. So there was a restriction at that time that 20% of your seating capacity has to be at not more than 5 rupees. And then it incrementally went up to 7 rupees.
Yeah. See, so I was the one who got those seats. But, speaking in terms of, the other thing that really stood out was net cash positive, right? And the one thing that many would want to know is that how will this, capital allocation really take place? Priorities of that allocation of capital.
Well, first of all, I must say that we were very fortunate that we benchmarked post-COVID, not just with cinema companies all over the world, because cinema companies were getting impacted. We benchmarked with retail companies like Tanishq, Kalyan Jewelers, Titan, Zudio. We benchmarked with QSRs. We benchmarked with hospitality groups like, Taj Group. And we realized that they've been sweating the brand for a very long time. We've been sweating the asset by putting seats and carpets and, projection system, sound system. So I said, maybe now time has come where PVR and Inox both, people in various parts of the country will say, okay, I'll put in the money, but I want a PVR. So therefore we went into a FOCO model, which has never been done internationally. We also went into an asset-light model where in both cases, we are earning from the property, but the capital is being put. Majority of the capital in some places, and in some places the entire capital is put by the developer. That helped us in conserving our capital, and therefore, and not compromising on our growth. We still grew by about 120 odd screens every year. Plus a very, very clear focus on costs. Because of the merger that we did, we were able to get huge economies of scale on everything. CapEx, OpEx, a very, very tight eye on that, which helped us in conserving our capital, and therefore we were able to pay our debt off and became net cash positive.
as we speak, I'm told that there is a new PVR being opened in Jabalpur, and that is really taking up your overall numbers. What are we looking at in terms of an expansion story for some of these smaller towns? I know you mentioned that only 265 are the premium ones, like where we are right now, but it's smaller. It's the tier 2, tier 3 India where the real story lies. So, any numbers?
Absolutely. I mean, I made this statement, and everybody sort of said, okay, Mr. Bijli or Ajay, what are you talking about? I think that next 5 years we're looking at about 1,000 screens addition. That will come through tier 3, tier 4, tier 4 also. We have a little criteria that at least 150,000 people should be there in that catchment. That's important.
So by 2031, you're looking at roughly about 2,800 screens. That's broadly what you're looking at. That's what you're working towards.
2030, yeah, absolutely.
Right? Yeah. Okay. And most of this, is it going to come from any particular pockets, any specific geographies?
I think smaller, I've been told not to say smaller towns. I call it growth towns.
Yeah.
Yes. So those growth towns will probably have 60 to 70% will come from there. Muzaffarpur is opening, Jabalpur open today, and then we have Rambagh opening, Barakpur opening. All this is opening this year. A lot of these towns.
So while that expansion is great, I mean, the other side to it, again, just talking because of some of what this conversation is throwing up, is that the more we keep inching towards the smaller towns, tier 2, tier 3, your average ticket size is not going to improve that much. There's going to be a huge expansion story.
Yeah.
But I think the margin story, which I think is equally important.
Well, not necessarily. First of all, the growth, you asked me where the bulk of the growth is going to be. The growth is going to be there for sure. But I also can't ignor the disparate nature and the discerning nature of the urban population. Like if you look at what has happened, so we are also increasing our premiumization of screens as well. So premiumization is happening through retrofitting some of our existing cinemas with recliners, retrofitting them with PXL, IMAX, 4DX, ScreenX, ICE. So these are all premium formats, Lux, Insignia. So it's actually growth is happening on both ends of the spectrum, because I can't also ignore and isolate the urban population or the aspirational population.
Indeed.
So if you look at our positioning, it's as two words, aspirational and affordable. So we are growing on both directions.
Balancing those out is going to be extremely important. Let me now step away from some of these numbers, which do tell and paint that long arc towards what your vision is for the company. As someone who's actually seen cinema grow significantly, consumption of cinema grow significantly in the last 20-25 odd years. How do you see this now panning out going forward in terms of the kind of movies that are being made and in the kind of genres that are being picked up? On one end, you have like this mega budget movies with a lot of VFX led, and then of course you have small budget movies as well. But where do you see that roadmap going from here on?
Well, it's been 36 years now.
Okay.
I think the filmmakers are much more determined than an exhibitor, which is us, to make sure that the movie connects. So they are really working towards scripts. They are looking at what the audiences want, and I think that's not going to change. So I think there's a lot of focus now, because there's also an economic rationale. Of course, the biggest economic rationale is ultimately it's a business. And if you made a movie for X amount, you want the box office to be 2x, right?
Exactly.
But that's not where the window finishes. There is a monetization journey of a content that happens beyond theatrical. So after you played the movie theatrical, then after that it comes the OTT platforms, streaming platforms, satellite.
But with that window shortening, how does that impact? Because now you see that even the latest movies do end up coming on streaming platforms just a couple of weeks, right?
No.
Does that impact?
I need to correct you here.
Okay.
Emphatically.
Okay.
It's 8 weeks.
Okay, it's 8 weeks. Yes, yes.
Yeah.
Oh, yeah.
Because window had shortened.
Yeah.
And that is a huge perception that is going on. And in fact, we're doing a complete campaign now to let people know that it's not 2 weeks, it's 8 weeks.
Yeah.
So the FOMO factor
of course
remains for a long time.
Yeah, because you don't want people to be on the fence thinking that it's going to come on their.
Yeah. Look, there'll always be people who'll say, I want to sit at home.
Yeah.
But we're in a country which has got 1.4 billion people. So when few people meet me in social circles or anywhere, I'm going to wait. I said, don't worry. You see the way you want to watch it. But I've got enough people who also want to watch even a movie like Main Vapas Aaunga. They're restless. They've heard so much about Main Vapas Aaunga. Even I'm restless as a moviegoer. I haven't seen it. I'm not going to wait for it to come to OTT. I'm still asking all the time in my office, when is the next show when I can watch it? So I think we've got enough people, and who still want to watch on the big screen. And storytellers, the economic rationale I was telling you, storytellers now know that theatrical run success is critical for the OTT players, because OTT people are not buying now the movies only based on a trailer and a poster and the precedential sort of reputation of the director, actor and all. They want to see the performance of the movie. So therefore, if you want to show performance, and only then you'll be able to monetize your content in the next window.
Yeah.
Therefore, you have to work on your script. So I'm finding that the filmmakers are really working hard, which is good for everybody.
Yeah.
Everybody in the ecosystem
benefits
from it. So like I said, I'm giving the example of Welcome to Jungle and Dhamal again. It was a good, funny film, and families were coming out and watching it as well. And at the same time, you had serious movies like, Main Wapas Aaunga, Haq, and so many films that came which also connected. So there's so much variety. I'll give you one data point. When Odyssey was releasing, and I saw that we were releasing it in lots of screens.
Yeah.
And I saw, I asked, Anshul, who's sitting there, that listen, tell me, how many movies are releasing today? Because there's something I'm noticing, that a lot of buzz is there. 23 films got released on that day.
Wow.
On one day.
Wow.
So
23.
Yeah. So that's the kind of content. And that's why sleeper hits are also something that we rely on a lot.
Of course.
Because you never know where the next Sanyara or a Maha Avatar, Narsimha will come.
Narsimha was a runaway hit. Yes,
So
indeed.
that's the beauty of having so much supply of content.
You're a movie buff, clearly. How often do you watch a movie?
You have to meet my kids to know that I'm not a movie buff.
Oh, you aren't? Okay, okay.
No, when I really hear about a movie that it's good, then I definitely want to watch. And sometimes I'll watch 2, 3, 4 in a 1 week only.
Okay.
We'll catch up.
There's one data point that I wanted to ask you about, which is that you see a lot of non-Hindi movies doing very well.
Yeah.
We're talking at a time when you have this mega blockbuster movie, Jananayagan, sitting chief minister's movie actually coming in. What is the kind of appetite and uptake for movies that are, that is Tamil cinema or, Telugu cinema being seen by non-language speaking
Incredible
markets?
it is. Incredible. And that is, I think, one positive thing that happened during COVID, because people were watching at home a lot of regional content.
Yeah.
So their appetite for regional content really increased. Some movies are collaborations now. Like, for example, War 2 was a collaboration where you had Hrithik and you have Ram Charan. So, that's like that. Then, of course, this one, Ramayana, is going to be another mega hit where you've got Yash playing Ravan, and then you've got Ranbir, and then Sita's there. So basically, some are collaborations which resonate with the entire country, and some are not necessarily collaborations.
Like proper dub
like
movies.
Kantara, Pushpa 2, Kantara 2, RRR, KGF, and they end up doing very well anyway because they resonate with everybody. Of course, they have to dub it in certain languages, but the storytelling is universal.
Yeah.
So people appreciate the kind of quality of content which is there, the storytelling is there. And the Manjuman Boys last year that came, it did very well. I don't remember. Drishyam 3 has done very well recently. Okay. Even though Hindi Drishyam 3 with Ajay Devgan
didn't take off as much as...
No, it hasn't got released yet.
Okay.
That is coming much later. But still, both Drishyams coexist and do well.
Okay, yeah. So,
and of course, Rajnikant, Kamal Hassan, all their movies do end up doing very well.
Yeah, so there is a lot of appetite for movies from the South, and I think that's really the universal art of storytelling, the universal art of cinema.
Absolutely.
I'm gonna pause right here because we covered a lot of ground, fascinating conversation, and as they say always, that this is the trailer, picture abhi baki hai. There is a lot that is lined up in terms of both the movie and the movie business and exhibitor business as well. Thank you so much, Ajay, for this conversation.
Thanks very much. Thanks.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire? के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire? For someone who's born and brought up in the US, is a developmental economist, what are you doing in the space of coffee?
Back when I was in Bangalore as a kid, I remembered distinctly later in my life, remembered we would do these holidays where we would visit these plantations. On a personal level, felt very smitten, I guess, by specialty coffee. And I kind of asked myself, how is a cup of coffee selling, a black coffee selling for $12?
Why would this conversation even enter the picture when you're living your life in the US? You have a very secure career going on.
Yeah.
Right? You work with very large firms.
Not a doctor, not an engineer, kind of, failure on all fronts, I guess, in that way. I learned how to roast coffee. I just worked for free for this roastery.
Gains from last two sessions put bulls in charge for the week as Nifty ends this weekend with gains of 1.5%. Gains in auto and defense stocks offset losses in the IT sector on Friday. Nifty ends just below 24,400 levels. Crude oil still on track to post a monthly gain of more than 20% as renewed fighting between the US and Iran threaten further disruptions to Middle Eastern energy supplies. Sun Pharma reports inline Q1 revenue and margin meet the street estimates, but Q1 sees one-time loss of 204 crore rupees. The Securities and Exchange Board of India has given its in-principle approval to settle the National Stock Exchange's long-running co-location and dark fiber cases, bringing one of India's biggest market regulation matters closer to closure. After a dull June, E85 adoption picks up pace. Two-wheelers lead the charge as flex fuel vehicles gain traction, signaling early consumer interest and growing acceptance of ethanol-powered mobility in India. Day 10 of logjam in Parliament. Both the houses adjourned till Monday. Opposition MPs continue to question Home Minister Amit Shah's absence from the Parliament. US crackdown on illegal immigrants continues. Trump launches freedom haulers, aims to replace migrant drivers with military veterans. After OpenAI, Anthropic admits Claude AI models breach systems of 3 companies during cybersecurity tests, raising cybersecurity concerns. Hello and welcome. This is Profit 360 on NDTV Profit and I'm Himakshi Bahugna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news. But first up, let's see how the markets have really fared today. So viewers, markets have ended the week on a strong note with the Nifty gaining over 2.5% and bulls firmly in control after a sharp rally in the last 2 sessions. Now the Nifty has closed Friday just below the 24,400 mark, rising over 0.25%, and this has been led by strong gains in the financial stocks. Auto and defense stocks, they've supported the market's advance, helping offset the weakness in the IT pack as well. My colleague Parth is here with a complete market roundup.
So Nifty has ended in green today, gaining over 0.25%. This was mainly led by the Bajaj twins. Bajaj Finance gaining over 8% today, while Bajaj Finserv also gained over 6% for the day. The broader market has outperformed the benchmark with Nifty Midcap 150 and Nifty Small Cap 250 both ending the day in green, almost a similar gain of 0.5%. Midcap gain was led by Balkrishna Industries, that was the top gainer, gaining over 7% today, while on the small cap side, Network Web Technologies and Concord Biotech were the top gainers, gaining over 7% each. On the sectoral side, we saw Nifty Auto being the top gainer for the second day in a row, gaining over 1.5% today, which was led by Ashok Leyland that saw an uptick of over 5%. On the bottom side, we saw Nifty IT snapping its 5-day gaining streak. The sector became the top losing sector for the day, down over 1.5%, led by TCS and Infosys, both of which saw a downtick of almost 2.5% each. Now, if you move on to the weekly picture, then Nifty has ended in green, gaining over 2.5%. The broader market, however, has outperformed the index, with Nifty Mid Cap 150 gaining almost 2% and Nifty Small Cap 250 seeing an uptick of over 1.5% for the week. On the sectoral side, on the weekly side again, Nifty IT was the top gainer, seeing an uptick of over 6.5%, while Nifty India Defence was the only index that ended in red for this week, seeing a downtick of 0.25%. On the monthly side, Nifty has closed in green for the second consecutive month, gaining over 2%, while the broader market has also again underperformed the benchmark. Nifty Mid Cap 150 closing in green for the fourth month in a row, but a small percentage of just 1.5%, and a similar trend was seen in Nifty Small Cap 250 as well, which closed in green for the fourth month in a row as well, seeing an uptick of over 1%. On the sectoral side, Nifty IT was the top gaining sector, gaining over 17%, while Nifty India Defence snapped its 3-month gaining streak and saw a downtick of over 2% for this month.
Thank you so much, Parth, for that complete market roundup. And viewers, we're getting to know that fiscal deficit data is out. Let me just take you through the numbers first. April-June fiscal deficit stands at 18.2% of the financial year 27 target, and it stands at 3.08 lakh crore rupees. And I'm being joined by Madhvi Arora, who's the lead economist at MK Global Financial Services, to break down these numbers for you all. And Madhvi, so what's your first reading of the numbers?
I haven't seen numbers, to be very honest, because I'm on TV with you. But whatever quick understanding that I have of these numbers is that the first quarter, clearly is a story of a low, revenue side, which is basically led by indirect taxes, which is where the lag is actually being visible. On the other hand, if you look at the expenditure side of the center, it is pretty much in line with the budgeted estimates, and we are seeing both capex and revex actually doing pretty decent. Capex largely led by railways and transfers to states, but on the revex side, I think the receipt side, the problem area is pretty much visible. On both direct taxes, the indirect taxes, as well as the breakup of indirect taxes, which is led by GST, and even the non-tax revenue bit also looks to be weak at this point in time.
Absolutely. In fact, I'm just concerned that should markets really be concerned after looking at these numbers here?
No, I don't think markets really care about fiscal deficit on a weekly, monthly basis, because see, fiscal numbers also are very fickle. It's not necessarily right to see the month-on-month fiscal changes. It actually picks up pace more towards second half of the year, where you get more clarity on what's happening. Just by seeing month-on-month data, one doesn't really gauge much out of the policy stance on growth, or policy stance on whether it is contractionary or expansionary, for the macro business cycle per se. So I don't think the market tends to really break it down to the extent that one would be worried. Even though we are looking at the tax revenue looking a bit difficult, especially led by indirect taxes for the center specifically, I don't think that we're really talking about fiscal slippage as such anymore, given the fact that the oil crisis is sort of now getting comfortable around $80-85 per barrel, kind of a Brent average, versus maybe a 9,500 that we were talking about, say, a month or two ago. So I don't think that we are now looking at center fiscal slippage, sitting today. So we're looking at fiscal deficit for the year to be somewhere managing at 4.3%. By obviously our Government of India doing some fiddling around with regard to its spending. It could probably cut down some of the non-core capex and probably even non-core revenue expenditure, and also probably dip into the stabilization fund that they had created in the last 2 years. So I don't think, at least a debt market point of view, there would be any worry on higher issuances or higher bond yields per se. And equity market is very agnostic about monthly fiscal data.
Madhvi, and also if you had to point one key monitorable from the fiscal deficit data, so what would that be?
I think we have to keep watching the center-state divergence that has sort of appeared in the last 2 months or so, or rather for this quarter as a whole, where states have actually done well both on its revenue bit as well as on in spending bit. Well, center on the other hand has largely been a story of spend which is in line with expectations, while the revenue side is looking more challenging. So I think I would watch in terms of how state and center are looking to be a little divergent in their revenue mobilization. And that I think would be the key to watch in the next few months or so. But otherwise, on a broad basis, my sense is that we're not looking at a fiscal slippage as such. There are challenges, of course, if done the excise cut, which could probably get reversed at the margin if oil prices again come off. And also, of course, as I said, the revenue side is challenging on indirect taxes. But overall, I think they would be able to sort of fiddle around with their spending and other avenues to raise money and be able to sort of manage their FD. But I would watch, how states' fiscal perform, because that has become a very important variable from the growth and consumption point of view, especially in terms of how we are playing the rural story in India, the consumption aspect of the rural markets. That I think would be also important to watch out for.
Yes, Madhvi, thank you so much for breaking down those numbers for our viewers there. And viewers, on that note, let's quickly move on. And let's do a quick check on the crude oil and the latest developments from the Middle East as well. So oil prices have edged lower, with Brent crude trading around the $88 per barrel mark, while WTI is hovering near $82 per barrel range. The decline comes as improved tanker movement through key West Asia shipping routes have eased the immediate concerns over supply disruptions. However, the geopolitical backdrop remains tense. Iran's Islamic Revolutionary Guard Corps claims that it has targeted a U.S. military base in Kuwait in response to a recent American strike, while Washington has also announced fresh sanctions targeting Iran's Mahan air support network. So adding another layer to the story, US President Donald Trump is saying that a Hamas disarmament deal has been reached, although a major uncertainties remain over its implementation. And as a result, while crude has really cooled off for now, traders really continue to keep a close watch on the geopolitical developments across the region. And viewers, Sun Pharma has reported an in-line set of first quarter numbers. Net profit rose 27% year-on-year, while revenue came in ahead of the street estimates. Operating margins were also better than expected, although the US formulations business remained under pressure during the quarter. For a closer look at the key numbers, let's go across to my colleague Varsha, who tracks the sector. So Varsha, what do you really make of the numbers?
Inline set of numbers.